morning, guys. So sorry for all the delay. I think traffic and the internet and the iPad. I think everything went bad today. Even the stock markets. Right. So let's try to do the second part of your chapter. Like I told you guys, the first part we covered everything about equity. Now the second part of the chapter that you have, I'll tell you is one, you have debentures, issue and redemption. Then you have preference shares, redemption. Then you have bonus and rights issue. Right? Now, one of a question, if it's expected to come in 10 marks, is would be your debentures chapter, which can be coming for 10 marks. All other topics, if it comes, it is going to be for a 5-mark question. Now we'll try to just do the first part of it, which is easier, and then we'll try to look at the medium part of it a little later. So let's just start. Now remember, an issue of a preference share is done the same way as we do a equity share. A issue of a preference share is done in which way? The same way as we do a equity share. That means when I say preference shares are issued, it means like whatever journal entries we are doing. Debentures were issued, preference shares were issued for par premium discount. Same rule, it's gonna work. Now, what we are supposed to understand in terms of our redemption of a preference share is, now see, is preference shares a capital or a debt? It's a capital. Yesterday only we discussed. A preference share is basically a preference shares basically is a capital again. I told you it's a capital which is having a preference over equity on two things. We said at the time of dissolution, repayment of capital. We didn't say repayment of loan. We told us what? Repayment of capital. Capital means what? Owner's money, no? Right? Repayment of capital is what we are looking at. Now, see here, now there are 2-3 things that you are supposed to understand. I'll tell you the logic on why preference share capital is important and why is it so difficult. See, you are part of a owner's capital. Now, based on it, somebody has given you loan. When you are company making money, should you be giving it back to the guys who have given you loan, or would you be giving it back to would you be giving it back to the owners of capital? If you have extra money, first thing, will you give it back to the loan or will you give it back to the capital guys? Loan guys, right? So that though we are extremely clear, it will be given it to the guys who have given the loan to the company. Now, the moment we are talking of redemption of preference shares, that means we are talking of paying back the owners the money. Now, when we are trying to pay back to the owners of the company, what is more important for me is to ensure that the guys who have given me loan, their rights are protected. This entire redemption of preference shares is only based on that concept. Trying to make sure that the owner's rights, the guys who have given the loan to the company, their rights are protected. Are you clear with this? Right? Now there are 3 ways of doing preference shares redemption. One is based on issuing of new shares for the purpose of repayment of preference shares, or you pay back out of profits. Third one is either a combination of both. So which are the 3 ways? One, out of profits, that is called as reserves. The second one is called as what? By issuing a new capital. Third one is going to be a combination of both, that is some bit from the profit, some bit from the new issue. Are you guys clear till here? Right? Now let's go even further. Now what is going to be a journal entry if you are issuing a share? Let's assume it is issued in one shot, not in parts and pieces. What would be a journal entry? What is the journal entry for issuing shares? Bank account to share application and share application to share capital. This is the journal entry, right? Now when I try to look into it, when I do this, what is happening? You have got money. Now this money I will utilize for payment of preference shares. What is the journal entry for payment of preference shares? Now look into it. Whenever we are talking of payment of preference shares, we are talking of first cancelling the preference shares. Cancelling what? How do you cancel a preference shares? You have to cancel it, means what? Preference shares always has a credit balance. So you will be cancelling by debiting it. Okay, no problem. So you are going to be debiting the preference share capital and you will transfer it to preference shareholders. Then you will pay the money back to the preference shareholders. When you pay back the money to the preference shareholders, what will be the journal entry? Preference shareholders account debited to bank account. So this is typically the three entries that is there, and let us try to build a little bit more on it. First thing, what did I say? You will issue new shares. If issued at par, premium or discount, we know the journal entry, it will be what? Bank to share application to share capital, right? So I can directly write bank to share capital, and if required I can issue it at the securities premium. This is entry number 1. Entry number 2 will be to cancel what? How do you cancel preferences? Preference shares capital to preference share holders. The third one is what? Paying their money back. How do you pay the money back? Preference shareholder account debited to bank account, right? So these are the three entries. Now I want you guys to observe what is happening in the entire share capital, right? Let's assume the balance sheet. You have equity share capital, let's say 1000. Preference share capital, let's say 1000. Right? Now you have to pay this 1000 back. How did you pay? To pay you need cash. So you will first raise capital. So equity share capital becomes 1000. Cash will become 1000. Now you will pay the money. When you pay the money, what will happen? Cash will go. Now I want you to check what was the capital before and after. Before also it was 2000. After also it is 2000. So this is the crux for me in doing the preference shares redemption. Before redemption and after redemption, my capital should always remain the same. Are you clear with it?
Yes.
Now, I'll ask you another question. Look into it. Let's say I have to pay 11,000 back to the preference shareholders. How much I should pay? I am issuing equity shares of 100 each at 10 rupees premium. So what is the issue price? 110. Clear? Tell me how many number of preference shares has to be issued?
100.
How many?
100.
How many number of preference shares have to be issued?
100.
Okay. When I give you something easy and you answer it, it's always wrong. Thumb rule. Whenever we do look into it, we will not take the issue price. We only consider the face value to find out the number. Remember the thumb rule. What are we going to consider? Only the face value. Therefore, what will be the number of equity shares issued? 1,11,000 divided by 100, which is
100.
Is everyone clear with this? Done? So, understood the journal entries? What has to be done? Now, let's look at the scenario 2. What was the scenario 2? Out of the reserves. Now, what are they telling? See here, you have equity share capital, let's say 10,000. You have preference shares capital, let's say 5,000. You have reserves 5,000. You will use the reserves to pay preference shares. You are going to use what? To pay who? Boss, both are which side? Liability side. How can you use a liability to pay another liability? Right? Okay. No. So whenever, what do you mean by reserve? Understand it. When I say reserves, reserves means the previous profits. Whatever previous profits would have happened, that would have been either in cash or they would have invested in some asset. So correspondingly, there will be some investment or an asset worth 5,000, which would be part of the reserves which is invested. Are you clear? Now see the first step that happens. First step, you will sell the investment. You will sell the investment. When you sell the investments, what will happen? You will get cash. So investment gets replaced with cash. Now you will use the cash and pay the preference shares. Right? Understood the second step? Now the third step, what we do, whatever is the face value of the preference shares redeemed. Whatever is what? Face value of the preference shares redeemed. This face value, I will be transferring it to a reserve called as capital redemption reserve. So this reserve will go to which reserve? Now this reserve of CRR can only be utilized for the purpose of issuing bonus shares. That means indirectly it will get converted as capital. Indirectly it will get converted as, what was the capital before redemption? 15. Now after redemption it will be equity share capital 10, CRR 5. CRR is equal to the capital only. So that means capital before redemption also was 15. Understood?
The reserves will be converted to CRR.
Correct. That CRR is a restrictive reserve. You cannot use it for anything else. Are you guys clear? The ones who are attending online, John. Are you guys clear with this?
Yes, sir.
So just understand the steps that we did. What was step 1?
Sell the
Sell
asset.
any investment or an asset. Step 2,
Step 2,
pay back the shareholders. How do you pay back? We have two entries. One is cancellation, then you pay the money. Step 3,
Convert reserves to CRR.
convert reserves to
CRR.
CRR. And when you convert reserves to CRR, what is the rule I told you? It has to be the
Face value.
face value. That's all it is for 5 marks question. So let's try to first do this and then we'll come to the combination. Okay. So I've covered all the journal entries so you guys can look into it later. Now see here. Induja Limited had 5,000, 8% preference shares of 100 each, fully paid up. The company decided to redeem preference shares at par. That means you're going to be redeeming it at what value? 5,000 into 100, 5 lakh. At par by issue of sufficient equity shares of 10 each, fully paid up at par. So how many shares will you issue? 5 lakh divided by 10, 50,000 equity shares. Are you clear with this? So you're going to issue how many shares? 50,000 equity shares of 10 each. Clear? What's the journal entry first one? Bank account to equity share capital 5 lakh, 5 lakh. Then preference share capital to preference shareholders 5 lakh, 5 lakh. Then preference shareholders to bank 5 lakhs and 5 lakh. Easy?
Yes, yes.
I somehow have a very strong feeling today will be a very bad day. The iPad is also giving heart again and again. Yeah?
Yes, yes.
Now see this question. G India Limited had 9,010% preference shares of 10 each, fully paid up. The company decided to redeem this preference shares at par by issue of sufficient number of equity shares of 9 each, fully paid up. How much money you want?
90,000.
9,000 10% preference shares of 10 each. That means 9,000 into 10. What is the total amount?
90,000.
90,000 is the total value of the
Preference share.
preference shares. Now they want to redeem it by issuing shares at what price?
9 rupees.
That means what will be the value? How many number of shares are you issuing?
10,000 shares.
10,000 shares. So what will be the journal entry? First one, bank
account
issue.
debit shares, equity share capital account 90,000.
Done.
That's a 5-mark question, sir.
Yeah.
It becomes 3 in
If I knew what it is gonna come, I would
Sir,
have
it
been.
will be like only this part or full
No, so
section with redemption?
sometimes they will just try to add some portion with your forfeiture and other stuff. Okay, see the next question. The following are the extracts of balance sheet. Share capital 40,000 equity shares of 10 each, fully paid up 4 lakh. 1,000 10% redeemable preference shares of 10 each, 1 lakh. So what is the preference shares value that I have?
1 lakh.
1 lakh. Reserves and surplus, capital reserve 50, security premium 50, general reserve 75, P&L 35. On the 1st January, the company decided to redeem the preferences at par by utilization of reserve. Now just go there and write down only in the utilization of reserve, just write down only revenue reserves will be utilized. Only revenue reserves will be utilized, or we call it as profits available for dividends. Right? Now what does this mean?
Out of the given profit.
So out of all of this profits, which all can I utilize?
Capital reserve.
Capital reserve. Name only saying capital. How can you? I gave you the definition. What? Revenue reserves. That means you can only utilize profit and loss and general reserve. You can only use this. So just remember which all reserves you cannot utilize. You can just make a write down. Revaluation reserves, capital reserve, security premium, you cannot utilize it. Okay. Now yesterday, if you remember one part what we spoke about in the topic of your securities premium, tell me what happens in case of a securities premium. In security premium, we said securities premium can be utilized for 5 reasons.
Fully paid bonus shares.
Fully paid bonus shares, then
Redemption of debentures.
redemption of debentures, then
Buyback of shares.
what is redemption of debentures?
This
It says premium on redemption of preference shares or redemption or debentures. It's not for the redemption. It is for what? Premium on redemption. That means, let's say for an example, if I'm paying back debenture holders a money which or preference shares, a money which is higher than their face value, only for that portion I can utilize the securities premium, not for the entire redemption. Are you guys clear with this? Right? Now see here. So we wrote down all the three: revaluation, securities premium, and this one, right? Now see one by one. Now what were the 4 entries I told you? First is to sell investments. First is to sell investments. Do we have any investments here?
No.
No, nothing given. So we assume that there is enough cash balance available. We will assume what? Enough cash balances. What was the second entry?
Pay,
Cancel the preferences 100%.
Pay back to the shareholders.
Last one. What did I say?
Convert
Because I did
reserves
not
to-
issue the new shares, I am cancelling it using the profits. What I should do? I should be transferring the existing profits to CRR. General Reserve P&L to CRR. See here, you have to give a note why you are not using the other profits. Are you clear? Okay. Now let's look into the combination part. And this is what students generally get confused with. Now thumb rule that we are going to be looking at is very simple. The thumb rule that we are going to be following it is what? That whatever capital was there before redemption, it has to be the same capital after redemption also. That's the thumb rule. If you remember it, you are done with this chapter. Now let's see what they are telling. You have a share capital of 2,90,000. The share capital of the company consists of 50 equity shares of 2.25 lakhs. So equity shares is what? 2,20,000. And preference shares is 65,000. Reserves and surplus comprises of profit only. So that means this is entirely available for the purpose of creating my CRR. Now, in order to facilitate the redemption at a premium of 10%, the company has decided to sell all the investments for 15,000. To sell all the investments for what?
15,000.
What is the investments value?
18,000.
What are they trying to sell for?
15,000.
That means how much loss they are making? That means, now look into it, out of this 48,000, 3,500 becomes a loss. So I am left with 44,500. Okay. Now see the first journal entry. Bank account debit, P&L account debit to investment account. 18,500. This is for the sale of investments. Are you clear?
Yes, sir.
Done. Now next part. To finance part of redemption from the company subject to leaving a bank balance of 12,000. Subject to leaving a bank balance of what? 12,000. Now see here, how much was the preferences that you have?
65,000.
They want you to redeem it at what?
10%.
That means 6,500. That means they want you to pay 500. Okay. You have a cash balance of 31,000. See the question. You have a cash balance of how much? 31,000. And they want you to keep a balance of 12,000. Right? Now I had a balance of 31. I sold investments. I got 15,000. Then I have to keep a balance of 12,000. That means I can utilize out of this one 33. 33,000. 34. 36 minus 3 will be 34. So 34,000 I can utilize from the bank balance. So how much more money I am falling short of? How much?
37,500.
Okay, this is one part. Let's try to look into it. One side I know here I have how much? 36,000, and I know I still require 37,500. Are you clear till here? Now let's go further. To issue they want to issue how much?
50 share. 50
Each minimum equity shares of 50 each to raise the balance of the fund required. You require 37,500. So if you are using 50, how many shares will you issue?
7 years.
750 shares is what I will issue. Clear? So now, what is the journal entry for issuing equity shares? Bank.
Share application amount.
Then
Share
share application. Now, if I have to pay back the preferences,
You have to cancel.
cancel. Now you are paying out of premium. Preference shares capital to premium on redemption. Because I'm paying premium, right? Premium on redemption to preference shareholders. Then preference shareholders to bank. Now, everyone look into it. How do I calculate what has to be transferred to CRR? 65,000 is the preference shares capital and 6,500 is the premium. What is the face value of equity shares issued?
50.
37,500. So always compare face value with the face value of the preference shares redeemed. Always compare what? Face value of equity to the face value of the. How much balance is there?
30.
27.
So you will be creating CRR for 27,500. What did I tell you guys? Before capital and after capital should remain the same. Before it was 65. Now new capital came 37,500. So that means automatically balance should come from the CRR account. Understood?
Yes, sir.
Guys, are you clear? Right. So the journal entry will be here. P&L account to CRR 27,500, 27,500. Then whatever premium I am paying. Now look into it. Let us go back to the reserves account. I had a reserve balance of what? 48,000. In that, loss was what? I had how much? In this, I transferred to reserve how much? So I still have a reserve of how much? I still have a reserve of how much? Correct, no? 17 or 16?
17,000.
Okay. I still have a reserve of 17,000. Now, what you need to do, the security premium that you have paid, the security premium that you have paid, you have paid a security premium of what? You will check whether your profit and loss account has an extra balance. Now I have an extra balance of how much? And I only require how much? So I will write it off. I will write it off. The write off entry CL P&L account to premium on redemption 6,500, 6,500. Understood the entire question?
Yes, sir.
If it's securities premium, instead of P&L it would become securities premium account. Guys, are you clear till here? Okay, now see this question. Okay, see this. C Limited had 3,000 12% preferences of 100 each, fully paid up. The company had to redeem these shares at a premium of 10%. What is the total value you have for redemption? 3,000 into 100, 3 lakh, right? You are redeeming it at what price? That means 3 lakh 30,000 is the correct. Now they are trying to issue how many equity shares?
25.
At par. That means how much are you getting?
2,50,000.
Okay. Now they are issuing how much?
1,000.
1,000 debentures or
100 each.
that means.
1 lakh.
So now let's look into it. What is the journal entry for issue of shares?
Bank account debit.
Bank account to equity share capital.
account, 2,50,000.
2 lakh 50, 2 lakh. What is the journal entry for issuing debentures?
Bank account debit.
Bank account to debentures.
Account,
1 lakh, 1 lakh. Done. Now comes the question. I require how much?
3,30,000.
How much I have? 3 lakh 50. Do I have enough cash?
Yes,
Yes.
sir.
Okay. Do I have to create CRR is the question. Do I have to create CRR is the question.
No, sir.
No. Why you have to? Thank you. Boss, I told you at the beginning, it's only the capital to capital. Debenture is a debt to the company. So out of 3 lakh rupees of face value, I only have face value of equity getting replaced to the extent of what? 2 lakh 50. This is not capital, this is a loan. So you will have to create a CRR to the extent of what? 50,000. Are you clear?
Yes, sir.
Right? Little bit. That's why CA, you just apply, you get the answer. Capital is capital. Right? So see here, P&L account to capital redemption. Now you know why we get 50. Then all the other entries are same. Preference shares capital, premium 3 lakh 30. Preference shareholders to bank. Then you write off your source. Understood? We are done with the chapter of preferences. Any doubt in this?
No, sir.
John, Nisarga, are you guys clear with this? Right? So let's start the next topic called debentures. Right? Now, let's just try to understand how debentures issue is different from the preference shares issue or equity shares issue. When we are talking of a preference shares and equity, right? Now, let us try to understand 3 scenarios. Equity shares, if you are issuing it at par, what is the journal entry? Bank
Debentures.
to share capital. Share application to share capital, same, right? If it's issued at premium, bank bank to share capital to Then if it's issued at discount,
You cannot
You
issue.
cannot issue a discount on
but
it.
the journal entry, if you look into it, it will be bank discount to
Share capital.
correct. Now, the only thing that we are supposed to be looking at in the issue of debentures is whenever debentures are issued, you will also have the terms of redemption at the time of issue only. That means, let's say debentures are issued at par, you are redeeming it at par. That means you took 100 from them. After 5 years, how much are you giving them back? 100. Case number 1. You are issuing it at 100. You are paying him back 110 premium. You are issuing it at 100, paying him back at 90 discount. Now, case number 2. You have issued at 110. You are giving it back 100. You are issued at premium, issued at 110. So, you are issuing it at premium, redeeming it at par. Issued at 110, redeeming it at 110.
Issuing at premium, redeemable at premium.
Then issued at 110, redeeming it at 90.
Issue at premium, redeemable at discount.
Right? Now, same case. Issue can be at discount. You can redeeming it at par, premium or discount. Are you clear? Now, whenever, see here, I don't care about any case. Look into it. Whenever debentures are going to be issued at premium, whenever debentures are going to be redeemed at premium, then we need to create another entry. If debentures are issued at par or discount, redeemed at par, discount, I don't care. Issued at premium, redeemed at par and discount, I still don't care. But if the debentures are issued at par, premium, discount, redeemed at premium, then there will be one additional entry for all the things.
Loss.
Right? Right? What is the journal entry?
Loss on issue.
So I will write an entry as same entry. See, if this was par, this would have been the entry. Now if I am redeeming it at premium, then I will write it as what?
Bank account.
Bank account debit.
To share capital. Debited to securities.
What's the journal entry?
You are asking for redemption or
So whenever I am doing a preference share debentures, remember this. Debentures, your entry of redemption should be recorded at issue itself. So any loss or profit that is gonna happen, you will be recording at what stage? At the issue itself. Now look into it. Let's go one by one. I've given all the journal entries. Debentures are issued at par, redeemable at par. What did I say? It will be same as share capital. So what will be the journal entry? Bank account to debenture application,
Debenture application.
to debentures. Otherwise you can directly write it as what? Bank to debentures. Next one. Debentures issued at discount, redeemable at par or discount. Right? Again it is redeemed at par or discount. So it will be same as equity share entry, that will be bank to debenture application, discount to debentures. Now, debentures issued at premium, redeemable at par. Redeemable at what? That means it is same as equity only. That will be bank account, debenture application to debentures and to security premium. Are you clear? So thumb rule that you have to remember for the exam is, even if it is issued at par, premium or discount, redeemable
at premium.
redeemable at par or discount, the journal entry is same as Same as equity shares. Same as equity shares. Are you clear? Now, see here. Issued at par, redeemable at premium. Now, in this case, I'm going to be writing an entry like this. I'm going to be creating an extra amount like this for every question. So, now I want you guys to look into it. Issued at 100, redeemable at 110. Issued at 110, redeemable at 110. Issued at 90, redeemable at 110. So what are these cases? Issued at par premium discount, redeemable at premium. Now if it was issued at par, what would have been the... If it's issued at par, what would have been the journal entry?
Bank account debit to debenture account.
To?
Debenture.
Now since I am redeeming it at premium, what is the loss?
10 rupees.
So I'll record an entry as loss on redemption to premium on redemption 10. Did you guys understand? Now in this case here, what is the journal entry for security issuing shares at premium?
Bank account debit to debenture.
Bank account debit 110
To debenture account debit.
to debentures 100 to security premium 10. Now I am redeeming it at what price? 110. What is the premium amount?
10.
Right? Always compare your face value with the redemption amount. What is the premium?
10.
So you will write one entry as loss on issue 10
10
to premium on redemption
debenture.
10. Understood?
Yes, sir.
Last case. What is the journal entry for discount?
Discount account.
Bank account 90,
Discount account 10.
10
To
debentures 100.
100.
What are you redeeming it at?
Premium.
Premium. What's the premium?
20.
So I'll be writing as loss on issue to premium on redemption. That's all. 20 pages of your notes is only this. Now just see this question. Now see the journal entry. On application, how much are you getting? 30. So 30 into 4. So bank to debenture application 120, 120. Then on allotment, you are redeeming it at what? How much premium? 110. So the premium amount is what? 10 rupees per share. 10 rupees into 4 lakh. What will be the total premium? 40 lakh rupees. So your journal entries here. Debentures loss on issue 40 to redemption. Are you guys clear with it? Now I want you guys, this is the first part, right? So till here, are you guys clear? Right, just give me 1 second. Right, now I want you guys to look at the second part of it. How would a loss be treated in case of a... Now I have a loss which I have incurred. Now we are going to be doing a matching concept. Now how do we do it? Just look into it. Let's say I am suffering a loss of 5 lakh rupee and debentures have to be redeemed in 5 years. What is the loss I am suffering?
5 lakh.
When do I have to redeem the debentures?
5 years.
After
5 years.
5 years. Now a case like this happens. What I try to do is I will try to make sure this loss of 5 lakh will be written off over the next 5 years. The loss, whatever we passed an entry now, loss on issue of debentures or loss on redemption, I will write it off depending on the period of the debentures. Now in this case, how much was the period of debentures?
5 years.
5 years. So in 5 years, I am going to be redeeming the debenture, redeeming the losses, that is by transferring from P&L. Now 5 lakh is the loss. 5 years, that means per year how much should I write off?
1 lakh.
I have to write off 1 lakh. So your journal entry will become P&L to discount 1 lakh rupee, end of every year you will pass.
From P&L
To loss, every year you're going to be writing it off 1 lakh rupees. Are you clear? This will be done only in case of debentures which will be redeemed only in the 5 years. So let's say if you're redeeming debentures 5 years later, only in those cases we are going to be following this. Are you clear? Guys, are you clear?
Yes.
Now there's another case which you need to understand, is the case of, let's say I have debentures worth 50 lakhs. I've suffered a loss of 5 lakhs. I've suffered a loss of how much money? 5 lakh rupees. Now I am telling you, out of this 50 lakhs worth of debentures, what I will do, every year I will pay back 10 lakhs. In case one, when did I pay back all the money? In the previous question, when did I pay all the money? After 5 years. In this question, when am I paying? Yearly, I am going to be paying 10 lakhs. 10 lakhs if I pay, in 5 years I'll be done with all the money. In this case, what we will do, we'll use a weighted average method for writing off the debentures. Welcome back. So let us complete the other part of your bills of exchange, which is the most important thing of your exam, which is got to do with accommodation bills. Right? Now, the first part, which all the cases we have covered already?
honor of bills.
First, honor of bills, we covered 3 cases, that is holding till maturity, then endorsement, and then the third case was what? Of the discounting of the bill. Then we did again 3 more cases. What happens in case of we having bill dishonored? We came up with noting charges also there. Right? What happened? Is it shared in the group link?
No, sir, one second.
Yeah, then we covered the cases about noting charges. Then we spoke about what do you mean by retirement of a bill and what is about the renewal of a bill, right? Now, let us try to understand how does an accommodation of a bill work. Okay. Now, the thumb rule of accommodation of a bill is, see, in case of a general bill, what did I say your thumb rule is? Already you are assuming it as what? Some sale has been done. But in accommodation bill, what happens is, just understand the story because that is very important for me in terms of getting the story right. Same, we'll go to Rama and our Sita. What happened with our Rama and Sita? Let's try to look into it. In the previous cases, Rama had sold to Sita. Sita did not have money. So Ram drew a bill and Sita accepted the bill. This is what happened in the previous cases. Now in case of an accommodation bill, what happens is Rama would have not sold goods to Sita. In accommodation bill, what will happen? Rama will not sell goods to Sita. Then what will happen in that case? Without even selling the goods, I told you guys at the beginning of the class, what is happening in case of a regular bill? Rama is saying, you have to pay me a certain sum of money on this date, you accept it. Neither they mentioned goods, nor about the sale, nor anything of it. Now, when he went to bank for discounting, bank did not even look at anything. It said, oh, bill is there, they saw your credit potential and gave the money. Using this for the advantage, what Rama decided was, one day Rama did not have money. Rama and Sita were earlier, dealers and customers, right? They got married eventually. Then what happened? Rama kept on seeing every month he was under loss, no money. He understood and told Sita, you know what, I will draw a bill on you, you accept it. She said, sale is not done. He said, don't worry about it, don't worry about it, you just accept the bill, I will take the money. I will go to the bank, discount it, and I will do what? Take the money. Now, on the due date, bank will come and ask whom?
See.
Sita. So Ram said, that entire money, whatever is there, I will give it to you on the due date. This is called as accommodation of a bill. Understood? So, there is no sale done. Without a sale, what is happening? Both of them are trying to accommodate each other's need. Now, good morning Ashish, good morning Monica. Now, this is very important for us in terms of understanding how it works. Look into it. Now, let's say Rama and Sita. Case 1. 10th, let's for the numerical purpose, I'll do everything in the multiples of 9. Let's say 9,000 was the bill. Okay. So, Rama drew a bill of what? 9,000 on Sita. Sita accepted it. Now, Rama has a bill receivable of how much?
9,000.
9,000. Rama took this to the bank. Rama took this to the bank. And in the bank, they gave, let's say, 8550. They gave how much?
5,000.
What is the discount amount?
5,000.
What's the discount amount? 450. Now, 3 months later, this bank will go and ask money whom?
Sita.
Sita will collect money from what?
Ram.
Rama will give 9,000. Sita will collect that money. So Sita will give money to Ram. Sorry, Ram will give money to Sita. Sita will then go and give the money to bank. This is a simpler story. Now we'll try to add little complication. Sita said, you know what? Rama said, give me, I want 9,000. Sita said, why only you want 9,000? I also want 3,000. I also want how much? 3,000. So Rama said, you know what? I will draw 12,000. I will draw how much? 12,000. 3,000 you take it now. 3,000 you will take it now. On the due date, how much will Rama give back to Sita?
9,000.
This one, are you clear?
Yes.
Logically you understood, right?
Yes, sir.
Now the same thing when you put for accounting, why do you get confused there?
Discount.
If you have understood this logically, why are you getting confused with accounting is the question. Now we'll first cover the scenario. After that you have to just understand the case, read the question and say, boss, this is the case, this is how it will go. Because there is no complication in this chapter, right? Now see what happens. Rama, right, drew a bill of how much? 12,000 on R. Sita. Rama now has what?
Bills receivable.
Bills receivable.
12.
How much? 12,000. He went to bank. He got it discounted. He got it what?
Discount.
He got 11,400. He got how much?
11,000.
So how much discount amount?
600.
600, right? So the amount is 12,000. No problem whatsoever. Now, in this 12,000, what is there? Right? Sita wanted how much?
3,000.
3,000. Now, everyone, I want you guys to look into it. Now, Sita wants 3,000. Please understand the calculation that I am doing. For 12,000 rupees, what was the discount amount?
600.
So, Rama got.
11,400.
In this, Sita wants how much?
3,000.
Do the cross multiplication. Ayyo, you. Leave. By the time you guys open your calculator, solve it, right? It is 150. So Rama will only transfer 2850 because he will say, boss, my portion of discount I will bear. Who are you to bear that discount, right? If I have lost 600, that was for 12. That means for 3000, how much you should lose the discount? 150. So when Sita wants 3000, Rama will only be transferring what? 2850. You understood how we calculated this?
Yes, sir.
Everyone, Raj, Monica, Ashish, are you guys clear?
Yes.
Right? Now, on the due date, how much more should Ram transfer?
He has to transfer
Out of 12, he has transferred 3. So, he will transfer the balance.
9,000.
Are you all clear?
Yes, sir.
Right? Now, look into the sequence of journal entries. Entry number 1. Ram drew a bill on Sita and Sita accepts it. Ram drew a bill on Sita and Sita accepts it. What's the journal entry?
Bills receivable account debit in books of account.
Bills receivable account debit to Sita 12,000. 12,000. Now, second one, Ram gets bill discounted. Ram gets bill discounted. What's the journal entry?
Bank account debit.
Yeah. Bank account debit.
Bills, sorry, discount account debit.
Discount account debit.
To
How much did he get? 11,400.
600.
600 to
Bills receivable.
bills receivable 12,000. On the same day, how much did he transfer to Sita?
3,000.
How much did he transfer?
2850.
2850, right? So the journal entry for it, how does it look? Look into it. Sita account debit.
To
Sita account debit. What you transfer to bank is 2850.
to discount 150 to Sita 3,000.
Are you all clear?
Yes, sir.
Right? Now, on the maturity date, on which date?
Maturity date.
What will happen?
Maturity
How much
date
more
has to
should transfer? Rama should transfer to Sita?
Sita.
Sita account debit.
To bank 9,000.
Is it easy?
Yes, sir.
This will always be first part of your 5-mark question. So it's a 10-mark question. So this will be the first part, whatever they are asking you, whatever we have done till now. Guys, are you all clear?
Yes, sir.
Right? Now let's get even more complicated. Now see the drama. And if you have understood till here, please try to look at it from a case to case basis, how it works. Our Rama, then we have our
Sita.
Sita. Let's assume same thing, case 12K. He transferred what?
3K.
3K. On the due date, he has to transfer how much?
9K.
On the due date, this Rama
Schedule not transfer.
say he does not have money. He does not have money. Bank will come to who said?
Sita.
So Sita turned sad. Sita turned sad because she does not have money. She came up with another idea. She said, you know what, Ram? This time I will draw a bill on you. I will draw a bill on you. Let's assume 12k. I will draw a bill on you how much? 12k. You accept it. You accept it. I will go to the bank and discount it. I will go to the bank and discount it. Bank will give me how much? Let's assume 11,400. That means 600 discount, 12,000 is there. In this, I will pay off this 9k. In this, I will pay off what? 9,000. Right? Now bank will come to you. Now bank will come to you. You pay the amount. You pay the amount. Are you clear? Now, on the due date of Ram, how much was Ram supposed to pay to Sita? 9,000. But now the new bill is for how much amount? 12,000. So how much should Ram collect from Sita?
3,000.
Did you all understand? Monica, Ashish, Raj? Fine. This is your second part of your another 3 marks. The last part, which becomes more drama. On this date, Mr. Ram becomes
Insolvent.
rupt. He became.
Bankrupt.
Who will bank come and ask money from?
Sita.
Sita, right? How much should Sita pay?
12.
12,000. So whatever she should have received from Ram will turn into. Now, this mutual transfer, the interest is where it gets confusing. Until and unless you're not do not have a clarity of your thought. But if you have understood the sequence what I've told you, trust me, you just have to do the cross multiplication properly. You will get all the journal entries, right? This is a lottery 10 marks. Not like easy, difficult and all. It's like a lottery 10 marks. And I don't want you guys to do mistake in this. Shall we start?
Yes.
Okay. Now see here. I want you guys to just open your notes what we have given. Let's try to just understand the entries, right? Shall we start? So see here, what did I say first? Do you have any transactions between drawer and drawee initially? Whereas in the previous case it was a purchase or a sale. So no journal entry. When the drawer draws the bill and accepts it for Ram, so drawer for me was Ram, drawee is what? Sita. So drawer draws the bill. What's the journal entry? Bills receivable account debit to drawee, that is my, not my Sita, that is Sita's account, right? And in drawee's account, what will be the journal entry? Rama's account debit to bills payable. Then who will get the bill discounted in the bank? Drawer. Bank account, discount account to bills receivable. Whereas in the drawee, will there be any entry? The answer is no entry. Why? Because the transaction is between the bank and the drawer, not between the drawee. So that will be only in the whose account? Drawer, which is my Rama, right? Then when bill is paid to the drawer, we have already taken into consideration. Now on the maturity date, what will happen?
The drawee has to pay it to the bank.
Right? So here there is a mistake, just write down. Right? This one is a mistake, just write it down. Write it as bill amount paid by drawer. 2 is there, make it as paid by drawer. Pay to drawer is there, make it as paid by drawer. So what will be the journal entry here when it is paid by the drawer? Sita to bank, and in the drawers book it will become what? Are you all clear? Right, last on the due date what will happen? Sita will pay to bank, right? So what will be the journal entry for Sita? Bills payable to bank account. Now let's just see this question and we'll try to develop next 3 questions on the same concept of what happens in case of a dishonor or a mutual accommodation or other stuff. And everyone, just because this we are doing a practice, what I would want you guys to do it in the examination also, as I'm trying to teach you, we will always try to write the sequence of events so that it becomes extremely easy for me in the examination to pass the journal entry. I'll show you how I'm making a sequence so that in examination also you can always waste one paper, write down the sequence, because journal entries, like I said, will be the same. It will either be those 2 cases of honor, dishonor or endorsement. So the entries is not confusing at all. If you know the sequence, you just have to keep writing according to the sequence. Are you clear? George drew a bill for 1,80,000 on Harry for mutual accommodation. Who's drawing the bill? To. So George is my bills receivable. Harry is my bills payable. On which date?
1st July.
1st July. George drew a bill on Harry and Harry accepts it, right? So that is the first scenario which has happened, right? I'll just write the scenarios. Then George had purchased goods worth 1,80,000 from Jack. So there is a new category called Jack. Who has purchased goods?
George.
So on the same date, 1st July, George has purchased goods of what? George purchases from Jack. For Jack it will be what? Sold goods to George. Right? Let's come to the third case. George endorsed Harry's acceptance to Jack in full settlement. So, who is endorsing to whom?
George is endorsing to Jack.
1st July. George is endorsing to Jack. What is the journal entry for endorsement?
J is Jack's account.
Jack to bills receivable. For this guy it will become what? Bills receivable to George. Now see here, the amount was 1,81,000, whereas the purchase amount was what?
1,80,000.
1,80,000.
So 1,000 was discount received by.
So there is a 1,000 discount. We'll see later, right? This is something we have to know. The amounts are different, right? Then on 1st September, Jack purchased 1,90,000 from Harry.
Purchase, sales.
Jack purchased from Harry. So for Harry, what did he do?
Sales.
Harry sold goods to
Jack.
Which is the date?
September.
1st September.
Okay. Now, Jack endorsed the bill of exchange received from George. So now see here, this bill what he got from George is giving back to what?
Harry.
Harry. Harry is dancing because that bill amount on the due date, who should have paid?
Harry should have.
Harry only should pay. So that means Harry gets the bill and he will cancel the bill. By doing it, what is he doing? Originally, the bill amount was for what amount?
1,80,000.
10,000.
Now he sold goods for what amount?
1,90,000.
Somewhere he made a profit because of the entire thing. Clear? Now last one. Last one, sir. Thank you. Last one. See here. On 1st October, Harry purchased goods from worth 2 lakhs from George. Harry purchased goods for how much?
2 lakhs.
So what's the journal entry for it? For Harry it is purchase, for George it is a
Sales.
sale. Harry paid the amount due to George by check. This is just one simple entry of normal purchase, nothing else. Right? Now look into it. How does the entire thing work? We are doing in the books of Harry. Now Harry, if I look into it, what is there?
Sales.
One bill accepted, right? Then you sold goods to Jack. Then
Endorsement.
you received the bill. Then you again purchased from George and you gave a money to George. 5 entries. Right? Now look into it. George to bills payable 1,80,000, 1,80,000. Second one, Jack to sales 1,90,000, 1 lakh. Now the bill of 1,80,000 and bill amount was what? 1,90,000. Now they are telling
9,000.
9,000 was paid in cash. See here, they are telling out of 1,90,000. He said you use 1,80,000 of the bill and 9,000 I am giving you cash. So he is losing how much money?
1,000.
1,000. So the journal entry will be bills receivable account 1,80,000, bank account 9,000 and this one. Finally, you are cancelling the bill of 1,80,000, 1,80,000. Why? Because it was my bill only which George was having. Then finally purchases to George and George to bank account. Right? Now if we come to George, it's a very simple. George did what? First he purchased goods from Jack. Then he received a bill from Harry. Then he paid that bill 1,80,000. Then there was a sales and then there is a bank account. Right? Now in case of Jack, again pretty much the same story. Are you guys clear with this?
Yes, sir.
Right? Is it easy?
Yes, sir.
Guys, done. Now let's look into the last case of dishonor of a bill. X draws on Y a bill of exchange for 30,000 on 1st April for 3 months. Who's drawing the bill?
X.
On whom?
Y.
What is the amount? Did he send any, sale any goods or other stuff? So this is what case? Mutual accommodation. Now, if Y accepts, to whom is it bills receivable?
Y. X.
For X it is bills receivable, for Y it is
Bills payable.
X got the bill discounted for
28,000.
28,800. See here, what is the bill amount?
30,000.
What is the bill amount?
30,000.
And he got how much?
28,000.
So what is the discount amount? 1,200. Are you clear? Now X immediately remits 9,600 to Y. They didn't say the bill amount was 10,000. They told what? He is remitting how much to Y? So in this 28,800, he is remitting how much to Y?
9,600.
But what is the actual amount remitted? Do the cross multiplication. How much?
400.
So he has transferred how much money worth? 10,000. The moment you do this, your mind should automatically tell, boss, on the due date, X should be paying only the balance amount, which is how much?
9,000.
How much? Sorry. X should be transferring 20,000 on the due date to Y. See here, it was a 30,000 rupees bill. In that I have given now already how much? 10,000. So that means on the due date how much I should give? 20,000. Are you clear?
Yes, sir.
Done. Now let's come further. X was unable to remit the amount. X was unable to remit the amount. Now everyone keep in mind, X should be paying how much to Y?
20,000.
X should be paying how much to Y?
20,000.
20,000. Now what happened? But Y on the bill date should be paying how much to the bank?
30,000.
30,000.
First bill is what? 30,000. Now what Y told? I will draw a bill on you. For how much money?
42,000.
For
42,000. 3 months.
42,000. For how many months?
3 months.
For now, and he got a bill amount of what? 40,110. So now in this 42,000 he got how much?
41. and
40,000.
110.
So what's the discount amount?
1,890.
1,000.
890.
Okay. Now this is where a lot of them get confused. Look into it. They are telling Y sends how much to X?
6740.
6740. How much was X supposed to pay to Y?
20.
20,000 plus additional 6740. Because see, it is like this. I have got 42. I agree. Will I pay you 42 is the question. The answer is no. Why? Because earlier you only had to pay me 20, no? I paid you on your behalf, no? I will reduce that and give you, no? You understood this?
Sir.
So now, see here, he will be transferring it to me. Basically, in this thing, what I'll do a calculation is, I will write it as 26740. For the calculation, I'll be writing it as what? 26740. Why 26760? 6740 what I transferred now plus 20,000 of the earlier one. Do the cross multiplication. How much?
1260.
So what's the total bill amount then? 28,000. Are you clear? So on the due date, how much should Y give to X now? On 42. I have already given you 28. 28. So I should be transferring it to you. How much?
40.
Should I explain this whole scenario again?
Only this part you explain.
See here. Let's just forget the bills receivable, bills payable and all. Let's assume you and me. Okay. First thing, What did we decide? How much did we get from the bank?
30.
Now see here, we got 30,000. I'll tell boss, I will take 20k, you take 10k. Okay. Bank, how much did they give me?
28.
28,000.
They gave what?
28,800.
28,000. So the discount was what?
1,200.
So 1200, if I have to divide between x and y, it should be in the ratio of 2:3. What is that ratio? 1200.
800 and 400.
Right? So this guy got 19,200. This guy got,
9,600.
right? Now on the due date, right? Y should be paying to the bank.
Yes, sir.
Y will pay to bank how much?
30,000.
He will come and tell you, Anna, my money is only 10. I have given you 20k on your behalf. No problem. So, can I say X still owes Y 20,000?
Yes, sir.
Let's keep this as story 1. Now, let's come to story 2. Now, Y decided I will take 42,000. I'll take how much?
42,000.
42,000. Now Y said, in this 42,000 what I got, I ended up only receiving 40,110. I ended up receiving what? That means what's the discount amount?
1890.
90. Now he said, this 40,110 we will divide between x and y. He said, I will give to x 6740. Now if I think is it only 6740, I will say, Anna, you have to pay me 20 earlier, no? I wanted to give you more, but I will reduce that and I'll give you 6740. That means basically what I have transferred to you is not just 6740, it's 26740. Correct? So now if 40,110, for that the discount is 1890. What I have transferred to you is 26740. Tell me what's the discounted portion? 12.
1260.
Correct? Now see here. 1260. That means out of 40,990, the discount portion is 1890. In that, the discount of X what he has taken is 1260. So what is the discount of Y?
630.
630. Now this is 40,110. What's the amount here?
13,370.
13. Now do the math, it will be 28,000. So basically what happened, Y only took 14 in that 42 and he gave back 28 to Mr. X. You understood this entire thing?
Yes, sir.
Anyone, any doubt?
No, sir.
Easy? This is the second part of the story. Now comes the third part. See here, the third part. Before maturity, Mr. X becomes bankrupt. His estate is paying 50 paise in a rupee. Okay. Who became bankrupt?
X became
How much should X pay you?
14,000. See, no, 28,000.
How much should X pay you? X should pay you
28,000.
28,000. He became what?
Bankrupt.
Now he is saying for every 1 rupee you will get only
50,000.
50 paise. That means for 28,000 how much you will get?
14,000.
That means what's the loss?
14,000. Bad debts.
That's all is the story. If you don't get this right, you will lose this entry, then you will lose the last entry. You will end up getting only 3 marks out of your 10 marks question. This one, actually, if you just properly analyze it logically, this is very, very easy as a question. Don't try to look at the journal entries at all initially. Just try to make the working notes properly. Once you do, it's a sequence of the journal entries, because journal entries are only 3: bills receivable, bills payable, X, Y, bank or discount. That's all, right? So don't try to mug up the entries. If you get a question, right, when I go to the examination, just to boost my confidence, first question I'll do is BRS, second question I'll do is bills of exchange. I will not care about the order. Let's say I will start 2A, I'll do it. Let's say this is 3C, I'll leave some maximum space and do 3C. I'll finish it off then and there, because this, if you end up getting confused in the exam stress, you will end up losing the marks. Are you all clear?
Yes, sir.
Thanks, John. Now can we see the journal entries?
Yes, sir.
See here, first thing, bills receivable to Y. Bills receivable to Y. This is what? For what? Accepting of the bill.
Yes, sir.
Then what did he do? He got the bill discounted. Then he transferred how much to Y? 9,600. But what is the bill amount?
10,000.
10,000. So it will be Y to bank. This will be the. Then now Y drew a new bill on him. For how much amount?
42,000.
42,000. Now he transferred him how much?
6,000, sir.
6740. But how much was the discount portion? 1260. Now finally he becomes bankrupt, so you will cancel the bill. Then how much are you paying out of 48? 14,000. The balance goes to the deficiency for Mr. Y. Now if I come to Y, look into it. First he will draw the bill, then he will discount it, then he is drawing a new bill. He got 1890. Now he will meet the bill on the new date, that is 30,000, right? Then he will have a bad debt of 14,000. Just run through all the entries and let me know if you have any doubt. Guys, any doubt in any of the entries?
No, sir.
So please just, hopefully you understood how to go about with the sequence. Sequence is important. Then do this question only twice before going to exam, so that you are very thorough with the flow of the entries. Don't try to mug up, because if they change the names and other stuff, you'll end up getting confused. Rather just understand the sequence. I hope you guys are clear with this.
Yes, sir.
Okay. Now let's do the exam question, one question just for understanding. Now A sold goods to B. That means this is not a mutual accommodation, this is a proper sale. Upon the later draws one bill for 167, one for 3 months. One bill is getting matured on which date? If it is May, then it is going to be June. Then one more will be July, August. Right? May to June, July, August. 20,000 is in August and 16,000 is in June. Both B accepted both the bills. On 5th June, A sent both the bills to his banker for collection on the due date. The first bill was duly met. Which was the first bill? Hey,
No.
16,470. But due to the temporary financial difficulties, B failed to honor the second bill on the due date. Bank has to pay 20 on the noting charges.
2020.
That means 20,020 will become the dishonor of the bill. Are you clear?
Yes, sir.
Right? However, on 16th August, it was agreed that B will immediately pay 8020 in cash. So he had to pay him how much money? 20,020. In that, how much he paid? 8,020. So how much is still pending? 12,000.
12,000.
He accepts a new bill at 3 months for 12480, which included the interest component. So if 12,000 was the bill amount, what will become the interest component?
480 rupees.
You know how we calculated, right?
Yes, sir.
A immediately sent the new acceptance. On 2020, B approached the bill offering for retirement. What do you mean by retirement of a bill?
Before the due date.
Before the due date.
you have to
He should have, how much he should have paid on the due date?
20,000.
12,480. He is paying before that for what amount?
12,240.
What will happen to 240?
240 is discount.
Is
on-
the discount or on the bill? So that's the entire thing. Now, is it easy now?
Yes, sir.
Right? So please read one line after the other. Don't go in a hurry to do the entire question. So see here, first B2 sales, then bills receivable 1, bills receivable to B, then bills for collection, or this is not required. You can always write it as directly. Right? Whatever is going to the bank. So I generally try to write this account only, bank to bills receivable account. Right? Then for the dishonor of the bill, it will become
Reverse.
B2 bills receivable to noting charges. Then what happens to the interest? We calculated 480. Then B2 cash 8040. The balance will be the new bill. Then finally bill, rebate and this one. Are you all clear with this?
Yes, sir.
Okay, this question I am doing it just as an independent thing, just to understand, have we understood the entire flow? Last question is your homework question so that you can practice once you are done with it. Journalize the following in the books of Dawn. Our Dawn came now, so journalize the following in the books of Dawn. Right? Bob informs Dawn that Ray's acceptance for 3,000 has been dishonored and noting charges of are 40. Bob accepts 1,000 in cash and the balance as a 3 months interest. Dawn accepts from Ray's acceptance for 2 months at 12%. What is happening?
Bob informs Don that. Oh,
Okay. Now see here. First thing,
Don drew a bill on Ray and he has endorsed it to.
we have Don, then we have Bob,
Ray.
then we have Ray. Bob informs Don that Ray's acceptance for 3,000 has been dishonored and noting charges was 40.
Don actually drew a bill on Ray and that bill he endorsed it to Bob. So Bob informed Don that Ray did not pay it.
So what will happen to Don now?
Don has to pay it.
Don will pay to Bob and he will collect it from Ray. You remember the endorsement of the bill if it gets dishonored, right? What will happen? In that case it was C to B. Here it will become Ray to Bob, including noting charges. That's your entry number 1. Now Bob accepts 1,000 in cash and the balance at a 3 months interest of 2 months. How much should Don pay to
3,040.
3,040.
3,040? In that, how much he paid you cash?
9.
So he still has to pay you.
2040.
Now how much interest? 10% for 3 months. How much will it come to?
51.
51. So now see here, Bob account 3040, interest account 51, to cash 1000, and the balance will go to the new bills payable account. Clear?
Yes, sir.
Next one. What did this guy do? Don accepts Ray is acceptance for 2 months at 12% interest. Now, how much should Don collect from Ray? 3040. 12 months, 12% interest for 2 months.
60 rupees. 60.79.
60.79
79.
or right? So bills receivable to Ray to interest. Right? For Bob it was bills payable, for Ray it was bills receivable, so he accepted the new bill. Now, next one. James owns Don 320. He sends Don's acceptance in favor of Ralph for 3160 in full settlement.
Oh my god.
Now what is happening?
I don't know.
James owes Don. That
James
means
has to pay to Don.
Don, correct. So it is bills receivable or bills payable for Don?
For Don, it's
For
bills
Don
receivable.
it is, we are doing in the books of Anna. Don. So think like a Don. For him it is bills receivable. He sends Don's acceptance in favor of Ralph. Who's this Ralph?
Ralph is a creditor.
Ralph is a
Creditor to Don.
creditor to Don. Okay.
So Don is sending that 3200 wala bill to Ralph.
Ralph.
So might be Don owes to Ralph, so he sends the bill instead
Thank
of
you.
him.
Read here. That's why I said Don's own acceptance. Don's own acceptance. When Don is accepting the bill, will it be a bills receivable or bills payable for him?
Bills. Don is accepting the bill.
John is accepting the bill.
John bills payable.
Bills payable, right? My bills payable was 3160 amount. To James, I had to collect 3160, so that 40 will become the discount. That's where that acceptance and the drawing of the bill becomes important. Look into it. If Don draws a bill, he will be the bills receivable. If Don is accepting the bill, for him it will become a bills payable.
Accept.
Don has accepted a bill drawn by him. By who? Ralph. So that means that is a bills payable to Don. And that amount was what? 3160. John is wanting to pay him how much? James has to pay 3200. Don has to pay to Ralph how much?
3160.
So James said, boss, I will take care of Ralph. You leave it to me. He said,
But James owes Don 3200, but he'll pay to Ralph only 3160.
Okay. 40 rupees will become the discount.
For Ralph.
Yeah. He lost that, no? See, because he had to pay only 3160 to Ralph. From John, he had to collect 3200.
But for James, now it will be like a discount receipt.
Yeah, for James, it's a discount received. Then, see here. Don meets his acceptance in favor of Singh for 4,500 by endorsing John's acceptance for 4,500 in full settlement. What does this mean?
Bills payable.
There is a bills payable and there is a bills receivable. He is saying you cancel it out, whatever the differences will become the
Receivable
interest.
to bills payable.
Right? Bills payable to bills receivable. Last one, raise acceptance in the favor of Don, retired 1 month before the due date. Interest is taken at the rate of 6%. So whatever the
Bills payable to Don.
bills,
So he is paying early to be repaid.
no. See, raise acceptance in favor of Don.
Don.
For Don,
It's a bills receivable.
bills receivable. Not, it's raise acceptance in favor of Don. Right? So it is bills
Receivable.
receivable. So bank account debit, discount account debit to bills receivable account. Are you clear?
Yes, sir.
Understood? Small mistakes. This is question and all, if it comes, it's like the toughest question of your paper. So I'm doing it so that not for the examination per se, so that you understand the question. So we are done with this chapter. Okay, so let's just start back to where we left. So what I was telling you guys across is, if there is any discount which has happened, I need to write off that discount because it's a loss for the company. Now see here, the loss to write off, there are 2-3 things that we need to keep in mind. First thing that we need to understand is, now let's say debentures issued and redeemed after 5 years. So it can be 5 years, 10 years, anything. Issued now. When are you redeeming it? After 5 years. Let's say debentures issued at a loss of 5 lakhs. He left, is it? Or
Yes.
okay. Debentures issued for 5 lakhs. Sorry, the loss on debentures issued is what? 5 lakh. And you're redeeming when? After 5 years. That means this loss of 5 lakhs, because I'm going to be redeeming it in full after 5 years, I will write it off equally each year. That will be 1 lakh per annum. That will be what? 1 lakh per annum. And what will be the journal entry for it? Profit and loss account debited to discount on issue. Are you guys clear? Right? Now let's come to the second scenario. Now read this question. HDC Limited issues 2 lakh debentures of 12% each of 10 each at 9.40. That means, what is the discount they are issuing? 2 lakh into 10 I should have collected, which is what? 20 lakh rupee. But I collected what? 2 lakh into 9.40. How much does that come to? 18 lakh. That means what is the discount? 1 lakh. Are you clear with the first part? What is the discount that I shall be charging is 1 lakh 20. Now, under the terms of issue, 1/5 of the debentures are annually redeemed. That means if you have 20 lakh, every year you will be redeeming how much? 1/5. That is 4 lakhs every year you shall be redeeming it. Are you clear? So 4 lakhs you are going to be redeeming it. So in the previous case, what happened? I am issuing 20 lakh now. Entire 20 lakh I am redeeming after 5 years. In this case, what is happening? 20 lakh I am issuing. Every year I am redeeming 4 and 4 lakh. Are you clear? Now, when I am doing a scenario like this, what I do is, I try to do a table to do a write-off. Now, that is, we start from year 0. Year 0 means beginning of the year, how much was the debentures amount? First year, how much was the beginning debentures amount? 20 lakh. Then year end, how much did you pay back?
4 lakh.
So year 1 beginning, how much it will be left?
16 lakh.
Year 2 beginning, how much will be there? 12. Year 3,
8 lakh.
year 4,
4.
year 5, 0. That means this is how the pattern. Do reverse of it.
4.
So that means if you divide everything with the last number, it will be what? 1, 2, 3, 4, 5. 4 by 4, 1, 8 by 4, 12 by 4, 16 by 4 and 20 by 4. Are you clear?
Yes, sir.
Right? Now do the total of this, which is 15. Now what was the discount amount I calculated? 1,20,000 into 5 by 15. Next year, are you clear? So this is what is going to be the amount which you will write off every year. Understood? So this will be either your part of your MCQ question for 1 mark, or they can ask you a full-fledged question for 5 marks with one journal entry to be done. Is everyone clear? Now last one. Now this is another 2 mark question or a 5 mark question. Look into it. I am saying 3 lakh debentures. Okay, 3 lakh 14% debentures of 100 each. Interest paid half yearly. Right? Tell me what is the interest amount? 3 lakh into 6 by 12. Is it? It is, boss. 3 lakhs debentures of 100 each. So it is not 3 lakhs. It is 3 crores of 14. Read this carefully. When they put a comma, it is the number of debentures which you multiply with the face value of debentures.
21 lakhs.
How much is it coming up to? 21 lakh. What is the journal entry for paying interest?
Interest account debit to
Interest account debited to bank, right? Now, because I'm going to be paying it to the debenture holders, it will become to.
then debenture account holders account.
Okay, debenture holders. This is what I would have done, right? So there is an Income Tax Act which comes into picture. What does the Income Tax Act say? Income Tax Act says whenever you are paying any debentures holder and interest, what you are supposed to be looking at it is whatever interest I am going to be paying it, I shall be reducing a tax component and then pay. I'll be reducing what component? Nothing given. We'll assume the tax component as how much? 10%. That means the debenture holders out of 21 lakh will only be getting 2.1 lakh will go to the tax department. The balance will be paid to the debenture holders. So what will be the amount then out of 21 lakh if you look into it? In 21 lakh, if I have to break, 2.1 lakh will be the TDS amount, right? 18.9 lakh will be the interest amount. Are you clear? So now see the journal entry, how it will go. Interest to debenture holders, debenture holders to TDS to bank. That means 21 lakh, I'm going to be giving how much TDS? 2.1 lakh. 18.9 lakh will go to the bank. Then this 2.1, you will be remitting it to the government. 2.1 account. Are you clear? Then finally, since interest is a nominal account, you have to transfer it to P&L. P&L to interest. This is what the entries are, 5 marks. Understood?
Yes, sir.
We are done with the chapter of issue of debentures. Now we are talking of redemption of debentures. Clear with the part? Guys, are you all clear? John, Nisarga, Charita, are you guys clear with this? Okay, now let's start the topic of debentures redemption. What do we mean by redemption of debentures? Right? You are paying back the debenture holders their money back. Now, only thing that they are going to be testing you in this chapter, this is the part of the new syllabus, just look into it. What they are going to be testing in the new syllabus is that whenever you are redeeming the debentures, whatever debentures you are going to be redeeming it, listen to it, whatever debentures you are going to be redeeming it. Now, there has to be a reserve called DRR. There has to be a reserve called as what? DRR. That is Debenture Redemption Reserve Account. This Debenture Redemption Reserve Account, whatever you are having, so whatever the outstanding debentures are, 10% of it you should always have it as a balance. Whatever the debentures is, how much you should have it as a balance? 10% of. So before you start redeeming it, you have to make sure that there is a balance of 10. Only then you can redeem. If you don't have a balance of 10%, you will transfer the 10% and then you will create the entries. That's all it is. Now, what was the journal entry for payment of preference shares? Preference shareholders to bank. Before that I did what? Preference share capital to preference share holders account. Same thing only will apply. Only additional part is I have to create the debenture redemption reserve account. Are you clear? Once the debentures are completely redeemed, whatever balance is left in DRR, you will transfer it to profit and loss account. Just understand the sequence. Before redeeming it, what I should do?
You have to transfer it.
I have to make sure 10% is there in DRR before. So if it is not there, I will first transfer from P&L to DRR, make sure the reserve is 10%. That is the step 1 you have to check. Step 2, you already know how to cancel it. Right? Now, I have to make a premium on redemption. I have already created that entry in the issue. So nothing, no problem with it. I just have to create that payment entry. Finally, I will check if entire debentures are redeemed. Then whatever is there in the DRR, I will be transferring it back to the P&L account. Are you clear with this? That's all is this chapter. Right? And this is something you can expect in the current year paper for DRR. So every year, how do you create a DRR? You are transferring your profit to DRR account. Profit as what balance? Profit as what balance? Credit balance. You are moving from reserves to DRR. That means you have to debit your P&L, credit your DRR. So for creating the profits, what's the journal entry? Right? Now, I want you guys to understand a little bit what happens in the background of it. Every year, I will be transferring it from my profits to which account? Right? Whatever I am transferring it, an equivalent amount of cash, I will be doing an investment. See, because this is liability, right? So from one liability, it is creating another liability called DRR. I told you profits will be represented through cash on the asset side. So I will move my cash to which account called? Investments account. Understood the step 1? Now, this was the step 1 I told you, profits to CRR, DRR. Then what I will do? Equivalent amount I will transfer from cash to investment. Now, whenever you get any return on investments, that might be your interest or other thing, what I will do? This interest, whatever I get, I will be adding it to the DRR account. Instead of adding it to the profits, to which account I will add? DRR account I will add. Clear? So, what is the journal entry for receiving interest? Bank to interest account. End of the year, interest you will transfer it to P&L. What is the journal entry for that? How much? If you have done cash to P&L, cash to interest, next entry will be what?
Interest
Interest to P&L. But instead of here P&L, I'll be transferring it to DRR account. Artha aita?
Yes, sir.
Are you guys clear? Nisarga and John? This is the third part of the part. So I'll create reserve. I will invest whatever investment return I get. I keep transferring it to the DR. Like this I'll be doing every year. When I want to redeem the debentures, what is that I'll do first? First thing, I have to sell the investments. You remember in the preference shares also I did same story. I will sell the investments. When I sell the investments, I'll be selling it at profit or at loss. Whether it is profit or loss, instead of transferring it to P&L, you will transfer it to DRR.
Okay, so in a bank account debit, DRR account debit, 2 investments.
Are you clear? So you will not transfer it to which account? P&L. You will transfer it to the DRR. And after doing all of it, you will check DRR should have a what balance?
Credit balance.
Of how much percentage?
10%.
If not, you will transfer that additional balance. Then you will redeem the debentures, that is transfer it to the debenture capital, then you will pay, right? Then finally whatever is there in the DRR, you will transfer it back to the profits. That's all is the topic. Because students get confused with this part, again I am repeating it, I should sell the investment. When I sell the investment, what will happen? Any profit or loss on the sale of investment, where it will go? To the DRR. Finally, what I should check?
If the DRR has credit balance
So
of
10%. If it's 10%, good for me. Otherwise, I'll have to transfer it from my profits. Then I will do the redemption entry, typically the same one. Now, let's try to look into this question. Right? And one question is what we are going to be doing, covering all the scenarios. It has to go to DRR. It has to go to DRR. No, they would have transferred. See, they are saying, they are assuming, see this point. So, what they are telling you is that whatever you are getting the interest, typically how it should work is, the interest whatever you are getting in, you will transfer it to DRR. Whatever is in DRR, you will reinvest. Now they are telling, consider the fact that the interest is received each year through cash or bank account and it is not reinvested. In the illustrations given in the chapter, the same has been considered and hence interest on DRR is not credited to DRR account. So for you guys as an exception for CA Foundation, they are telling you don't consider it to DRR, you can consider it to P&L. But even if you do that, that is right. So either you can take to P&L or to DRR. Rule is you have to take it to DRR. If they say it is reinvested, you have to take it to DRR. If not, then you can take it to P&L. Are you all clear with this? Now let's read this question one by one. The following balances appear in the Paradise Limited unlisted company as on 1/1. 12% debentures 7,50,000. Debentures is which account? Debit side or the credit side?
Credit.
Liability, right? So it should have a credit balance. Balance of DRR is 25,000. It is what?
Credit balance.
DRR investment 1,25,000 represents 10% blah 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 of 100 each. Annual contribution is made on blah blah blah. The balance at the bank was 7,50,000 before the receipt of interest. So that means you have not still received the interest for the current year. The investments were realized at par. That means you sold 1,12,500. You ended up getting 1,12,500 only. You are required to prepare the following accounts: debentures account, DRR investment account, bank account, and debenture holders account. Okay. Now let's go one by one. Right. first thing, I have to redeem this debentures. What should be the balance in DRR?
10%.
But how much is the balance here?
Yes. 50,000.
So 10% of 7,50,000 is how much?
75,000.
How much do I have?
25,000.
That means how much balance I should create?
50,000.
That's the first point we have to look at, right? Now let's see here. I'll come to DRR account.
By balance 25.
By balance 25. By P&L 50,000. That goes to the. So my DRR balance became 75. First thing. Now DRR investment. What was the balance? Sold for how much? At the same price. If there was a profit or loss, what you will do? DRR. Then you will do the P&L account, right? Then now let's come to the debenture holders account. Now from the debentures, what was the journal entry I told you? Debentures account to debenture holders account, 7,50,000. In debenture holders account, by debentures account, then you are paying a premium of how much?
10%.
75,000 to bank account 75. That's all is your entry. So the only thing students get confused is with this portion that they have to understand. Otherwise everything else is same as what we did in the preference shares. Are you clear?
Yes, sir.
See the last question. The balance sheet of B Company Limited, right? You have a share capital, reserves and surplus, long-term borrowing, trade payables, then you have assets. So they have told me debentures is how much money? 1,20,000. They are giving an existing shareholder an option to buy 10 rupee shares at 15 for every 4 shares held prior to bonus distribution. Now what do you mean by bonus part of it? Bonus means free shares of the company. So the existing shareholders will get a free share in the company, that we call it as bonus shares. So before giving bonus shares, how many equity shares are there? 20,000 equity shares. They are telling you that 20,000 shares, for every 4 shares you can get 1 share. That means for 20,000 shares, how many shares can you get? 5,000 shares, and they are buying at what price? 15. What is the journal entry for issuing of shares? Here, bank account debit to equity shareholders to equity share capital and premium. 5 rupees is premium, 10 rupees is the face value. Are you clear?
Yes, sir.
Now, to issue bonus shares for every 5 shares held. So now, after you did the right issue, 20,000. So totally I have how many shares?
25,000.
So they are saying for every 5 shares, 1 bonus share you are giving. That means if you are having 25,000 shares, how much bonus you will get? 5,000 will be the. So the journal entry for bonus shares, this I'll cover it a little later. Just remember this. 50,000 is the bonus amount, right? Security premium, P&L and bonus. This I'll tell you the logic in the next unit, right? Then let's come to the DRR. Check, do you have DRR in your question? See the question, do you have? Is there a DRR? Nowhere reserves are there. Nowhere reserves are there. What did I tell you? If you want to redeem, see here, they want to repay the debentures at 3% premium. Total debentures value is how much?
1,20,000.
1,20,000. I should be having a reserve of how much? 10% in DRR. Nowhere the reserves was there. So I'll create the reserve. What is the journal entry for creating the reserve? P&L to debenture redemption. Then you will pay the. You have a debenture redemption investment. You are selling it. What's the journal entry for selling the investment? Debenture redemption to bank, 18,000. 18,000. Then when you pay the money, debenture holders to bank, that's your last entry, right? Now, once the debentures are completely redeemed, what did I tell you? Whatever is there in the DRR, you have to again transfer it back to the P&L or general reserve account, you will transfer it back. Then now see here, in this particular question, I want you guys to understand something. I don't have, if you see the entire question, I don't have neither DRR nor debenture redemption investment. Read this entire question. See here, nowhere in the reserves DRR is there, nowhere in the assets DRI is there. So first thing, I will create a 10% DRR, that is 12,000 rupees DRR I will create. This 12% DRR what I create, what I will do, I will invest in DRI. What is the journal entry for? I told you whenever I create DRR, I need to make sure I invest immediately. What is the journal entry for investment? DRI to bank. Done. Now you redeem the debentures. Now once you redeem the debentures, is there a need of DRR or DRI?
No.
So you will sell the DRI back again.
Bank to DRI.
Bank to DRI. Then whatever is there in the DRR, you will transfer it back to the
P&L.
general reserve or P&L. So it will again become the reverse of it. So see here, these two entries are that. Bank to DRR. See here, before that I have to create DRI to bank. So again I am telling you the sequence. Just remember this. What is that first thing I have to check in debenture redemption? Whether DRR is there. And if DRR is there, it has to be the extent of
10%.
Now if it is not there, what you will do?
Create the
How do you create DRR?
Transfer from P&L.
P&L to?
DRI.
Once you create, what you will do?
You have to invest in DRI.
How do you invest?
DRR to
DRI to bank. Then what is the journal entry for redemption? Debentures to debenture holder. Debenture holder to bank. Once you pay them, is there any need for this?
No.
So you will transfer
Bank to DRI.
bank to DRI,
DRR to P&L.
DRR to.
P&L.
That's all is your chapter. 90% I'm expecting this to come in your exam. High probability of this topic coming in, so make sure that you do it right. Are you clear, Nisarga, John? Guys, done? Okay, is the chapter easy?
Yes, sir.
Please make sure company accounts take even one more day extra, it's okay. Don't do wrong in the company accounts, both theory and practical. If you get your company accounts right, straight away you start with 20 marks correct. 20 company accounts done, 10 BRS done, maybe bills of exchange.
Maybe.
I'm saying maybe bills of exchange. I still, as student, doubt accommodation bill. You guys will screw up in between.
But question will
Question
come,
will
sir.
come.
Yeah, question will come. So BRS, bills of exchange, final accounts,
Final accounts.
and partnership. So anyway, you know how to do revaluation. You know how to do partners capital. You know how to do balance sheet. Right? Admission, retirement. Tomorrow I'll cover it, that one. Right? So no matter what, I'm saying if you guys rectification we'll see later. I'm saying if you guys fail, we'll hang you guys upside down. Right? I've done it as good as the full-fledged class only. I've covered all the concepts. Right? So please, this is my time I'm valuing. So I at least should be happy that, hey, you know what, the guys who are all watching it have cleared it, and you let us know that at least gives that, okay, you are doing some good job, at least of teaching. So please make sure that you are done with this. Now the last chapter that we are going to be doing is called bonus shares. Now what is bonus shares? Bonus shares is basically free shares given to the existing shareholders. Right? Now the other term that we use for bonus shares is called as capitalization of profits. is called as what? Capitalization of profits. Now what do we do? See here, in this there are only two scenarios. Scenario number 1, what you need to check is the existing equity shares fully paid up. What are you going to check? Is the existing shares fully, and it applies even to the debentures. Sorry, in terms of preference shares. If preference shares before redeeming, you have to check whether they are fully paid up or not. If they are not fully paid, you convert into fully paid and only then you can redeem. Okay. Same rule here. You can issue bonus shares only for what? Fully paid bonus shares. So first thing you are going to check what? Are they fully paid? If they are not fully paid, you will have to convert them into fully paid. Now how do you convert them into fully paid? Is using again the or revenue profits. You're going to use which one? Divisible. Now let's say for an example, I have 10,000 shares, 8 paid up. 8 paid up. That means how much money I have collected?
80,000.
What is unpaid?
20,000.
20,000. If I have to call this money, what will be the journal entry? Let's say final call.
Share final call account.
Share.
Share capital.
Final call account debit to
Share capital.
bank account
Bank account.
20k. So I would have written it as what? Bank account, but now instead of bank account I'll write P&L or general reserve to share final call 20k. This is how I convert what is a partly paid to fully paid shares. Once it is fully paid, you can issue bonus shares. While issuing bonus shares, look into it, the order in which I'll go. First, I will issue out of CRR, because CRR can be utilized only for the purpose of what? Bonus shares. Second, can I use securities premium?
Yes.
Securities premium, if you read the theory properly, it says securities premium can only be utilized for paying fully paid bonus shares, not bonus shares. That means, can I use it here? Then I can use the general reserve and P&L. What reserves I can't use? Again, revaluation. Then any specific reserve. I cannot use what? Revaluation or any specific reserves. Understood? Now what is the journal entry for issuing shares? Right? Now whatever, let's say in this case, what was the number of shares I had? 1 lakh. 1 lakh was the share capital. Let's assume that I am issuing 1 share for every 1 share. That means what? 10,000 bonus shares I am issuing. 10,000 into 10, what is the total amount? 1 lakh. So the journal entry will be CRR account debit, P&L account debit, securities premium account debit, P&L account debit to bonus to shareholders. Then bonus to share capital 1 lakh. For this you will get 5 marks. Understood the journal entry?
Yes, sir.
So see this, right? I'll do one question, just look into this. They have given me all the data. On 1st April, the company has made a final call of 2 each on 1,35,000 shares. Has made a call on how much money? 2 of 1 lakh.
1 lakh.
What is the journal entry for final call?
Share final call account debit.
Fair final call to share capital, right? Share, then bank to final call. Now once I do this, will it become fully paid?
Yes.
So first condition what I looked at is satisfied. Thereafter the company decided to capitalize its profits. I told you capitalize its profits is another name for what? Bonus shares. By 1 share for every 4 shares held. So you have 1,35,000. So for every 4, if you are issuing 1 share, how many shares are they issuing? Do 1,35,000 divided by 4. 33,750 into 10. So that will be 3,500,000. Now I have to make sure this, I need to have reserves of this much of money. Now first reserve, what will I check?
Capital.
60. Next reserve,
Securities payable.
then
General.
general or profit and loss account, it does not matter. So I'll use the entire reserve. Reserves to bonus, bonus to equity shares. That's all is the chapter. Clear?
Yes, sir.
So you have one more question, you can always try it out. Okay, the last topic is called as rights issue. Now what do you mean by rights issue? Right? This will come in your MCQ question for 1 mark, or maybe part of your other question for 2 marks. 6 shares of 100 each at 25% premium to the existing shareholders on 1 or for 4 basis. That means if you have 4 shares, you will be getting 1 share. At what price are you getting? 100 at 25% premium. That means you are getting it at 120. The market price of the share is 150. So currently you have how many shares? 4 shares. That is valued at what price? 150 into 4, 600. If you are having 600 rupees worth of share, you will get what?
1 share extra.
1 share extra, but at what price?
125.
125. You understood this part? So now you are going to be calculating the X rate value. What are you going to calculate the? Now how do you calculate X rate value? Is whatever was the existing value plus the new issue price divided by the number of shares. That means 600 plus 125 divided by 4 plus 1, 5. So you get how much?
145.
140. What was the market price?
145.
What is the X rate?
145.
145. This 5 is known as value of right. This 5 is known as what? That's all is the chapter. Should I repeat this again? This part? See, you have currently 4 shares. That 4 shares market value is 150. So that is 600. So you are getting 1 share for 125. So you will add for 600 125. 725 divided by 5. How much is it coming up to? 145. What was the market value?
150.
So 150 share you are getting it for 145. That means what is the right value? 5 rupees.
Only we have to find the premium of.
Yeah, what is the right that you are getting in is 5 rupees. Are you clear? Done? So we are done with your entire company accounts chapter. Whatever I have taught yesterday and today, just before exam, make sure that you keep the notes and watch the entire video before exam, or if you have already known it, you can just run through the entire thing. That is more than enough. Theory is not there. Make sure that theory you are reading it. All the back end questions of all the chapters, theory, make sure you are thorough with it and you go in. Clear? Right? So tomorrow, day after, we are going to focus only on partnership. Right? So, and then we'll do your rectification, cash book and other balances, whatever is there. Depreciation is also there. So we'll do that on Friday or Saturday, depending on what it is. Right? So thank you guys. Hopefully I'm done with company accounts. Hope you found it easy. Please make sure, again I'm sharing, do as many questions as share forfeiture, reissue and prorata. Go back to the past year paper questions. Just check all the company law questions, company's account questions. Let's say if you finish company accounts today, make sure tomorrow early morning you get up, go to ICA website. I hope you know how to check the past year papers questions. Go there and check the question. You solve it and check what the answer is. If you're getting it almost right, make sure you get this right. Get this right. That's all. There is no option of doing wrong here, there and all. You have to get it right. Format everything. That 20 marks has to be mine. Done? Right. Thank you guys. Thanks John, thanks, Nisarga. Good afternoon, friends. So let's start the module 1 topics, which is your depreciation. So today's topic will be covering depreciation, rectification, and incomplete records. Now, first thing, let's try to look into it from the depreciation side. How much is it important from your examination side, right? Now, depreciation as a standalone chapter, it's very rare that you get it. What you get depreciation will be part of your some other chapter. You will not get depreciation as a chapter by itself, right? That's why I was trying to do it towards the last, because it's very rare, but if you get it, it's like a lottery. Something that I don't want to get in wrong. Now, under depreciation, there are few things that we have to understand. What are the kind of questions that they can ask? Now, first thing, under depreciation, you have to understand what you mean by cost of asset, right? This is one question for your 2 marks. Then you have straight line method and WDV method. Then you have some miscellaneous methods. All the miscellaneous methods work the same way. After this, there is 2 parts which is little important for you. One is what happens in case of a revaluation of asset. What happens in case of a sale of an asset. Last topic that you have is for intangibles. That is your your goodwill or patent and others. So this is how your chapter is divided. So you have only questions of these kind. This is easy, this is easy, this is easy, this is easy, this is also easy. This few mistakes people do because of the timing thing. This is also easy, right? So if you get maximum, you get a 5 mark question. Minimum, you get a 2 mark question. That's all is the chapter's weightage. So shall we start? Now, first thing that you need to understand is a depreciation is not charged on fixed assets. It's not charged on what? But it is charged on property, plant and equipment. That means land specifically is not covered under the chapter of depreciation. Land is an asset which is not depreciable at all. Land will never get depreciated. So we only talk about other assets. So we use the term as depreciable assets. What is the term that we use? Depreciable assets. And depreciable assets we look at in terms of what? Property, plant and equipment. That is buildings and your assets and your vehicles, computers, anything except land. Are you clear? Now, when do you classify something to be your asset used for depreciation purpose? There has to be 2 things. Just understand. One, it has to be used for more than 12 months. What is the first condition? It has to be used for more than 12 months. The second condition is, look into it, it has to be used for the purpose of production or for the purpose of supply, or it can be even given for the purpose of rental. Okay. Or I can use it for self. When I use it for self, it means administration. So what are the 4 cases that I can use? For either my own production or supply, rent or administration. Are you clear? So what are the 2 conditions that we have to consider for the purpose of property, plant and equipment? One, it has to be used for more than 12 months. Second condition, it has to be used for the purpose of production, rental for others, or administration purpose. Are you guys clear with this? Are you guys clear? Now let's try to look into the second one. Now what do you mean by depreciable asset? Let's try to understand it logically, since you guys all know it. Now we are following matching concept. Which concept? What does matching concept say? That all the revenues that you earn should be matched with the expenses incurred to earn that revenue, right? Now, let's say I am buying one machinery which can be used for 5 years. That means, don't you think you are gonna be using 1/5 of the machine every year for the production? That production only is giving you revenue. So what we call depreciation is a systematic allocation of a depreciable amount of an asset over the useful life. So one of a major thing that is required for us, why land is not called a depreciable asset, is land does not have an estimated useful life. Land can be used infinitely. When you talk about a building, right? Building, you can always say, let's say a very good apartment, maximum survives for 50 years. The buildings that we build here and all will survive for 50 years or 100 years. So that's the maximum life. No matter. Land, we are talking of an empty site, right? Land can never have a useful life. It can be used infinitely, right? You can't say, you know what, land after 100 years will not have any value. But in turn, if you see, after 100 years, it will have gone 100 times more value, right? That's where land will never be taken. So what is depreciation? I told you it's a systematic allocation. That means whatever the total value of the asset is, I will be allocating it over the useful life of the asset. Are you clear? Now, let's try to understand three things. To find out the depreciation, right? We need three things very important. First thing is what? Cost of the asset. Second one is the estimated scrap value. And the third one is estimated useful life. For asset, what are the three categories? To find out depreciation, what are the three things that I require? Cost of the asset. Estimated, please remember, it is not the actual scrap value, it is the estimated useful life. And the third one is what? Yeah, the third one is what? What happened? Sorry. The third one is what? Estimated useful life, right? Now, when we are trying to find out the cost of the asset, so we need to understand all the three things carefully, because I told you, if you see, my first question is what? Cost of the asset. So we need to understand what is the cost of the asset including. Now few things, just understand what are the costs which are going to be included, what are the costs which are not going to be included. Whenever I am trying to buy an asset, you remember the inventory chapter? We found out the cost of inventory. What all did we do in the cost of inventory? Cost of purchase, cost of bringing inventory to present location, any tax which was there, only if it was credit available, I was not taking it. If credit is not available, we were considering it, right? So now the cost of the asset also follows the same. What they talk about a cost of asset is whatever you have paid for the purchase price, whatever we have paid for the purchase price, along with it, if there is any non-refundable taxes, any what taxes? If it is refundable, then you don't consider. That means it's like an input credit. So if it is a refundable taxes, then you will add it to the cost of asset. Along with it, any cost that you have incurred towards bringing the inventory to the present location. Bringing the inventory to the present location. That means your transportation cost. Now, let's look into it. Let's assume that you are trying to set up, this sheds, warehouse sheds, right? Now that warehouse shed what I am putting in, will I use it for more than 1 year? Yeah, right? Now, let's say after a point, can that shed be used lifelong? No. That means after a particular point of time, you have to replace or dismantle it. So whenever there is an asset and you know that the asset has to be dismantled later, after their useful life, you need to what? Dismantle it. For dismantling, there will be a cost. So that cost also will be added to the cost of asset. This is something new. So cost of purchase, cost of transportation, then what? Taxes, only if it is refundable, non-refundable we'll take it. And the last one is what? Any cost of dismantling I need to add it. Are you clear? Now, few things which are not going to be taken. Selling and distribution expense. Let's say for an example, I opened this ArivuPro building. For that, I did inauguration, calling all the people, and I said, hey, you know what, whatever I have spent on the inauguration will be added to the cost of building. Can that be done? No, cost of inauguration cannot be considered. If you are trying to even introduce a new product, that cannot be considered, right? Then, if you are any general administration overheads, if you look at the inventory chapter also, what did they say? Any administration charges will never be part of the cost of inventory. Now comes the last part. Look into it. Let's say you have taken loan for purchasing this asset. You have taken a loan for, so you will pay interest. Will that interest be added to the cost of asset? What did we do in inventory? What did I say?
We added all.
Wait, finance cost. Is it part of cost of inventory?
Finance cost.
Finance cost, no. Same logic here also. Finance cost will never be added to the cost of asset. Now let's say, remember this won't be asked for you guys in the exam. I'm just giving you one clue. Suddenly if the examiner gets mad and he wants to ask you. Let's say I'm building this building. It will take 3 years time. And I'm paying interest till the time the asset is put to use. Remember this whenever you get confused in the exam. Till the time an asset is put for actual production, all the cost incurred till that date will be added to the cost of asset. So that means that time I don't care whether it is administration, selling, distribution, nothing. Whatever is related to the cost of the asset, till the time it is put to use, even that interest will get added there. After that you can't. So remember, asset, once it comes to use, everything gets stopped. Are you guys clear? Are you all clear? The ones attending online? Done? Now, so we understood what you mean by cost of asset. What do you mean by scrap value? Scrap value is, that is when you are selling an asset, how much do you get by? What is the cost that you are going to be getting? When you sell an asset is what is going to be part of my scrap value. Estimated useful life? Number of years I am going to be using the asset, right? These two will be given in the question. Now, easier method of doing depreciation is my straight line method. What do you mean by straight line method? Every year the amount of depreciation that I am going to be charging is going to be fixed. The depreciation will always be calculated on the original cost value of the asset. So the formula for depreciation is what? Cost of the asset. Let's assume the cost of the asset is 10 lakhs minus scrap value, let's say 50,000, divided by useful life 10 years. So what will be the depreciation value? 9 lakh 50 divided by 10, 95,000 will be the depreciation every year. Are you clear? What is the journal entry for depreciation? What is the journal entry for depreciation? Depreciation is an expense, right? And by doing depreciation, asset value will reduce. So that means depreciation should always be debited. Asset account should, because it is reducing it. So what will be the journal entry? This will be charged at the end of every year. Are you clear? Now, what is depreciation? Depreciation is a nominal account. Nominal account at the end of the year should be transferred to profit and loss. Now see here, what did I write? Depreciation on the debit. So that means if I am transferring it, it will be the reverse. What will be the journal entry then?
Y.
Trading, that's okay. If you are trading and sitting all night, then problem. Huh?
No, 7 sleep.
Done? Now let's go further. Right? What do we look at it in terms of it now? Let's see WDV method and straight line method. We'll try to do the comparison. Okay. What was the value of the asset? 10 lakh. Let me do the depreciation for 5 years so that we understand it. This is 50,000 for 5 years. What will be the depreciable amount? By the time you open your calculator and all, we'll do 1,90,000. Okay. Now, you look into the way asset account works. Your original value of the asset will be 10 lakh. Year 1, how much depreciation you will charge? Then how much are you left with?
8 lakh.
Year 2, again you will charge depreciation of 1,90,000. So you are left with
6 lakh.
year 3, again 1 lakh,
4 lakh 30,000.
4 lakh.
30,000.
Year 4,
2 lakh 40,000.
year 5.
50,000.
Now what I want you guys to understand is, see here, my year 5 closing value is equal to the scrap value. Are you clear? So since it is equal to the scrap value, two things that we have to understand. The depreciation charged every year is what? 1,90,000. Let's assume if there was no scrap value, my asset value would have become what? 0. That means I would have charged a depreciation of 2 lakhs every year, right? So the possibility under a straight line method, at the end of the useful life, my value, that is the written down value, will be equal to either 0 or scrap value. Depreciation will always be same, and depreciation will be charged on the original cost of the asset every year. Are you clear? Now let's look at the other way around. For written down value, what happens is, let's say they say your asset value is 10 lakhs. You will be charging a depreciation of how much? Let's assume 20%. What will be the year 1 depreciation? 2 lakhs. So you are left with
8 lakhs.
second year 1,60,000. You are left with, then how much it will come? 106. No, 124. 1024, no? Hey, no. 1 lakh,
2,400.
right? Then now if you look into it, my depreciation is reducing every year, and it is not same. Here in the straight line method, depreciation was charged on what? Original cost. Here depreciation will always be charged on the written down value.
Depreciated value upon the depreciation value upon the
Yeah. Is the first question compulsory? What happens if you don't write it? You don't get marks for it. That's all, nothing else. 20 marks, you lose. 20, I think it's going to be 30 marks now. MCQs you learn.
Total theory that
Sir, for this no format and all, sir, only words we have to write and we have to.
Which one?
For depreciation, straight line methodology.
Huh?
Only you have to write that statements, sir.
No, they'll give you the. So I'm doing one question.
Journal entries also they will give.
Journal entries they'll give you.
Okay, sir.
Working note, what I did is more than enough.
Ledger also will they ask, sir?
Yeah, they'll ask.
They'll ask ledger.
If they ask you a ledger, it will be a 5-mark question. If
subsidiary.
we'll do no subsidiary books is very easy. I'll teach you. It will take. If they ask you, good only. If I would have known paper, I would have given you no. Shall we start?
Yes, sir.
Okay.
Rules of exchange also is not a compulsory question.
Now, like I told you, right now your entire format is changed. Your first 30 marks is going to be your MCQs, and then you have 70 marks. In that, the first question of 20 marks is compulsory. Then you will have 4 questions to write.
But MTP already rules of exchange.
MTP does not matter, no. MTP is no law. If you go and check any MTP paper with your previous year paper, none of it matches. MTP is only done for the testing part of it. I have never done MTP in my life. MTP questions are always tougher, and that will demotivate you guys even more. No, that's okay. Done?
Sir,
Okay.
They are asking that production output method in depreciation and also.
That and all is very easy. I'll teach you.
Production output method is there, sir.
It's there in your study mat now.
No, sir, I did not see.
Hey, it's there, there.
Okay.
I'll teach anyway. It's only 2 minutes that takes. That's all to learn that chapter.
Okay.
First, what is important we'll learn, and then we'll cover all the things. Right? So they are telling you what Jain Brothers acquired a machinery for 1 lakh and spent 1 lakh on installation. So what is the total cost of machinery?
15 lakh.
So machinery account. If I have to prepare machinery ledger account, and I have to prepare depreciation ledger account. Guys, the answer is there in the study material. So I'll only do 1 year entry so that you understand. So machinery account, how much did you buy? 14. Then again you spent 1 lakh. What is the journal entry for purchasing an asset? Machinery, to bank, 14 lakhs. Machinery, to bank, 1 lakh. So totally you have spent how much?
15 lakh.
15 lakh rupees on your machinery. Are you clear? Then depreciation, how much are you writing off?
10%.
What is the journal entry for depreciation?
Depreciation ratio.
Okay, first thing ever, try to look into it. What's your date? Always look into it. What is your date? What is the date?
1st of July.
1st July. When is the account ending?
31st March.
6 months.
That means I should be charging only for the purpose of how many months? July, August, September, October, November, December. 6 months. So depreciation will be 15 lakh
10%.
into 10%.
Into 6 divided by 12. 75,000.
72,000.
Understood? In the excitement, please don't write for the entire year. Please check the dates. Guys, the current CA foundation pattern, I'll let you guys know what's the examination thing. Even if it's not MCQ, you'll have a 30 marks theory. So don't break your head whether it will be an MCQ or other stuff. If not MCQ, they'll give you a full-fledged theory for 30 marks. So you need to learn theory irrespective of what happens. Right? You please don't ever try to go in and prepare with a certain set of mind, because this is the first attempt. Still there is no clear-cut format told for you guys. If you go and check anywhere, nowhere they have said it's going to be only MCQ, anything. MTP is never a format for your actual exam. So please don't ever go with that belief. Right? So I know you guys are all too smarter. You do all the research. We have been here for last 13-14 years. Some respect you give it for what we know. Right? So I'll tell you guys when it's the right time, when we know clearly what is the format. As of now, it's going to be 30 marks theory no matter what happens. Right? What is that theory also I'll tell you towards the end of the class. Are you guys clear? So, what will be the journal entry for depreciation? Depreciation account debited to machinery 75,000. Here I will write by depreciation 75,000. Now what did I say? Depreciation at the end of the year I should transfer it to by P&L. What is the closing balance? 14 lakh 25,000, right? So your 15 lakh. Are you all clear? Right? Next year, how will the machinery account will look? To balance 14 lakh 25. To machinery. How much will be the depreciation, madam? Depreciation is for 1 year now. 75,000 was for 6 months.
1,50,000.
What did I say? Depreciation will always be calculated under the straight line method under or the original cost. Original cost is what? 15 lakh
15 lakh.
into 10 by 100, and now it is 12%, 12 months. Therefore, it will be for 1 year. To machinery.
1,50,000.
Are you all clear with this? So I have done this question only to make sure that you understand the concept of time. That is very important for your paper, right? Now let's look into the second question, which is on the WDV. What did I say? WDV method will be depreciation will be charged on the depreciable value, not on the original cost. A firm purchased machinery for 582, spent 18,000 on its erection. That means what's the total cost of machinery?
5
6 lakhs.
6 lakhs. When did they acquire? On 1st January. Right? So what's the journal entry? Machinery to bank. This were the purchases. Then on 1st July, another machinery was purchased. When did he purchase? On 1st July. Is it in the same year?
Yes.
So what will be the journal entry? 1st July, to bank, 2 lakhs, 2 lakhs. Depreciation is provided at the rate of 10%. Now you have to show a working note. That is for asset 1,
Asset cost.
asset 2. What was the cost of the asset?
6 lakhs.
6 lakhs.
2 lakhs.
2 lakhs.
The next one was
2 lakhs.
2 lakhs. So what is the depreciation price here?
3%.
10%, which comes to 60. But asset 2, when did he purchase?
July.
On July. That means for 6 months. How much will the 6 months come to?
10,000.
So what will be the total depreciation?
70,000.
70. So what's the written down value? 5 lakh 40. Here 1 lakh.
1,80,000.
Is everyone clear?
Yes, sir.
Okay. Now on 1st July 2021, the machinery purchased on 1st January 2020 became obsolete. So when did it become obsolete? Okay, now this is where the concept comes in. See here, 1st January 2020, the asset price 3 lakh.
86,000.
One of a common mistake that the students do is, see, the asset has been used from 1st January to 1st July. So you need to charge the depreciation for that 6 months. So how much will be the 6? We are doing which method?
WD.
That means depreciation will be charged on what value?
5,40,000.
5 lakh 40,000. 27,000.
27,000.
So you charge the depreciation. What is the WDV value on the date of sale? 5 lakh
30.
for 13,000. And you sold it for So what is the loss? 1 lakh.
27.
Okay. Now see here. This is where depreciation gets little trickier. Everyone just look into it. Now on 1st July 2021, first thing I have to do is charge the depreciation entry. I should charge which entry?
Depreciation.
For what value should I charge depreciation? 27,000. Depreciation amount is how much? 27,000. So my journal entries here, buy depreciation on what date? July 1st, 27,000. Right? Then when you are selling this asset, how much are you selling it for? So by bank account 3,80,000. Then if you are making a loss will come on the credit side. If it's profit, it would come on the debit side. Right? Now always remember this as a cross verification. This total value, this 3 total value should be the value as on 1st January. It should be as on what date? 1st January. So how much does it come to? So count this 3. How much? 5 lakh. Are you clear? Right? Then I have sold this asset. Now what is the new asset I am getting? And the same day a new machine was purchased for 4 lakh. Now I have asset 2, which is 1,90,000, and I have asset 3, which is 4 lakh. 4 lakh I have to charge depreciation, which will be worth 20,000 for 6 months, and this will be 10% for the entire year, which will be 19,000. Right? So what will be the total depreciation? 20 plus 13. So that will be the balance carried out. Understood? If this question comes, you will get it for 10 marks. And if you see a question like this, you should dance in the examination. It's a lottery question. You have both part of it, but very rare if they ask you a question like this. Like they tell in Kannada, mache irbeku. That's how these questions are. Clear till you? You know, one of the best things that happened for my exam was whatever I had read chapters, same paper came. Whatever I had read. And I'm saying it has happened for me all the exams. Not just foundation or intermediate, all foundation, intermediate. I am a more believer of an intuition. That is, I never ever believe that I will fail. Never I will believe that I will fail until and unless the result comes and shows I am going to be failing. And I have teacher and all. Right? Now I have only limited time. And I think I can read and understand. That is something I know, that if I read once, I can understand and make a meaning. It's like if I'm not trying so much and not understanding, I believe that okay guys, other guy also won't do. If I am gonna fail, according to me, because I am in that 90% category, so according to me, if I am not getting it, that means below me everyone will fail. That's a confidence. Right? With that, what I did, I always used to focus on all the chapters which I find it easy. Every question which is easy, no matter what, I should not go wrong with it. Paper will always be 30 marks easy, boss. Remember this. 30 marks, paper will be easy. You get that 30% marks right. In the medium, even if you get half the questions right, you are done with your 50 marks of your paper. Boss, who wants you to do difficult chapters? But our student psychology is whatever is difficult is where we focus on. And I've read all my difficult chapters after I've become CA. All the chapters I'm telling you, rectification, your consignment accounts which was there. I did not even know what consignment account was when I was a foundation student. didn't understand, ignore. Ignore. Don't bother so much. But what I know it really well. I'm saying whatever I know, even if you wake me in my dream, I'll tell you, hey, depreciation, this is the chapter will learn. Right? So get that confidence and you should be able to clear it off. And when you believe yourself, hey, you know what, I've done well, no matter what I'll pass, don't ever doubt yourself till the exams are over. Believe that if it's gone bad to you, it will go bad for everyone. If you see the paper and you feel that boss, paper is tough, that means it will be tough for everyone. Right? Almost 50% of the students who come in to write foundation exams are not prepared at all. And even more important for you guys to understand is, not everyone will be good at all the 4 papers. Boss, I only have to make sure that all the papers I am passing, 2 papers I am scoring better. You will pass. You don't have to score 100 in all the papers. For me, maths is difficult. I have to accept that maths is difficult. That will make my preparation better. That means I know I have to put little bit more efforts on my accounting paper. Right? Accounts. Okay, now I know I have to score 60. What is my strategy for 60? See, these are the things that can be done only individual level. It cannot be done by counseling or other stuff. I'm just telling you the way it has to be taught so that you can plan around. If you are coming and getting stuck, hey, you know what, maybe this is the way I'm thinking, am I on the right direction, I can help you out. But I can't, because my thinking is different, right? I can read this entire book one day before exam. You give me like 4 or 5 hours, I'll complete this book and write the exam, right? And I'm talking of any subject, even if it's completely unknown to me too. You give me like 4 or 5 hours and you give me one book like this, I'll read and write an exam. And no matter what, I won't fail. And I can assure you guys, I'll not fail. Right? And I'll find out a way how to make it happen, how shortcuts has to be done, something or the other. But I'll never believe that I'll fail. And I'm saying that's my confidence, right? But your confidence may be, hey, you know what, I need some time to do it. Maybe I require. Know your strength and know your weakness. Trust me, CA foundation and all, you should not even fail. You should not even fail. With all the scores that you guys have got, 90, 80% and all, boss, 50% you have to score to pass. Law will be little challenging because of your English. Again and again I'm saying, spend little time on law. And if you guys are still stuck with it, give me a call. I'll help you guys out with how to go about with your preparation. Right? Done with the methods. Now, I want you guys to understand the next set of methods. And all the methods I'm going to be teaching are going to be the same method of doing the values. It can be, I'll tell you what are the different methods. Method 1, machine hour method, production units method, then there is depletion method. All these 3 methods work, let's say 2000 hours. This machinery can work for how many hours? Year 1, it worked for 600 hours. Year 2, it worked for, let's say, 700 hours. Year 3, it worked for 500 hours. Year 4, it worked for 200 hours. They are telling you find out the depreciation. How do you find depreciation? It's very simple. 10 lakhs into that year, how many machine hours did you work? 600 divided by the total number of hours, 2000. That will come to how much? 3 lakh. Second year, 10 lakh. Then next will be 2.5 lakh. Last one will be 1 lakh. Clear? This is how you calculate depreciation. Now instead of machine hours, if they say this can produce 2000 units, this can produce what?
2000.
So year 1 they produce 600 units. So what will be your answer?
Same.
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 That's all is your production unit method,
Okay,
right? Or depletion also is the same. Depletion method will be used in case of minerals like core, coal, iron ore and other stuff. So what happens there is, usually when the government gives you an auction, they will say you can extract, let's say 20,000 tons of coal. First year you extracted 10,000 tons. How will you charge depreciation? 10 lakhs into 10 divided by 20, that is 5 lakh rupees will be the depreciation. That's all the three methods are. People, the moment they see the term, they get confused. The logic is this. What is the logic? That whatever is the total number of units, take it as the denominator. How much ever they have produced it, take it in the numerator. Are you clear? Okay. There is something that I missed out in the notes. I want you guys to look into it. It's the illustration number 8. I want you guys to just look into it because this is something which can be asked in the examination. Illustration number 8. I have missed out in the working note. So it's there in the study material. Everyone just look into it. The illustration number 8. Right? Now, I want you guys to understand. This is very, very important. What is the difference between a depreciation and a provision for depreciation? What's the difference between depreciation and provision for depreciation?
depreciation is reducing the value of assets. Provision is making the
Depreciation is reducing the
value of assets.
value of asset. In the provision for depreciation,
We are creating the
asset value remains as it is,
It is creating the value.
and depreciation will be created as a provision from your profit and loss account. So please remember this. So asset value will not change in case of what? Provision for depreciation. What is going to change is what? The transfer will happen from which account? From the profit and loss account to P&L. Now, I want you guys to just look into it. How does this whole thing work? Just see the sequence. I'll take one particular question. I'll just make a question myself and just understand it. Let's say you purchased an asset on 1st January 2021 for 5 lakhs. For how much? Then on 1st July 2021 you purchased an asset for 7 lakhs. Then 1st January 2022 you again purchased an asset for 3 lakhs. Let's assume that the depreciation is charged at 10% per annum on straight line basis. Whether straight line or WDV, you know how to calculate, right? So let's just try to understand. Now on July 2022, let's say one asset, the asset which was originally purchased on January was sold for 2.5 lakhs. Was sold for how much? 2.5 lakhs, and the balance will continue. Prepare accounts for the year 1 and year 2. You understood the entire question? First machinery was sold on July 2022. Now let's look into it. How does the machinery account look? Machinery account, and then you have your right. 1st January, what will you write? To January, to bank 5 lakhs. Then to July, to bank 7 lakh. 7 lakh. If you have to charge depreciation, What was the journal entry I was passing earlier? Depreciation account debited to machinery. But whenever I am maintaining a provision for depreciation, what I do is I will not charge it to the depreciation. See here, I'll be doing an entry like this: provision for depreciation account and in depreciation account. Earlier the journal entry was what? Depreciation to machinery. Instead I'll write depreciation to provision for depreciation. How much is the depreciation amount? Look into it. For 5 lakh, 10%, which is 50,000. Then for 7 lakh, 10% into 6 by 12. I purchased it on July. 6 by 12, which is coming to 35,000. Therefore, what's your provision for depreciation? 85,000. Here I will write by depreciation 85,000. Are you clear? Right? Now, whatever is charged to depreciation, what did I say? It should be charged to by P&L 85,000. Now, provision for depreciation will be balanced. Did you understand this portion? Now, I want you to see how the balance sheet will look. If I was doing depreciation, my asset value was 5 lakhs plus 7 lakhs, 12 lakhs minus depreciation 85,000. I would have written it as 11 lakh 15,000. This is how I would have done if I am maintaining a no provision for depreciation. If I am maintaining a provision for depreciation, what will happen is asset account will be 12 lakh. Then I will write it as provision depreciation 85,000, 11 lakh. Now you might be asking, sir, both are looking the same. What is different? Now I want you to see, let's assume the second year depreciation was 50,000. Second year depreciation was what?
50,000.
Now how will the second year look? Look into it. If no provision was maintained, asset account 11 lakh 15, depreciation 50,000, so it will come to 10 lakh 65,000. This is when I am maintaining no provision. If I am maintaining provision, see how it looks. Asset account debit 12 lakh. Provision for depreciation will become 85,000 plus 50,000, 1 lakh 35,000. So the amounts will remain the same. What is more important is for you guys to understand this. The asset value under the provision of depreciation will never get reduced. It will continue to be same as it is. Are you clear? Is everyone clear till you? Done?
So, what's the benefit of
No, no. So what happens is when they are trying to do this, they will clearly know what is the amount which is going every year, so that when you have to replace the asset, you know how much has been transferred towards it. Because provision, when you are doing it, it gives you more control on the asset. That's all. Till here, are you guys fine? Right? Now let's get back to the question. Guys, are you all clear? Kavya, Jayaprada, Raj. Done? Now let's come to the last part. Now see the year 2 what happens. Have I carried the depreciation, this what is a provision? Now by balance, how much? 85,000. Now see here, my asset value by balance 12 lakhs, to balance 12 lakhs. Okay, now this is the most important thing. What did I say? On 1st July, how much did you buy? So I'll write to bank 3 lakh. What are they telling? They sold the first asset of 5 lakhs for how much? 2.5 lakhs. Let's do the working note, right? Asset on 1st January was how much? 5 lakh. How much was the depreciation? 50,000. So this was 4 lakh 50. Asset you are selling on what date?
First July.
So that means you have to charge depreciation for 6 months, which is how much? 25,000. So how much is it coming to? 4 lakh 25,000, right? How much did you get by selling it? We wrote the. How much did you get by selling it? 2 point. So you made a loss of. Okay. Now see here, whenever a provision for depreciation is maintained, when an asset is sold, when what? Asset is sold, the face value of the asset will be transferred to the disposal account. I'll write by machinery disposal. What was the original value of the asset which you disposed? I'll write it as 5 lakh. By balance 10 lakhs. Are you clear? Whatever is the original value I purchased, I'll write it as by machinery disposal 5 lakhs. Are you clear? Now I'll open an account called as machinery. In machinery disposal, there I wrote as what? By machinery disposal. Here you will write
To machinery.
to machinery 5 lakh. Okay. Now what you need to understand is, whenever an asset is sold, whatever is the depreciation on that asset has to be charged first till the date of sale. How much was the depreciation on it? To provision, we calculated now, no? 25,000. We just did a calculation, no? Depreciation 25,000. So this is on the asset sold. I am charging a depreciation of how much? 25,000. The moment I charge it, I should be writing here as what? By depreciation 25,000. Now, what is the total depreciation on the asset sold? What is the total depreciation on the asset sold? 75,000. This I will transfer to machinery disposal 75,000. Okay. In layman term, what it means is, was whenever an asset is sold and you are maintaining the provision of depreciation. Please remember this all your life. Whenever what? You are maintaining a provision of depreciation and the asset is sold, the entire face value of the asset will be transferred to the machinery disposal. The total depreciation till the date of sale will again get transferred to the machinery disposal. Are you clear? So I have transferred the face value, yes or no? Have I transferred the depreciation also? Entire depreciation 50 and 25 done. So here I will write by provision for depreciation 75,000. Are you clear? Guys, are you clear? Once I have done this, look into it. How much did you get by selling it? 2,50,000. Now do the math. Here it is 5 lakh, here it is 3,75,000. That means what is the loss? 3,25,000. Are you clear? If you guys understood this, please today itself go and solve the illustration 9 in your study material. Raj, Kavya, John, are you guys clear? 1 lakh? Okay. Guys, are you clear? This is one you can expect for 10 marks. This will be like a full-fledged question with a provision for depreciation. Clear till here? Right? So we are done to it. Okay, let's. Okay, read this question. Read this question. We are done with all the methods. So now we are doing the last 2 bit. Which is the last 2 bit? Change in the method of depreciation and change in the useful life. And then sale I have already completed. So I am just doing the change in the method. Now look into it. Anshul commenced business on 1st January when they purchased a plant for 7 lakh. They adopted the depreciation as 15% on diminishing value basis over the years. Their purchase of plant has been on the other 2 days. On 1/1, it was decided to change the method of depreciation from what? WDV to straight line basis, and the useful life is 6 years, no scrap value, and 10 years for the assets purchased on 1/1/2021. Clear? So now let us try to look into it. I am trying to find what, on which date I am supposed to be doing the accounting. So the rule that you need to understand is, I need to come up with the opening balances on 1/1/2021. What is the rule that I have to find out? Whatever is the year that I am going to be closing, I need to find out the opening balance. How many assets are there? Let's look into it. I have one asset which is purchased on which date? I have one asset which is purchased on 1st January 2017 for how much? 7 lakh. That means, can I say I have to charge 17 to 18, 18 to 19, 19 to 20, 20 to 21, 21 I will get the opening balance. Are you clear? When did I purchase the second asset? 1/1/2018 for how much? So now I have to charge for 18, 19, 20, right? So 21 I am supposed to be finding the opening value. Now in this both, which method I will apply? WDV. Clear? So see here, there 7 lakhs. Depreciation for the first 17 was 1,50,000. You have 5,95,000. Again you will apply depreciation because it's WDV on this. Then 19 you will apply. 20 you apply. 21 I am supposed to be getting the 2020 closing balance will become the opening balance of 2021. Same thing, see here, 18 I got, so I'll apply depreciation for 18, 19, 20. So 21, this is the opening balance. The next one, anyway I don't have to care. Why? Because it was purchased on. So the value will be on this only. Clear till here? Now what are they telling? Whatever assets you have purchased before 1/1/2021, they want you to depreciate for how many years? 6 years. So what you will do, whatever is the balance this date, right, divide by 6. Whatever is the value on this date, divide by 6. The value as on 1st January, whatever is there, divide by 6. 60,000. whatever is again purchased on 1118, you will divide by 6. Correct? And whatever you purchased for 2 lakh, how many years are you going to depreciate it by? 10 years. That will come to how much? 20,000. 2 lakhs for 10 years will be 20,000. So that will be, this will be the total depreciation. Are you guys clear? Are you guys clear with it? That's all is the method of change. So the rule is what? See here. How did I say the steps is? You will find the opening value first. Whatever the opening value is, you will apply the change from that day onwards. So let's say if that was straight WDV, instead of that it was straight line. So whatever this rate is, you will apply, let's say 10% on that value if it has to be changed to WDV. Are you clear? Right? This again you get is for a 5 marks question. Please don't miss. You will end up getting, according to me, 1 5 mark question from the depreciation. Please make sure that you get it right. Now see this part. This is the method of change in depreciation. So they expected first to be 10 years. Then they expected it to go for some more year. Look at, a machine is costing 12 lakhs, is depreciated for 10 years. And having 0 residual value. So like this they did it for 3 years. So what will be the depreciation? If you are doing for 10 years, per year depreciation will be how much? 12 lakh divided by 10, how much? 1 lakh 20,000. So 1 lakh 20,000 they did once. So they are doing it for 3 years. That means for 3 years what will be the total depreciation? Straight line method means what? Depreciation will be the same. That will be into 3 lakh. 1 lakh 20 into 3 lakh 60,000. So what did I say? Whenever the change is happening, find out the opening value. 12 lakh minus 3 lakh 60. So my opening value is what? Now what they are telling, at the end of the 3rd year, the machine was revalued upward 60,000. Upward 60. That means what? 8 lakh 40 became 9 lakh and reassessed the depreciation for 9 years. So divided by 9. So the new depreciation will be 1 lakh. Right? If they say instead of 9 years, if they say that 8 lakh 40 was there, they decided it will be only for 5 years. So I'll just divide by 5. That's all is this you will get for 2 marks question. All of this. Are you clear till here? So we have done. Okay. Just I want you guys to understand how does the revaluation thing work. Now let's say this is just a theory question which is gonna come in. Questions they have not asked till now, but if they ask you also, just to understand the logic, you should be able to do. Let's say the asset was worth 1 lakh. Asset was worth, you appreciated it to 1 lakh 50. So what is the revaluation profit? 50,000. This will be credited to P&L account. When I say owner's fund, it will go to the revaluation account and sit there. Let's assume that the next time it again got increased. So first time also it was increased, second time also it again got increased. That means whatever increase happens will again go to the P&L account. Now in the following year, let's assume that you wanted to depreciate your asset by 1 lakh 20. You revalued it from 1 lakh 50 to how much? So what is the loss here? This 30,000 will not impact the face value of the asset. You will reduce it from the revaluation profit. Are you clear? Same rule. Let's assume that the asset was worth 1 lakh. You revalued it for 80k. You revalued it for what?
8,000.
So what is the revaluation loss?
20,000.
20,000. Next year you revalued it for 90k. You revalued it for how many k?
90k.
What is the profit now?
10.
Because the previous year it was 80 became 90, you made a revaluation profit of what?
10.
This 10 will be adjusted towards the previous revaluation profit. So any revaluation profit or loss, any subsequent increase or decrease will be adjusted. Let's assume that the revaluation profit from 80 you made it as 1,10,000. 80 you made it to what?
1,10,000.
How much was the revaluation profit? 20. Now what was the revaluation profit?
30.
30. So to the extent of 20 you will adjust it in the revaluation loss. 10 will be taken as a revaluation profit. Understood? That's the whole theory which is there. Okay. Last part, which is part of your amortization, which you will get a theory question. Just read the theory part of it on the amortization, intangible assets. Only thing that I want you to teach in the amortization of asset is, in amortization we follow straight line method, but we call it as write-off. We don't use the term as what? Depreciation. We call the term as amortization. Amortization means write-off. Now let's assume that you have spent 3 lakhs on an asset which you can use it for 10 years. The copyright is for 10 years. Per year what will be the write-off amount? 30,000. That's all is the chapter. Write-off. Clear? Entry will be the same. Amortization to your intangible asset account. There it was what? Depreciation to asset. Here it will become amortization to asset. Are you clear? This is again a 2-mark question. Theory you can expect for another 2 marks. So just make sure that you read the theory. Yeah, straight line method only. Are you all clear? So we are done with the chapter of depreciation. Like I said, the weightage will be 2 to 5. And if you get a 10-mark question, you can dance in the examination hall. Done? Okay, let's start the second topic, which is your single entry system. Now when we are talking of a single entry system or an incomplete records, right? Now there are 3 kinds of questions that you can expect. Right? This is again a question which you can expect for 10 marks. Probability of getting is very high. Probability of getting your incomplete records is very, very high. One, because it's part of the new syllabus and lot of them know that you have not going to be studying this. So, but the chapter is actually quite easy if you just have to apply the logic of it. Now, first thing, there are 3 kinds of maintaining your single entry system. One, let's try to understand who are these guys. Let's assume you are a shop guy. You are running a shop. He does not have time to maintain, keep an accountant, maintain what cash is coming or right. Now, literally look, if you go to the shop and check, right, in those kaka shops or the smallest one, he would have had one book where he will write to whomever he has given on credit and to whom all he has to make a payment. He will be never recording every single transaction. She paid 5 rupees, I paid 10 rupees. He will not record all of it. He will only look into how much should I get, how much should I pay. Right? If your mom or dad would have gone and taken some credit in the local shop, maybe you will realize this because we have all survived through that mechanism only. Right? Now here he only is maintaining what? To whom he has to give money, to whom he has to receive money. That's one kind. The second kind is he will not maintain anything else except bank account and your personal account. That is, we are now talking of the Paytm Zamana, where Paytm is you're getting to know how much cash is coming in because of the UPI, along with it the personal account. The last one is where you are maintaining all the accounts. It does not matter when you are maintaining everything, boss, then I can pretty much prepare the entire accounting system out there. Now, what is that we are going to be looking at? Just apply the logic of how this chapter works. It's actually an easy chapter. Lot of them, just the way they teach it, they confuse it, but it's actually a very simple chapter. Now, let's assume I started the business with 1 lakh. End of the year, I'm having 1,50,000. I started business with how much?
1 lakh.
End of the year, I'm having a capital of how much? That means can I say profit is 50? Simple, right? That's the easiest method of doing an incomplete record. Now I am going further. I know the balance of my debtors, I know the balance of my creditors. That means opening balance, closing balance of debtors and creditors. Now if I know the opening balance of debtors and creditors, with the help of it, can I find out how much purchases or sales I've done to them, or how much cash or cash I've paid or received from them? Now the second case that I'm going to be doing it in incomplete records is, I will have cash accounts. I'll have to find out, now see here, what is the debtors amount and what is the creditors amount that either I have received or I have paid to them. For that I have to open a debtors and creditors account. That is the second kind of question. The third kind is, I'll have cash, I'll have debtors, I'll also have assets details, I'll try to charge depreciation. So once I do that, now look into it in your accounting equation concept. What is?
So are you taking second part?
Yeah.
You now
Yeah.
started it.
Yeah. Why, what happened?
Oh no, wrong answer asked.
So what are we now looking at? We have looking at what? I have assets value, I have liabilities value. If I know assets minus liabilities, don't I get capital? So if I have opening value of asset, can I charge depreciation and find out the closing value of asset? Asset, if I have purchased, I will add something. If I have sold something, I will sell something. Minus depreciation, I will end up getting the closing value. So I will find the closing value of asset. I will find the closing value of liability. If I know the closing value of asset and liability, can I find out the closing capital? If I know the opening capital and closing capital, can I find out the profit for the year? That's the three methods what we have in incomplete. One, where you will only have capital accounts. Second, you will have capital and debtors and creditors balance. The third one is you have assets details and liability details. Along with it, you have to find the opening and closing. Now, in this question, we are not going to be doing balance sheets. We'll do something called a statement of affairs. What do we do? Now, what do you mean by statement of affairs? And why do we call it a statement of affairs and not a balance sheet? Because I'm not preparing all the ledger accounts. Because I'm not preparing what? All the ledger. I am trying to do is find out only the balances out there. So it's not a foolproof that I've recorded every transaction. I'm also assuming that the difference in the capital is going to be my profits. So that is the reason I'm not going to be calling it as the balance sheet. I'm calling it as what? Statement of affairs. Are you clear till now? So pure single entry, I'm maintaining this. Personal and quasi I'm maintaining all the things. Are you clear? Right? Now see this first part. Rakesh started a business with 1 lakh capital. He was following information was available in the single entry system. I have on what date? He started business on this date, and on 31st March he was following the single entry system. Now what is this which is going to be important for me? Why is this going to be important for me? I know this is my opening capital, and all the information they have given it from here will all depend for closing capital. Are you clear till now? Are you guys clear till now? Right? Now let us try to find out what is going to be your closing capital. What's going to be your closing capital? Right? Now if I look into it on the closing capital, what all I have, see here, how do I find the closing capital in this case? I have a cash balance, I have an asset balance. Receivable is an asset or a liability? Machinery is a, so this is a, so if I reduce all of it, what will I get the closing capital as? Just use your calculator. So sorry, I still have other things. I have loan from bank, I have drawings made during the year. Right? Now see here, what I do, I know the opening capital was what? 1 lakh rupee. I'll try to find the difference between assets minus liability. I'll find the difference between the... so what all assets I have? Cash balance, inventory, debtors, machinery, creditors, then I have a loan from bank. So I'll find the difference, which will be the closing capital. Clear till now? Now let us try to understand this part, which is important. What is going to change from opening capital to the closing capital? What is going to change from opening capital to the closing capital? Any additional capital plus profits minus drawings should be equal to the closing capital. Now look into it. My opening capital in the question was what? 1 lakh. And the closing capital I found out was what? 1 lakh 32,000. Okay. Now, did you bring any additional capital in the question? This was 0. What was the profit during the year? That we don't know. We are supposed to find out. What is the drawings during the year? 24,000. So I can write like this: 1 lakh minus 6 plus 6 minus 24,000 is equal to 1 lakh 32,000. So if I move this here and there, x will be equal to 56,000. That is my profit. You understood? This is the first kind of question. The easiest what you get. This you get will be a 5-mark question. So how do we do this question? I told you opening capital will be given. You will take the closing capital. How do you find out the closing capital? Prepare a statement of affairs. How do you prepare a statement of affairs? Assets minus the liabilities. Assets minus the liabilities. You will find the closing capital. You will find the closing capital. Once you have a closing capital, then I am going to be applying the equation as what? Opening capital plus additional capital minus drawings plus profit is equal to the... So you try whatever is missing in the question, you will take it as x. So usually it will be the profit, because the objective is to find out the profit. So you will take the profit of x and substitute everything, you will end up getting the answer. Are you clear? Now let's come to the second kind of question. This is basically a case study kind of a question. This is again very rare if you get it, but if you get it, it will be on the tougher category of the paper, right? Now see here, the income tax officer on assessing the income of Moti for the financial year 2021-2022 feels that Moti has not disclosed the full income. He gives you the particulars of assets and liabilities on 1/1 April 20 and April 2022, right? Remember this, beginning of the year, beginning of next year is always the closing balance of the... So that means I have data on 1st April 2020 and I have data on 31st March 2022, right? Now they have given you the assets and liabilities value on 2020. They have given you the assets and liability balance on 2022. Now if I know the logic of what I have started as a chapter, what did I say? What will change between the capital, additional capital, drawings or profit? Now what you are supposed to find is you have to find the opening capital and the closing capital. Okay, so you will do the opening statement of affairs and the closing statement of affairs. Difference between both the capital will be the profit. Difference between both the capital will be what? Profit. This profit you will check with the declared profit. Whatever profit this you are getting by working note, you are going to be checking as per what is submitted under the Income Tax Act. If both are same, good for you. If both are not same, then there is a difference. Income tax officer will file a case against you. Understood? This is how we are going to approach the question. So every time they give you some basic data, please always use your brain to say, hey, you know what? Do I have opening capital? I have closing capital. That's all we are supposed to find out. Do I have opening capital or the closing capital? If I know the difference between opening and closing capital, I'll find the profit. That's all is your incomplete records, right? Now see this question. See this question. Cash in hand, asset, 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 liability, liability. So if I do all of this, will I get the opening capital? So see here, all the assets minus the liability, I got the opening capital as 3,13,000. Now next thing, yes, again assets, assets, loan to Moti Brothers, then you have a liability. So again you will get the closing capital. The difference between us opening and closing should be what?
Same as that.
First, the difference between opening and closing should be what? The profits. Now check what is this coming up to. Okay, how much? 2 lakh? 2,52,000, right? Now let's see further. During the 2 years, he has withdrawn 4,000 per month
2 years.
for 2 years.
24 months.
That means for 4,000 into
24 months.
24, he has withdrawn. If he has withdrawn, should the capital go down or go up? Less. Now I am trying to find the difference of capital. That means what? It should get added to the capital, right? It should get added to the capital. Guys, if you get confused with it, don't even break your head. What was my opening capital? 3 lakh. Add additional capital. In this question, I think it's nil. Minus drawings. How much is the drawings?
96,000.
Minus 96 plus profit. I don't know the profit. I'll write it as X. Should be equal to 5 lakh 65,000. So how much is it coming to? Now do the math. 2,52,000 plus this one. So it will come to 3,48,000. How much has it declared in the income tax office? 2,28,000. Therefore, how much income he did not declare to the government? 1,20,000. Understood? Is it easy till now? The online folks, is it easy? So this is the first two kinds of question. Understood how do we do the first two kinds? Now let's do the last question. Now this is the question where they will be giving you all the missing data. You are supposed to be finding out the missing data. Now the simpler rule of all of this is we need to be little strong about our ledger accounts. When I am saying ledger accounts, why am I telling you this is? You should be knowing what comes in the debtors account, what comes in the creditors account, so that I know that I can balance it out. You will be asked to do debtors account, creditors account, max to max cash account. Max to max which account? If I do all these three, automatically I'll end up getting the receipts, payments, opening assets, closing assets. I should be able to find out the closing values. Are you clear? So this question is the last question I will be doing on the incomplete. Just look into it. From the following data furnished by Mr. Manoj, you are required to prepare a trading and P&L and the profit and loss account. When can you prepare trading and P&L account and balance sheet? Only when you have all the double entry system. That means it is more or less like I am doing the final accounts. We have already done final accounts. So now I have to find out the closing values. Let's try to look how do we work. For doing, if I have these two data, what does creditors imply for me? Oh yeah, don't kill. Debtors implies you have outstanding, you have assets, inventories, cash in hand. Now see here, you don't have what balance? Debtors.
Opening balance.
That means I know the first account I'll be preparing is the debtors account. Let me just check in the entire question. We'll go one by one, don't break your head. We'll go one by one and say, boss, I know incomplete accounts. I have to make debtors, I have to make creditors and all other nonsense data, whatever is. So let's go one, debtors. Let me just check in the entire thing, what all will affect my debtors account. Cash and discount credited to debtors. Credited to debtors means what? You have received from credit. Sales return, should it come? Bad debts, it should come. Sales, they have given you, but debtors will only have
Credit.
okay. So I have to check, do I get any data of the credit sale? If not, I'll tell you how to do it. Discount allowed by this one won't come, this one won't come. Realization from debtors paid to bank, right? That means this is the cash received. Then you have cash purchases. I am doing debtors, right? So I have, let's go to the debtors account, look into it. How do we calculate, right? Now I have 64,000. In that 64, they have said cash received is how much?
62.
That means discount will become what? Sales return they have given you, and they have given you the bad debts, right? So then you will find out the this much as you given. Now when I come to the debtor side, there are two parts. If you see the question, I don't have data about cash sale, credit sales, nor I have a data about the opening balance. Usually one of them will be there. In this question, what has happened? Both credit as well as the opening balance is not there. That means what happens is, the only way that we can find out doing this is by doing the receipts and payments and your bank account. This one, did you understand? Are you clear? So I will have to find out both the things. We'll come back later. So I have entered all these things from the debtors account. Done. Let me go to the creditors account. Let's just check what all will come in the creditors for this. Let's just look at the creditors account. What all will come in? Opening, closing. Then what else is there? Discount allowed, purchase return. Then will this come? Cash purchases won't come, right? Only the. So I have very simple creditors ledger. Can I do that? So if you do creditors ledger, you get to your 1 marks. So let's go to the creditors ledger. See here, you have opening balance, closing balance. Sorry.
Balancing figure is purchases.
Yeah, the balancing figure is purchase. No, I think they have done wrong. So yeah, the balancing figure is purchases. So opening balance and closing balance was there. Money received from bank is there, discount is there, and return outwards is there. So automatically your balancing figure will become purchases. So I have closed the creditors account. Is everyone clear? So I am done with creditors, I am done with debtors. Now see here, typically what I do is whenever I have data like this, sundry expenses outstanding, opening, closing, then you have
Cash purchase.
cash expenses. So what I try to do is I generally write only one working note. That will be expenses during the year will be opening outstanding of the last year plus cash paid in the current year minus outstanding of the next year. So in this case it will be what? 600 plus 9570 minus 330. You want, you can make a ledger account also, or else you can just write it. How much are you getting? How much? 600 plus 9570 minus 330.
Plus 3.
Sorry, I made a mistake. So your expense paid,
957.
how much was it? 9570
70.
minus outstanding of the previous year 600 plus outstanding of the current year, which is 330. So what's the expenses for the year?
9,300.
So this is your again 1 mark working note. Done. So 3 working notes we are done without anything. Now let's come to the, so we are done with this one, right? Now opening data I don't have, closing data I have of the balance sheet, then I have the cash opening balance and the closing balance. So I will make the next account called as the cash account. Next account I am going to make is what? Cash account. Now let's look into all the expenses and check what comes in cash, what does not come in cash. Cash in and opening balance, closing balance. Cash has what? Debit balance. Whether the cash and discount creditors will come, because I already have this. This anyway will come in. Next, bad debts, sales, cash and credit, will it come?
Cash. Only cash.
Only cash has to come. So I have to find out where is that cash expense, cash sale, right? This also won't come. Additional capital paid into the bank, cash purchases, cash expenses, paid by check, drawings, paid into bank, opening balance. So all of this will come in. Now when I open my cash and bank account, see here, I have all the data, opening balance, credit. This one if you want you can write it, which is your contra entry of looking into it. Otherwise you can just ignore it, no issue. You can give a note because you are doing a combined one, otherwise you can do it. Debtors, capital account. Now when you do all the thing, now the balancing figure what you have, the amount difference is actually, if you see, I don't have the data of the cash sales. I have data about the money received from debtors. So what is the money received from debtors? This will be basically your credit sale.
Credit sales.
In that credit sale, what have they paid? Are you clear? So you are getting how much? 4,600. Now once I do the closing balance, everyone see here. Okay. I'll come to the sales value. Cash and credit sales is how much? 71,810. In that, if I remove the cash sales,
Credit sales.
if I remove the cash sales, what do I get?
Credit
I get the credit sales. So now once I get a credit sale, where I will go? I'll go to the debtors account and I will write down here. Sorry. Yeah, I'm going to be writing it here as the credit sale amount. Once I get the credit sale, automatically I'll end up getting the balancing figure, which is the opening. Once I have opening, boss, I have all this data, I have to make opening balance sheet, closing balance sheet, right? So opening balance sheet making is very easy. Right? So when you do the opening balance sheet, now since I have all the data, balancing figure will become my opening capital. You know how to do trading account? Right? Basically opening inventory plus purchases, sales return, closing inventory will give you gross profit. This we calculated it, then all the expenses you've taken, you will end up getting your profit. Then finally, what is going to be your closing capital? Opening balance plus additional capital plus net profit minus the drawings will be the closing capital. And when you do it, it should match. That means you got it right. Please practice this question once. It will give you a complete clarity. Do it once or twice. You will get a control on it. Did you all understand this question? You tried it? No. That time after class you didn't do.
We did, sir. I did, sir.
Huh. She'll say my dad will scold if I go home and touch the books. Okay, last question. Just see this. Mr. Anup runs a wholesale business where all his purchases and sales are made on credit. Now see here, you are maintaining bills receivable, bills payable. These books are called as what? Subsidiary books. Now we have already done bills of exchange. If you remember it, bills receivable arrives out of my debtors, bills payable arrives out of my creditors. So we are going to use that information and try to do the entire thing. They have given you the summary of the cash and bank transactions. First thing, you have the, no matter what happens, I know the opening value, closing value. I can figure out the opening and closing balance sheet. But let's look at it. Deposited into the bank after paying shop expenses at 600 per month, salary blah blah blah. So that means is incurring. How do you read this? Deposited into the bank after paying shop expenses.
All the expenses, what amount is there?
So he has deposited 7,62,500 after paying expense number 1, expense number 2 and expense number 3. Cash withdrawn from bank, cash payment to suppliers, furniture, checks collected dishonored, bills endorsed, bills discounted, bills matured, bills accepted, received LIC, received building purchased, electricity, blah 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 blah. Other transactions, claims against the firm damaged, goods returned to supplier, goods supplied. Now this is one question. Let's say if it comes in the examination also, I won't do it. It will take me almost 1 hour 10 minutes to do this entire question. No matter, I am saying you are the smartest of all, still it will take you max to max 45-50 minutes. Not worth it for 10 marks. Now in this question like this, what do I do? Simple. I'll make the format of opening balance sheet, closing balance sheet. Right? Which you know how to do it. Right? Then you're going to open which account? Debtors account and the creditors account. Now only challenge is, since you have bills receivable, we have already done the ledger accounts if you remember in bills of exchange. These are the 2 accounts that you will have to maintain additionally. Right? Please don't worry about your format, just whatever you can make out of it. Let's say for an example, bill is drawn, bills endorsed. What is the journal entry for bills endorsed? Creditors. Bill discounted, what's the journal entry? Bank account, discount account to bills receivable. Whichever entry you can make out, please write all those entries. Don't try to tally, don't try to do anything. Opening balance you write down one sheet, closing balance sheet you write down. One side write debtors, creditors, bills payable, bills receivable, 4 ledger accounts, and then just fill up all the entries. Right? You should take max to max 25 minutes. Whatever you have solved in 25 minutes, you're gonna stop and move to the next question. If it comes to a situation that I have one optional question and I have to solve this only, I don't have any other thing, then you will have to do this method what I told you. The entries I have already covered in bills of exchange. So here, what am I going to be doing? Additionally, is opening balance I'll do, closing balance I'll do. Debtors and creditors remains the same. The only difference is what? I'm going to be opening the bills receivable and bills payable account. Are you guys clear? Bank account sales part is confusing. Guys, okay, that means your ledger accounts are a problem. Just listen to it. Receipts and payments of my bank account. What all will come on the receipt side? Let's just try to look into it. First thing, my opening balance plus any cash sale done. Discount receipt will come in the receipts. Plus, in the credit sale, what you get is the money received from debtors, not the credit sale, plus any additional capital, plus any sale of asset. This is what you're going to be getting on the receipt side. On the payment side, what you get? Cash purchase, money paid to creditors, all your expenses incurred. Then you will have the closing balance. Whatever will be the missing figure will be your balancing figure. That's all will be in your receipts and payments. Now if I come to debtors account, what all will be in the debtors account? Let's look into it. Debtors account format, if I have to do opening balance plus credit sales, here will be closing balance, right? Here cash received, discount, bad debt, sales return. Now if you have a bills of exchange, then you will have bills receivable. If you are doing creditors, what will be coming in the creditors? Opening balance plus purchases, right? Here will be closing balance, payment made, then you will have discount, purchase return, right? Then if you have bills payable, then it will be bills payable. If you are doing bills receivable, look at it. What were the journal entries for bills receivable? First journal entry will be opening balance, bills receivable to debtors. If you discount it, it will be discount bank. If you endorse it, it will be creditors, right? If you get the money on the due date, it will be bank. If the bills get dishonored, it will again become to debtors account, right? That's all is your entry. So I generally in the examination I try to do like this, that boss, whatever I can find out, I'll just make a format and I'll write it across. So just now with the format, look into the bills receivable account. Sorry, see, opening balance, debtors for the bill accepted, creditors will be for, this will be for bills discounted, by bank will be for money collected on maturity, and if it gets dishonored, it will become my balancing figure, right? Then you have your closing balance. This will be the only thing which will come in the bills receivable. Why am I telling you guys to do this question is, this question covers all the entries which is required for incomplete. The last two questions if you do, it will cover all the entries required for incomplete. So you should be able to solve. They will not give such full-fledged question. They'll only give you half of it, so you'll know all the entries to be done. Are you all clear? Should I tell anything required in incomplete records? So are you guys clear? Right? So let's do the last topic, which is your rectification. Sorry, we can't. We'll do rectification tomorrow only. I think that's what right, done. So finish these two topics. Tomorrow we'll do. So which all chapters you guys want now? Partnership. Then okay. Tomorrow I'll tell you guys what time I have to go to hospital for a vaccination. So once it's done, I'll ping you. I think I should be back by 11 o'clock. Otherwise, we'll do it at 12:30 only. So let's see. So tomorrow we'll do rectification first, and then we'll do the partnership. You need any help in your cash book, subsidiary books, or other stuff, or should I just recap the concept? I'll just recap all the concepts of all the remaining things. Like rectification, I'll do completely. All of the things I'll just run you through. So I'll do like one format question of each of it on the last day, right? Yeah. Good morning, guys. So we'll start with the most important chapter of your CA foundation. That's your partnership accounts, and what you can expect from the entire exam is between 20 to 30 marks on this chapter. Now what we'll try to do is try to figure out what are the different ways your questions can come in. That is more important from the examination side. Now we'll categorize into two categories of all your questions. One, or let's say for three categories, something which is going to be common calculation, whether it is admission, retirement, death, right? A method, a common things which are going to be applicable for what? Admission, retirement and death. So we'll try to understand entire format of it, and what will be the only change if there is an admission, retirement or death, we'll figure out. So that in one case, I should be able to solve no matter what question comes in case of admission, retirement and death. From the examination question side, admission and retirement, death and dissolution is two categories. So you might end up getting a question one which has got to do with admission or retirement, one more question which has got to do with your death or dissolution. That is how your examination paper is going to be set across. And since this is a pretty larger chapter, let's just try to focus more on concept building, and whatever we are going to do for the next 5 hours of our topic, we should be able to cover at least, hopefully you should be able to attempt all the questions. Please make sure you spend an additional day for doing as many previous year paper questions as possible. So let's start. First thing, right? There are few things that we need to understand, which is a basic for all the partnership accounts. Is one, partnership is what? An agreement between the partners, and this agreement can be either written or it can be oral, right? Now, the first kind of question that you're going to get in the partnership is, what happens if there is no agreement between the partners? What happens if there is no agreement with the partners? If there is no agreement in the partners, what the partners are eligible is to get profits in equal ratio. If you don't have a partnership agreement, what do you get between the partners? Profits in the equal ratio. And no partner is having any right towards his salary. So partner cannot draw any salary. You cannot pay any interest on capital, no interest on drawings. However, if he has given you a loan, if he has given you what? Loan, then he will be given an interest of what? 6%. So this is the first question that you can expect for your 5 marks, which is going to be a practical question. So let's just look at it. What are we telling? If there is no agreement or written document between partners, how does it work? Profits are going to be shared equally. No interest on capital, no interest on capital, no interest on capital, no interest on drawings. You will be only getting a loan interest irrespective of whatever is there in the agreement. At what price? 6% interest. Are you clear? Now next one, for all the partners, right? After we make a P&L account, we make something called as profit and loss appropriation account. This is not a profit and loss account. It is called as what? Appropriation. What do you mean by appropriation? Appropriation means distribution of profits. Appropriation means what? Distribution of profits. For an example, see here. Net profit comes on the debit side. In the P&L account, net profit will come on the debit side. That net profit gets transferred to the P&L appropriation account. Now, anything which is going to be paid to the partners or anything which is going to be received from the partners, anything which is what? Paid to the partners or anything which is received from the partners, which is in the nature of income or expense, will be in the P&L appropriation account. Now see here, you will have net profit, then what all are you going to be paying to the partners will be on my debit side. Whatever you're going to be receiving from the partners is going to be on your credit side. That is your interest on capital, partner salary, commission. Then you will transfer to reserve if required. Then the balance gets transferred to the respective capital accounts, partners capital account. Here it will only be the interest on drawings. If there is no agreement, if there is what? No agreement. What will happen? See here, net profit will come, no interest on drawings, no interest on capital, no partner's salary, no commission, only you will be paying is what? Interest on loan, and this will also be at what percentage? 6%. Then you will transfer to the reserve. Then whatever balance is there, you are going to be dividing it in the ratio of, in the ratio equal. Are you all clear? Are you guys all clear? Done? Shall we go next? Now see this question. So we have covered the rules of absence of partnership. Guys, I'm going little fast with all of this because these are all very straightforward topics. You don't have any much calculation to do. We did P&L. What do you mean by fixed and fluctuating capital? Now whatever the original capital the partner has given, whatever the original capital what the partner has given, if that capital will remain as it is, if the capital what they have contributed what remains as it is, then we call it as fixed capital. But if the capital what they have contributed changes every year, what does it changes? Now if I am maintaining a fixed capital account, if I am maintaining what? Fixed capital account, I shall maintain two capital accounts. One called as capital, another one called as current. This capital account will always have only the original capital contributed, and this current will have all the changes in relation to the partner's capital, right? Whereas if I am maintaining a fluctuating capital, I'll only have one partner's capital account which will have all the requirements. What does it mean? See here, if I have a partner's capital, what is the journal entry for capital brought in? Capital brought in by the partners. Bank to partner's capital. After this entry is done, in a fixed capital, nothing will change. This will remain as it is. Everything else will come in the... So current account will have two drawings by interest on capital to interest on drawings. Everything which is there to salary to, sorry, it will be by salary, by commission, everything will be part of your current account and not in the capital account. Whereas if I do a fluctuating capital, what will happen? Everything will come in one capital account called partners capital. Are you clear with this? So in this there is one kind of question which is little different, which sometimes makes your paper little difficult, is something called as effective capital. Called as what? Effective capital. And I want you to understand when will the concept of effective capital comes into picture. Now let's assume that the partner is contributing capital in different stages of the year. Let's say first month you will contribute 1 lakh, then you will contribute 20, then you will withdraw 40, then you will again contribute 50, withdraw 20. Like this is introducing, withdrawing, introducing, withdrawing, introducing. I cannot pay one interest on capital because my capital what is effectively used during the year is different, right? See, usually what happens, he will contribute 1 lakh, in a year he will might give one more time the additional capital. In this case, he is coming and giving, whenever he wants he is withdrawing. So there is a not one stagnant capital available. So in those cases, we will actually calculate something called as what? Effective capital. Now, with that as a base, just try to look into it. How do we work on it, right? A and B are partners sharing profits and losses in the ratio of their effective capital. They had 1 lakh and 60,000 respectively in the capital accounts as on 1st January 2022. So originally how much capital they had? He introduced 10,000 on, then another 5 on this one, and on 30th September he withdrew 40,000. On 1st July B introduced a further capital of 30,000. Now I want you to understand this. The partners drew the following amount in anticipation of a profit. In anticipation of what? Profit. What does that mean?
Thinking that profit.
Profit will come, but they have not withdrawn from their capital. They are going to be withdrawing from their profits. So this has no effect on the capital account. Did you all understand? So what they have withdrawn in anticipation of profit is saying, hey, you know what, I would have maybe withdrawn the money towards the end of the year, but I want for monthly users, so I am trying to withdraw some portion of it. Are you clear with this? A drew 1,000 per month at the end of each month from January 2022. B withdrew 1,000 on June, blah blah blah. 12% interest on capital is allowable and 10% on interest on drawings is chargeable. Date of closing. Calculate profit sharing ratio, interest on capital and interest on drawings. I'll tell you how basically we calculate, okay. Now, I'll do for A so that we understand the whole concept. When is the accounting year? 1st January to 31st December. 1st January, how much was the capital? 1st January, how much was the capital? So January was 1 lakh, February was 1 lakh, March was also 1 lakh. April, what happened? He introduced 10. So from April onwards, what is the capital amount?
1,10,000.
Like this, it was for what? April, May, June, for 3 months again. Then July onwards, what happened? He added another 15, so it becomes 1,15,000 for how many months? July, August, September. Then he withdrew 40. Then he withdrew 40. How much it will become? 1,15,000 minus 40. How much? 75,000. That will be for how many months? October, November, December. That will be for 3 months. So first thing we are going to calculate this. Understood how we calculate it? Second part of it. Now look into it from the look at it from the what do you say, from the second partner B side. B had a capital of how much?
60,000.
And on 31st July, that means what? Jan, Feb, March, April, May, June, 6 months it was.
60,000.
Then after that he introduced how much?
30,000.
That means it becomes
90,000.
till what date? Till the end of the year. So correct. So now see how we calculate. 1 lakh was invested for 3 months. So 1 lakh into 3 lakh. 1 lakh 10 invested for 3 months. 3 lakh 30. Then it became what? 1 lakh 15. For how many months it was there? 3 months again. Then last one is what? 75,000 into 3. 2 lakh 25,000. Did you understand for A? No. Madam, see this guy, Mr. A. January, February, March, his capital was 1 lakh.
No other factors, 3 lakh.
Right? How many ever months it was, multiply with the capital which was available. Right? Let's say in the month of April, May, June. For this month, capital was how much? 1.10 for 3 months. Then it became how much? July, August, September. It became 1 point into how many months? Up to 12 lakh and 9 lakh. So my capital ratio will be 12:9, that is 4:3. Understood? So my profit sharing ratio will be what? Are you clear? Now interest on capital, right? How much is the rate of interest on capital? 12%. Right? Now look into it. Whatever this effective capital is, effective capital into 12%, you will do into 1/12. Into what? And this guy will be what? 9 lakhs into 12 into 1/12. Clear? Now next one. Huh? What do you, okay, how do you calculate let's say if I have to calculate interest on this 1 lakh for 3 months, how will you calculate? 1 lakh into 3/12 into 12/100. Now see here, what have I done? I have done till now only into 3 into 1, right? I have never divided by 12. So when I am doing the overall thing, I have to do into 1/12, right?
Yeah, we can't do it from
No, because I have to calculate effective capital. No? Are you clear? Now the next concept. Now see here, A withdrew 1,000 per month at the end of each month, beginning from January. Now you have to understand, how do you calculate interest? If the amount is withdrawn, beginning of the month, middle of the month, end of the month. If it is saying it's at the beginning of the month, you will do 13/12. Correct, no? If it is end of the month, 11/12. Mid of the month, 12/12. Okay. Into 1/2, into 1/2, into 1/2. So this, when you write it, you will write it like this: 6.5/12, half, 5.5/12. So or you can, for understanding easier, you can always write like this. Are you all clear? Guys, are you clear with this? Right? Now in this question, they are telling you it is at what point of time? End of each month. So how do you calculate? See here. Right? 1000 into how many months you are withdrawing? Right? 12 times you are installing. Right? 5.5 by 12 into 100. 10 by 100, sorry. 1000 you are withdrawing every month. Right? So how many times are you withdrawing it? 12 times. So 1000 into 12 into 10 by 100. That's your rate of interest into 5 by 12. 5.5 by 12. 550 is your answer. Clear? The next two things, anyway, it's pretty simple. He has withdrawn 6 months and 3 months, whatever month he has withdrawn. Are you guys clear with the effective capital and how to calculate the drawings? The other interest on drawings is pretty straightforward. Whenever he has withdrawn, how many ever months he has taken into consideration, you will take in. Are you all clear till now? So why is it hot? I'm sweating. Shall we start? So we are done with first chapter of your partnership accounts. So there is one part that I have missed out, which is basically your calculation of interest on capital and drawings, which basically will cover it when we are doing the full-fledged questions. Are you clear till now? So let's go to the next topic, which is important, which is part of your.
Sir, only this one I asked for 5 marks. Sir.
5 or no, so what they have done in lot of questions, they have asked effective capital in a full-fledged question. In the past paper questions, if you see, they have said
First you have to calculate effective capital.
first you have to calculate effective capital. Effective capital will become your profit sharing ratio and everything will start based on it. So this will be, no, this is not time consuming, it won't take time.
For full-fledged.
Yeah, it won't take time, no. See, let's say if I have to just calculate effective capital, how do I do? Let's say within 1 minute, right? Now for A, you have 1 lakh for 3 months, 3 lakh. 1.1 for 3 months, 3.3. 1.15 into 3, whatever that is coming to 3.45, right? Then you have 75 into 3, which is 2.
Only this they ask for with the revaluation and one.
No, so this they will ask. This will become your profit sharing ratio. From that, you will have to do all the other things. So, in any of the partnership questions as we go in, we'll see. But I'm not covering any additional question on this. But this is the way if they ask you effective capital to do it. Are you guys clear? Done? Okay. The next topic, which is now going to be part of all your questions that we are going to calculate, is your goodwill. Now, goodwill has 4 methods, or we say 5 methods. The 5th method is annuity method, which is pretty straightforward. Let's try to look into the 4 methods of calculating your goodwill. The first one is the simple average. The first one is what? Simple. Now, what does simple average method mean? Take the past year's profit, divide by the number of years, will give you your simple average, right? This simple average you will multiply with the number of years of purchase. This simple average you're going to be multiplying with what? Number of years of purchase. Now few things that you need to keep in mind. Okay, and I'm covering all your adjustments. Just please understand the logic behind it in the examination, because I can't do all the questions right now. So I'm just giving you the entire logic how it works. Let's say for an example, your last year profit was 1 lakh, 1.2 lakhs and 1.5 lakh. Last 3 years profit was what? 1 lakh, 1.2 lakh and 1.5 lakh. How do you calculate simple average?
Add, divide by 3.
Add and divide by 3, which is coming to how much?
12,333.
1 lakh. Correct? This is my average profits. Okay, if you do this, it is wrong. I'll tell you why. Whenever you see the last 3 years profit, which is increasing, then you cannot use simple average, you have to use weighted average. Are you clear till now? So whenever the profits are increasing, what do you do with it? You follow is the weighted average and not the simple average. Are you all clear with this? Right? So whenever there is profits which are increasing, we need to follow what? Weighted average. Now look into this. One more thing that you have to understand. This is part of your major working note. Let's say the last year profits was this 1 lakh, 1.5 lakh and 90,000. Okay, I'll use a simple average, that is multiply and divide by 3. Now they are telling you, see here, in the year 3, there was a fire and because of it there was a 20k loss. In the third year, what? There was a fire and because of which you suffered a loss of how much? 20,000. Now, the logic that you need to understand is, what do you mean by goodwill? First thing that we need to understand is, what do we mean by goodwill? Goodwill is actually the reputation of the firm to earn a profit over and above the normal profits of the company. It's a reputation for you to make sure that you are earning profits more than others out there. Okay. When are you earning profits? Future or past? Future, right? But for calculation, which profits am I taking? Past. And when I'm saying I'm multiplying with the years of purchase, that means, it means that for the next X number of years, I will be having a reputation to earn that much of profits compared to my competitors more. More than my competitors, I am in a position to earn a little profit more than that in the next 2-3 years. So if they say your reputation to earn profits, goodwill is calculated for 4 years purchase, that means you have a capacity to earn what? 4 years profits over and above the competitors in the next 4 years. Are you clear? So he is trying to give you profits for the future. You are taking the past trend. Goods were caught by fire in the last year. Does that mean that in the future also it will get caught? No, right? So if there is any expense which will not happen in the future, remember this, if there is any expense which will not happen in the future, you need to add back those expenses to the past year profits. Remember this as a logic. Whenever, for an example, they'll say, you know what, manager who was not drawing a salary of 20,000 wants to draw salary in the future. So what you will do? You will minus it. Let's say there was a goods caught by fire, because of which you suffered a loss. What will you do now? You will add back. The logic is this. Understood? So since we are doing future profits, anything which will not recur in the future, I need to do the reverse of those calculations. Are you guys clear till now? Right? So what I will do, I will now add back this 20k and then I'll find the simple average. Understood? How do you find simple average? Add and divide by the number of years. Right? That is for goodwill, but average profit is calculated this way. Are you clear with this? Just one sec. Done till here? Guys, they have still not given any clarity, Mukesh, so I'll get back to you guys whether MCQ would be there or theory will be there. I tried finding out, still no clarity. But theory or MCQ, one of them will be there, so it should not be a challenge for you guys. 30 marks will be entire MCQ. Or you might have a combination of true or false and MCQ also. Because for intermediate and final they have introduced it. Foundation, like I said, your MTP papers does not have MCQs, but your textbook has MCQs in the end. That means, because in the foundation and intermediate books also it's the same. Sorry, intermediate and final, you have MCQs towards the end. There again MTPs did not have it, but the final paper had it. And they had clearly said for the intermediate that they are going to have 30 marks MCQ in the new curriculum. For foundation, they did not tell anything. They only said accounts and law is going to be theory and your economics and maths is going to be your MCQ. So if it turns out that they don't want to give MCQs, you will have at least 20 marks of theory minimum or 30 marks of theory questions out there. Shall we start? Mukesh, it will be between 20 to 30. 20 the minimum you can expect. 30 if you get in, that's going to be a lottery. Shall we start? So we are done with simple average. Let us go with weighted average. Now, how does this weighted average work? Let's say for an example, year 1, year 2, year 3. My profit is 1 lakh, 1,20,000, 1,30,000. These are my last 3 years profits. Now, when they have given me the last 3 years profit, what we will do is, right, I am going to be assigning weights. I am going to be assigning what? Weights. That is, I'll go in the order of 1, 2, 3. Highest weight will be given for the last year's profit. Then you go 1, 1 lesser than that. That is 3, 2, 1. Second step will be weights into profits. First step is what? Give weights. Second step is what? Weight into profits. That will be 1 lakh into 3, 1 lakh, 1.2 into 2, 2.4 lakh, then 3 point. What's the total? What's the total? 7 lakh 30. What is the total of weights? 1 to 6. So it will become 7 lakh 30 divided by 6 will be my average profits. That is how much? 1 lakh 21,000. Is everyone clear how to find average profits? Right? Now in the same thing again, always try to check if there is anything which is going to have an impact on the future profits. If it has having, you need to change the profits accordingly. Clear with weighted average? Done? Okay. Now I want you guys to understand what's the difference between the next two methods, which is going to be commonly asked in your exam. One is called super profit, another one is called as capitalization. Now what do you mean by super profit? Now just understand, super profits means your profits over and above the normal profits. So let's say as an industry you are earning 5 lakhs profit, I am earning 7 lakhs. That means what is my super profit? 2 lakhs. My ability to earn profits more than the industry. How much was the industry profit in this question? How much I am earning? Difference becomes the super profit. Now for that, how do I calculate? Right? You have to check in the question, right? They will give you something called as rate of return. In the question, they will be giving you a term called as what? Rate of return. Now, you need to calculate two things in the question. One called average profits, then called as capital employed. Average profit you will find either simple or weighted depending on the scenario. Nothing given, you can always assume something and take it around. Whichever is giving you a round answer, that will be the one the examiner is looking at. If nothing is given, you can write an assumption and then take either simple or weighted average. Capital employed is found out by assets minus liability or the total capital of the partners. Done. Now what you do, see here, this is whose average profit? My firm's average profit. Now whatever capital employed I found out, I will multiply with rate of return. Let's say my capital employed is 1 lakh. Rate of return is how much? 10%. So how much is the value that I am getting? 10,000. This 10,000 is called as normal profits. What does this mean is that if you are trying to employ 1 lakh in the business, you in general will be getting a profit of how much percentage? 10%, which comes to how much? 10,000. Are you clear? Now your profit, let's say, was 15,000. So how do you calculate super profits? My profits minus normal profits. My profits was what? 15k minus normal profit was what? 10k. Therefore 5k will be the super profits. This super profits you will again multiply with the number of years of purchase. Let's say the number of years of purchase was 3 lakh. So that will be 15,000 will be the value of goodwill. Are you clear? So I am just writing all the steps again. Just look into it. Step 1, right? I have to identify what? This will be given in the question. Step 2, you will find out the step 3, you will find out right. Fourth step, you are going to multiply step 3 into step 1. That is capital employed into rate of. And what do you get this as? Fifth step, step 2 minus step 4 will give me my super profit. And step 6,
Normal profit minus.
hey, that only is this one done. Step 2 is what? My profit
Super profit.
minus super profit into number of years. This is gonna give me my Are you all clear? Now see the way the capitalization method will work. Now what is the difference between the capitalization and super profit, right? In super profit, what I do is I am gonna be looking at what profit I am earning vis-a-vis how much profit the normal firms are earning. Whereas in case of capitalization method, I shall be looking at what is the capital I have put vis-a-vis what is the capital somebody would have put to earn that profit. For an example, in the previous case, how much profit did I earn? 15,000, right? Normally in the industry, let's say, if you have to earn a 10% rate of return, right? How much capital you should put to earn 15,000? 1,50,000 if you invest, you will get 15,000, correct? How much did this guy invest? That means the difference between the capital is called as goodwill. Everyone should have invested 1.5 lakh to get 15,000 profit. I am putting how much? 1 lakh to earn how much profit? 15,000. So the difference between what industry would have put vis-a-vis what I have put will be the goodwill. Are you clear? Understood the difference? Don't unnecessarily complicate it. It's actually very easy. Capitalization method and super profit.
You get 50,000 as goodwill.
Huh?
In capitalization, you get
50,000 as goodwill. Are you clear?
15,000.
Huh?
Super profit.
That doesn't matter, no? It's a method. It's a method of calculating. Whichever method you are comfortable with, you follow as per the investor's thing. Now see the way I'm going to be doing the capitalization method. Just understand the difference. Step 1. Again I'm going to be doing rate of return. Step 2. I am going to be doing average profits. Step 3. I am going to be doing capital employed. See the step 4 what I do. I am going to be calculating normal capital employed. Step 3 I am going to be calculating what? Normal capital employed. How do you find this? Step 2 divided by step 1. Step 2 divided by what? Step 1. Right? Now, step 5, goodwill is equal to, which is going to be more, my capital or the outside capital? So that will be, look into it, step 4 minus step 3. Goodwill is equal to step 4 minus step 3. One-fourth capital partner, blah blah blah, they want to calculate the profit. How do you find simple average? By adding all the no. Let's say they want you to calculate under all the methods.
Add, divide by
So add and divided by 4 years, no? Now how do you do weighted average?
First number them.
How do you number them weights? 1, 2, 3, 4. Then what do you do? Multiply. 1.4, 3 lakhs, 4.8 lakh. Then it's going to be 5.1. Oh, 7, 4. Divided by 10. Whatever you get. Right? Now, next thing. They have given me what's here. I know my weighted average. Now they have given me what? Capital employed. And they have given me the normal profit. Can you find out what is going to be your normal profit then? Normal profit will be 6 lakh into 18%. This you will reduce with your, to find out super profit, what you will do, whatever answer you got under weighted average minus this answer. If you do it, you will end up getting the super profit method, right? Now they are telling you how many years of purchase did they tell?
4 years.
No, they have not given anything in the question. So nothing given, you can always assume either 3 or 5 years. Super profit you have to multiply with the number of years. So you need to write an assumption that it's consider
3 years and
3 or 5 years you consider it. Are you clear with this? Right? And how do you do super profits? How do you do capitalization method?
Rate of return.
Complete, you will find out the average profits. How much was the average profit, weighted average profit, if you would have done it?
2 lakh 60.
How it will be 2 lakh 60 mark?
Weighted.
1 lakh 40, 3 lakh, 3 point. How much is it total? 4, 10,
1 lakh 60.
60, 12, 60. How much?
1 lakh 60.
1 lakh 60, yeah. Okay, 1 lakh 60 years year weighted average. Now see here. If I have to do super profit, what did I say?
1 lakh.
Capital employed into 18%. How much is it coming up to? 1 lakh.
8.
And you are earning how much?
1 lakh 60.
So what's the super profit? Multiply by 3, that will be 1 lakh. 56,000 will be the goodwill. Are you clear? Now if I am doing capitalization method, what did I say? What is the profit you are earning? 1 lakh 60. This divide by the normal rate of return, which is 18%. Divide by 18%. When you divide by 18%, what do you get?
8,88,000.
That's all. 8 lakh.
88,000.88.
Okay, 888. This is what I should have invested on capital. But how much have I invested?
6 lakhs.
So how much is the profit?
2,88,000. Goodwill, sir. Goodwill.
Right? This will be the goodwill. Guys, done with all the 4. Are you clear with this? Can we go next? The following particulars are available in respect of business carried on by Mehta. Now see here, this just I am trying to explain how it works. Right? You have a trading profit of how much? 2 lakhs. Capital invested is 2 lakhs. Last 3 years profit or 4 years profit and loss they have given you. Market rate of return is 12%. Rate of 3%. Now what is this rate of risk of return?
Future risk.
So if you invest in this business, you are expected to get, you have an additional risk of 3% or additional return that you're going to get out of 3%. So the total risk in this business, if I have to look into it, is how much percentage you can expect from the return is going to be your 15%. Are you clear? Now, then they are saying that the remuneration from the alternative employment from the proprietor is 7,000 per annum. That means what he is saying, that this guy now, if he was working somewhere outside, he would have got a salary of what? 7,000 per annum. Now since he is going to be working in this company from now on, right? Why? See, let's say if it's your company, you will work because you will get profit. If I am investing in your company, will you work for me for profits? Let's say I am sitting back home and I am saying you work, I'll invest in the business. You will say, boss, for me working, you have to give me some amount of profit. What is that? So look into it. So what we do, this is considered as my future expense. What do you do with the future expense? So every year profit you will reduce -7, -7, -7, -7. Then you will find the average profit. Whatever average profit you got, you're going to divide with how much?
15%.
No, they want you to calculate based on super profit. So how do you find super profit? What is your normal profit? 2 lakhs into 15%. Normal profit is what? 2 lakh into 50%, 30k. This you will find out whatever the average is. You will reduce it. That will give you the super profit, which you multiply with 5 years of purchase. Understood? Guys, should I re-explain again? So you will be doing, if I have to look into it, first year profit will be 38k, 35k, minus 15k, then 48k divided by 4. How much is it coming to? How much? 42 7 minus 30k, so 12,750. How many years of purchase? 5 years. That will be the value of goodwill. Are you all clear? 63. That will be the value of goodwill. Understood? What? And they are valuing the goodwill in the extent of 20,000. Now remember this, right? For any goodwill question, I'll give you certain scenarios and then come back to the same thing. Let's say the partners were sharing profits A and B in the ratio 2:1. Now A, B, C came, the profit sharing ratio will be 1:1:1. Okay, what we are going to do for calculating sacrifice ratio or the gain ratio, we are going to do OPSR minus NPSR, that is old profit sharing ratio minus new profit sharing. For A, what is the old profit sharing ratio? B, new profit sharing ratio, right? So what is that? 1/3 0 minus 1/3. This is 0, right? See. So basically, sorry. This guy is losing and this guy is. So your journal entry will always be, remember this, gaining partner versus losing partner. Gaining partner account debit to losing partner account credit. That's going to be a journal entry. Now, let's try to look into this question. Right? ABC are partners sharing profits and losses in the ratio 4:3:3. So what is the old ratio? 4/10, 3/10, right? OPSR. What is new profit sharing ratio? 7/20, 7/20. Now if you have to mathematics, if you have to subtract both the things, your denominator should be the same. So I'll just multiply everything with 2. So this will become 8/20, 6/20 and 6/20. So first thing, 8 minus 7, 1/20. This one minus 1/20. This guy is 0. So this guy is what? Losing partner, and this guy is the gaining partner. Or you can always do the other way around. If this gets confusing, do NPSR minus OPSR. So that way positive will become gaining, negative will become losing if you do the other way around, right? Now who's the gaining partner? B account debited to A's account. What is the total value of goodwill? 20,000. 20,000 into 1/20. So the journal entry will be B's account debit 1000, C's account debit 1000 to A's account 1000. Are you all clear? Okay. I'll give you guys 2 minutes. Read this question. I'll give you guys 2 minutes. Read this question.
The average profit
Average profit
Average profits of the past 4 years to the data.
weighted
Weighted in can increase up and down. 75, 65 is increase.
40, 80 rupees only.
Full and increase about central and below.
But I don't know decrease ಆಗುತ್ತೆ ಇವಾಗ
Okay. Sorry, let's start with it. Now, who are the three guys who are partners of the firm? Antu, Bantu, Chintu. How much were they sharing profits and losses initially? 3:4:3. The accounts were made. The partnership provided on retirement of a partner, goodwill has to be valued at 3 years purchase of the average profits of the past 4 years up to the date of retirement, after deducting an interest of 12% on capital employed and remuneration of 2,000 per month to each partner. On 1st April, Anto retired, and it was agreed that the retirement to adjust goodwill in the capital accounts without showing any amount in the goodwill. The following were the amounts of the profits of the earlier year. You are required to calculate the goodwill. How do you go about doing this? Right? First thing, now I don't have to, let's look into the first thing of goodwill calculation, and then we'll look into the sacrificing ratio or other stuff. Right? Now see, first thing, there are 2-3 ways of doing it. Option number 1, and whichever is comfortable for you guys, you can look into it. I'll teach you both the options. Option number 1, what you can do, whatever interest on capital and salary is there. Salary is what? 2,000 per month? Right? Now, this salary, whatever is there, how many partners are there? 3 partners, 12 months and 2,000 per month, right? This 72,000. Option number 1, you reduce everything from 72. Every year you reduce from 72. Or since you know mathematics already, we can always apply the rule of averages. That means when something is common for all, you can just do the total and then reduce it together, right? From the average profit. So now see here, my average profit is coming to 10,40,000. 10,40,000 by, total profit is coming to 10,40,000. 10 lakh by 4 is coming to 2,70,000. They are telling you to reduce 2 expenses. Which are the 2 expenses? Interest on capital and your profit. So this is coming up to what? 1,20,000, right? They are telling goodwill will be valued at how many years of purchase? 3 years of purchase. That is coming to 3,60,000. Now see what we are supposed to understand. Till here the calculation is fine. I told you guys earlier too, if there is any expense which has not been taken earlier and you want to consider, you have to reduce it. That's the logic, right? Now second part, what was the new profit sharing ratio and old profit sharing ratio? What's the old profit sharing ratio? 3:3 4/10. And what's the new profit sharing ratio? Have they told? Sharing profits and losses equally. That means half. A will be 0, B will be this, C will be this. If I am doing new profit minus old, how much A is losing? 3/10. This guys, if you do into 5, 1/10 and 2/10, right? Minus 3, right? I am doing new profit minus old. That means this guy is sacrificing. These 2 guys are.
So he is gaining.
So if I do old minus new, if it is negative, that means is sacrificing. If I am doing new minus old, negative means is, if I am doing old minus new, negative means is gaining. If I am doing new minus old, negative means sacrificing, right? Whichever is, see now forget all the things. I look at it this way, right? A, B, C are there. A is living, B and C are staying. So they will gain, A will lose. That's all. I forget all the formats and other stuff, right? right? So A is sacrificing, B and C are gaining. So what's the journal entry I told you? Gaining partner to sacrificing partner. So that's going to be a journal entry. See here, Bantu's capital, Chintu's capital to Antu's capital. Understood this part? I'm going to be using this again and again. Just doing goodwill calculation in all the question plus passing this entry will give you 3 marks in your partnership question. So, yeah. Or maybe partner's capital account directly. So, in any question that they give, see here, let it be admission, retirement or death. Let it be admission, retirement or death. I'll be doing my goodwill account. I'll be doing OPSR minus NPSR, or if you guys want, you can do NPSR minus OPSR, whichever you are comfortable with. And I'll be calculating the sacrifice or gain ratio. Third step, I'll be doing revaluation account, which I'll be covering it now. Fourth step, I'm going to be doing partner's capital. Fifth step, I'm going to be doing the balance sheet. This is the 5 steps I'm going to be doing, whatever happens. Now, whether you know something or you don't know, the moment it is an admission, retirement or death, you're going to be following this. There is a format I'm going to be teaching you now. You need to just blindly follow the format for the questions, right? Even if you do wrong, you'll end up getting 8 marks provided you have followed the format. You cannot go wrong in this. You cannot go wrong in this. These two will give you 3 to 4 marks. These two will give you 6 marks. This also you cannot go wrong, honestly. So the only thing, if you're doing a mistake, it should be in the other two, which should lose you 4 marks. But partially, if you get it right, you should lose 1 or 2 marks out of the entire thing. Are you clear? Partnership, admission, retirement, death, no matter what, we are going to be solving in the paper. Are you all clear? Now, see the format number 1 that we are going to be doing is my revaluation account. Now, simple thing that you need to understand is with regards to the revaluation account. What does a revaluation account do? Right? A revaluation account basically what the rule says is whenever any partner is getting, or we say if there is any reconstitution of the firm, there has to be a admission, retirement or death. The assets have to be valued to bring it to the present value. You have to bring the asset to the present value. You need to do it. Now, what does this mean? Right? Generally, assets increase should be debited. Assets decrease should be. Liability increase will be credited. Liability decrease will be. Done. Assets increase if you have debited it. The other account which will be credited will be revaluation. Again, when assets gets reduced, what will get debited? Revaluation. Debit, revaluation. Here credit. So see the journal entry. If I have to write assets account debited to revaluation, in the revaluation account, how it will look? On the credit side, by assets, by liability, decrease. Here 2 assets, 2 liability. Are you clear? One more thing you need to make sure is if there is any unrecorded asset, it's going to come on the credit side. If there is any unrecorded liability, it will be coming on the debit side. Understood? Now, first thing, are you clear with revaluation? Remember this rule. Revaluation profits or losses will only be transferred to the old partner's capital in the old profit sharing ratio. Remember this all the time. So, let's say if there is A, B, C and D is getting joined. Then A, B, C is getting retired. Revaluation profits or losses will always be shared with what? The original partners. Did you understand this? And this will always be done as per the old profit sharing ratio. This is the step 1 I'm going to be doing in all the questions. Step 2, what did I tell you? Calculation of OPSR, NPSR, sacrifice and gain ratio. How we do it? I've done a simpler thing. In the questions when you practice, you will get to know there are multiple categories of it. If you have any doubt, you can post it in the WhatsApp group. I'll explain it to you. The third one is calculation of goodwill. We have already done. Now, what is the journal entry I told you? Gaining partner to the sacrificing partner account. Then we have to prepare partner's capital. Now, let us try to understand what are the things that is going to come in the partner's capital. The opening capital, by bank additional capital, by general reserves, OPSR, then by revaluation profits, which is again OPSR, to revaluation OPSR, then for goodwill adjustment, right? What was the journal entry for goodwill adjustment? By gaining partner. So here it will be by gaining partner to sacrificing partner. So for the purpose I'll only write it this way: by goodwill adjustment, right? Then if there is any interest on drawings, here it will be interest on capital, here it will be interest on drawings, right? Finally it will be your closing balances. Typically these entries, every question, what are the things that you can't go wrong? Opening capital, this two you have to write it. This you can't go wrong. This you can't go wrong. This you can't go wrong. Any other thing which is there, we will understand as per the question. But no matter any question comes, blindly I'm going to be writing these items. Are you clear? Right? If you can do this, no matter what, even today and tomorrow, if you spend partnership and you're done, you can just revise one day or 1 or 2 hours before exam. You should be able to score at least 15 or 16 marks in the paper. If I score 15 or 16 partnership without studying, I can use that time for topics which are little difficult. For an example, maybe death of a partner or dissolution of a partner or incomplete records. You don't have to focus on these chapters initially. Right? Done? You want to write this, or you are aware we'll go on further? Okay. The next thing that we are going to learn is memorandum revaluation account. I just want you to understand what's the difference between a revaluation account and a memorandum revaluation. A memorandum revaluation account works as a reverse of revaluation, right? So in the same ledger account, I'm going to be opening both revaluation as well as the reverse of revaluation. Then we call that as memorandum revaluation. Why do we do it? We do it because we don't want to show the assets at the current value. I want to show it at the original value only. So let's say if asset has to be revalued to 10,000, I will increase by 10 and then I will reduce by 10. So let's first understand how does a revaluation account look. What did I say? By assets increase, by here asset decrease, liability increase. If it's a profit, where it will come? Credit side, right? So what do you write? To whom do you write? Existing partners in what ratio? Old profit sharing ratio. Now I'm going to be do the reverse of it. That means everything here will come here, everything here will come. That means here it will look as what? To assets increase, to liability decrease. Here it will come by assets decrease, by liability increase. Now see here it wrote it as what? Two existing partners. Here it will become by continuing partners in the new profit sharing ratio. Are you clear with this? Did you understand the format? So only thing that you have to remember is what? Here I did existing partners in the old profit sharing ratio. Here you are going to be doing what? Continuing partners in the new profit sharing ratio. Are you clear? If you get a question on memorandum revaluation account, lottery question, lot of them don't do it, and easy 5 marks for memorandum revaluation. Don't, either separate or full-fledged, doesn't matter, right? But when they give you something bigger, you will get more marks for it, right? If you would have got for revaluation account 2 marks, for this you will get 5 marks. Read this question, right? AB are sharing profits and losses in the ratio 3:2. They admit C on the following terms. C brings 50,000 as capital, 10,000 for goodwill. For how much share? 1/5 share. So what did I say? What was the old profit sharing ratio? Old profit sharing ratio is 3/5, 2/5. Okay. Now what is the new profit sharing ratio? They have only said this is 1/5. Now they have not see the entire question. Is there anywhere they have given you the new profit sharing ratio? Nothing given. So what you can do is simple. What is left over? What is left over? 1 minus 1/5. They should have given you the new profit sharing ratio. Nothing else. Okay. Is what? 1. 1 minus 1/5. How much are you getting? 4/5. Now what you do? Whatever is left over, you will multiply with the old profit sharing ratio. So how much is it coming to? For A, 12/5/5 into 25. For B it will be 8/25. See what is that which is there in the denominator now. So what does the rule of ratio say? You have to multiply. So the new profit sharing ratio will become 12:8:5. Are you clear with this? Done? Now see here, provision for doubtful debt should be made at 2%, inventory to be written down to 10, freehold premises, office equipment. You are required to make the necessary adjustments in the capital accounts. Now see here, partners agreed that the value of the assets and liabilities remain the same. The moment they use the word like this, what does this mean? You are supposed to make the memorandum revaluation account. Understood? What's the clue that they give? Now what did I say memorandum revaluation account is? See here, first you will do the revaluation account. Whatever profits you get, you're going to be giving it to who? Who are the old partners? A and B. In what ratio? Then again see here, whatever I have done here, whatever I have done here, I am going to be reversing it here. Whatever I have done here, I am going to be reversing it. Now the loss, what is there? See, earlier if it was a revaluation profit, now it will become what? Revaluation loss. This revaluation loss, you are going to be dividing it in the new profit sharing ratio, which is 12:8:5.
This loss will transfer to partner's capital.
Yeah, partner's capital, but it's going to be done in the new profit sharing ratio, right? Now see here, if I have to look into the partner's capital account, I want you to just look into it. What's the goodwill is bringing in,
10,000.
right? Old ratio minus new ratio, if you do the SAC, that is 10,000. So the journal entry, see here, partner's capital account. Now C's account debited to A, to B, 6,000, 4,000. Here by C's capital, then what did I say? You will have first opening capital, then you will have the new capital brought in, then your profit on revaluation, but this time I also have what? Loss on revaluation. When will this both come? Memorandum, right? Then finally I will find out the closing capital. Goodwill I have done no already. This was goodwill adjustment, no?
And capital
Huh? So you will write it as capital only.
Partner's capital.
So it will always be partner's capital. What is the journal entry?
You should write it as goodwill.
No, that is, so I'll tell you what you would write an entry is like this: gaining partner to sacrificing partner. This is the only entry you're going to use. Are you all clear? Okay. Now the next question that you can be asked is your hidden goodwill. What do you mean by hidden goodwill?
The actual capital, what you require,
Okay.
minus
So
what-
basically it does not bring anything as a goodwill. What you need to identify is from the money as brought in, is there any component of goodwill involved there? Now, for an example, A and B are partners of the firm having a capital of what? They admit C for 1/4 share and C brings 8,000 as capital. Now, is bringing what? 8,000 for how much share? 1/4 share. So what you will calculate is what if it is a full capital? What if it's a full capital? How do you calculate? So see, 8,000 is 1/4. That means for full how much it will be? Do a cross multiplication. 8,000 into 4, that comes to 32,000. So 32,000 should have been the total capital of the firm. But what is the actual capital? If you see, actual capital will be, how much did A and B have? 7 plus 7. How much did C bring in?
8.
So what is the total? 7 plus 7, 14. 14 plus 8, 20. As per the C valuation, he brought the capital for what value? 32,000. But the actual capital in the company is how much? This difference is called as hidden goodwill. Right? Now, see here, the total goodwill of the firm is 10,000. Right? C is bringing in for 1/4 share. So what is his share of goodwill? 2,500. 2,500. Journal entry again will be, because they are doing it equally, C's capital to A, to B, 2,500, 2,000. C is the gaining partner, A and B is the sacrificing partner. Understood? Now see this question. The last question, then we'll take a small break and then no. Can we do another half an hour?
Yes, sir.
Right, we'll finish off both retirement and death because that's part of the same thing, and then we'll do the next part, which is your dissolution together. Next one, Gopal and Govind are partners sharing in profits in the ratio 60:40. The firm's balance sheet as on 31st March 2022 was as follows. Due to financial difficulties, they have decided to admit Guru as a partner in the firm on the following terms. Guru will be paid 40% of the profits. Guru will bring in cash to the extent of how much? 1 lakh. It is agreed that the goodwill will be valued at 2 years purchase of 3 years normal average profits of the firm. Goodwill will bring in cash in his share of goodwill. It is decided that the partners will not withdraw their share of goodwill, nor it will appear in the books of accounts. Now, the profits for the previous 3 years were as follows. For the year ended 31/3, profits was 20,000, includes insurance claim of 40,000. What does this have an impact? What is this got to do with?
Not accounts.
So,
You shouldn't change.
yeah, you are right. Tell me.
You should add it only. It is already added, so we should take 20,000.
Includes insurance.
Includes an insurance of
40,000.
40,000, right? So what we are supposed to do is we need to reduce that insurance for a reason that, see, that insurance, was it something which happens regularly? If it does not happen regularly, what did I tell you? We should not consider it for the future profits. Always remember this. If it's happening regularly, fine. If it's not something which is happening regularly, we will not consider it part of. Next one, for the year ended, loss of 80,000 includes a voluntary compensation of 1,10,000. What does this have an impact?
We should include it.
Add.
You will add back. You will add back, no?
Yes, sir.
Next one. For the year ended 31/3/2022, profit for 1,05,000 includes a profit of 25,000 on the sale of asset.
Minus.
Minus no ma. Profit. Profit is already included. So you should reduce it. Guys, are you clear? Then they are asking you what will be the new profit sharing ratio after admission will be 35/25/40. So you know the old ratio, you know the new ratio. Can we find out the sacrifice and gain ratio? Look into it steps. Now, did we calculate what is the profits that is going to be taken? Right. So now let's go one by one. So see here, calculation of profit or loss for the period. So you said the first one we need to subtract, the second one we are going to add, third one we are going to subtract. We found out the 3 years profit. Once I find the 3 years profit, how do I find the average profit? Divided by 3. They are telling goodwill will be valued at what?
2 years.
2 years purchase. And what will be the goodwill value is going to be bringing in?
40%.
40%, that comes to 24. Right? Goodwill, whatever is bringing in, what did they say? They're going to be shared with the old partners in the ratio. So now look into the journal entries. He's bringing in total 1 lakh plus 24,000, right? 1 lakh 24,000 is the money he brings in. They are saying that the money what he brings in as goodwill will not be withdrawn. Cannot be withdrawn. So that means from his capital of 24, what did I say the goodwill entry will be? Gaining partner to sacrificing partner. If they say it will be withdrawn, then you will have one more entry. Govind's capital 15. Gopal's capital 15. Govind's capital 15 to bank. Never ever do what you have done in your PUC, that goodwill account will appear in the books. As per accounting standard, goodwill will never appear in the books. So just follow this entry for every goodwill entry. Are you clear? Then you have assets. What is the journal entry for revaluation? Revaluation to assets account. This is going to be for assets decrease. Revaluation assets account, that will be for the revaluation profits. Then finally you will transfer revaluation to whose account? To the old partners account. So done. Then finally you do individual partners capital account. Are you guys clear with this? So the only thing that you need to worry about is which one? The profits, which I've already covered it conceptually. See another question. Guys, if you want the full-fledged ones, you can always maybe subscribe to the videos to it. I think you guys already have an access to it. So please, if you want little bit more, you can take up only some few selected questions and look into it, because I'm only covering it revision wise, concept which is there. So just now see the next one. Alpha and beta are partners, namely Meta Chem LLP Limited, sharing profits and losses equally. So what is my OPSR? So in the question, write down OPSR is 1:1. What is the general reserve you have? What did I say? General reserve will be transferred to the in the old profit sharing ratio, right? They admit gamma for 1/6 share. The new profit sharing ratio will be 3:2:1. So you know the old profit sharing ratio, you know the old new profit sharing ratio, right? So what will be, you know how to calculate the gain ratio or sacrifice ratio. Are you clear? He brings in 2050 as capital. Goodwill will be valued at 3 lakh, but his value will only be looked at, and I know how to do the value of goodwill, right? You do the old profit sharing ratio minus new profit sharing ratio. You will get 1/6. 1/6 you will be dividing in whatever the ratio it is. Then see here, factory building appreciated, land revalued, machinery appreciated, furniture revalued, other trade receivables, blah blah blah. There is no actual liability towards the workman. So this is something we'll look into it, right? Prepare revaluation account, partners capital and all. Now see, this is my assets increase. This is my assets decrease. I have a profit on revaluation. Now when they are telling you this part, look into it. There is no liability on the workman. That means whatever reserve you have, you need to divide it between the old partners in the old profit sharing ratio. If it's only a liability, you will maintain. If there is no liability, you're going to be splitting to the partners. Clear with this? Right? So how does a partner's capital account look? Look into your opening balance, new capital. What is this? Goodwill adjustment. Then general reserve under old profit sharing ratio, workman under old profit sharing ratio, revaluation under the old profit sharing ratio. So the only thing which I have to look at from the new partner is only two entries. Which are the two entries? One for the money which brings in, second one is the goodwill adjustment. Then you know how it has to be done on the balance sheet. Is everyone clear? ಕ್ಲಾಸಲ್ಲಿ ಏನೇನಾಯ್ತು ಆಯ್ತು. So guys, are you clear with this? So that's all is the partnership questions that you have it. So you can practice more. Usually they might end up giving you a question which has both partnership and retirement. That is if they want you to screw up in your exam. But otherwise you will end up getting either a pure partnership or a pure retirement, because I think you will be getting a question on dissolution is what I personally believe. So they'll give you that as a harder question and one of this to be a easier question. That is what I am predicting it from the paper. So they might end up giving you something more difficult in the death and dissolution, and they'll give you something easier on the admission and retirement, so that you know one easy, one difficult that can just screw up on your paper. If they want to make the paper difficult, what they will do, they'll give you dissolution and they will do a combination of admission and retirement. There is couple of questions, we'll see onto it, right? So let's see the retirement of a partner. Now in retirement of a partner, same logic works between the admission and retirement. Now what is that first thing? I'll make revaluation account. Second thing, I'll make OPSR minus NPSR. I'll find out the gain ratio or the sacrifice ratio. How does this work? For my third step, it will be valuation of goodwill. What is the journal entry for valuation of goodwill? Gaining partner to sacrificing partner. Then I'll do partner's capital account. In the partner's capital account, look into the change that will happen by opening balance. But here I had by bank, right? Next one, that won't come. By general reserve, by revaluation, then again by your goodwill adjustment. Here you will have two bank. That's the only difference. Yeah, you are giving back the money. Are you clear? So the only difference is there will be by bank, here it will become two bank. Apart from it, between admission and retirement, there is no drama. To make it little complicated, what happens in case of a retirement is there are two things which you need to understand. One, if he does not give the money immediately, it will go to loan. It will go to what? Loan. And then there is an option which is available, we'll cover it a little later. What happens if it does not pay on time or other stuff? The second thing that we are going to be looking at it is like this. There will be a insurance which will be taken called joint life insurance, right? And this joint life, how does it work is, now let's say there is a partner A, B and C. For any insurance, there will be a premium that you pay, and there is going to be the money you get. If a partner dies, you get the entire insurance value. If a partner dies, you get what? Entire insurance value. If the partner retires, you get a surrender value. Life policy works what? They want you to die. You don't die, whatever is the surrender value you get. If you die, you will end up getting the entire policy value. Are you clear with this? So in case of retirement, we get what? Surrender value. In case of death, we get the full value. Except this, the journal entry for all the three cases are going to be the same. Only what is going to change between the retirement and death is which one? Insured value and the sacrifice value. Are you clear with this? Is everyone clear? Online folks? Guys, are you clear? Right? So we'll see the question, and I'll do the JLP along with the death little later. KLM are partners sharing profits and losses in the ratio of what? 5:3:2. Who wants to retire? L wants to retire and admit his son in his place. And I want you guys to mark this question, because I told you guys, if they want you make it tougher in the question, what they will do? They will not only give admission, but also they will combine it with your retirement. Right? Yeah. So now see here, the old profit sharing ratio was what? They L want to retire, so this guy of 3 is retiring and he's gonna admit his son N to his place. Now they have given you the old capital. Reserve will go to who? Who are the old partners? K, L, M. Right? Then you have on the retirement, assets were revalued. Furniture 10, inventory 30. Right? Now see here, 50% of the amount due to L was paid off in cash. So what you will do? You will do the case of retirement. Whatever the balance amount you are going to be getting, how much you will pay off to L? 50%. And the balance was retained as the capital of N. That means what is happening? The last bit of capital, let's say you had to pay 1 lakh. In 1 lakh 50,000 you will give it as cash. Balance 50,000 you are going to be transferring it to whose account?
N's capital.
So what will be the journal entry in that case? Who's receiving it?
N's.
Who's giving it? L. N's capital to L's capital account, whatever the balance is, right? Partners are going to be paid off extra balances to make the capital production keep capital proportionate, keeping N as capital. So once you find out the new capital, you need to keep, let's say for an example, the ratio is 5:2:1. Okay. A has capital balance of 60k, B has 20k, C has 15k. You are going to be making all the capital as per whose? B. That means how much should A's capital be? See, if for 2 it is 50k, for 5 it should be what? 50k. If you do a cross multiplication, 5:x is equal to 2:20k. Do a cross multiplication, it will be 50,000. But what is A's capital? That means how much extra he has. This 10k you are going to be refunding it. Same thing for C. For 1, for 2 it is 20, therefore for 1 it should be how much? 10k. Therefore how much is the extra money? So this is how we calculate. Are you clear? So I'm not going to be focusing on the revaluation and accounts and other stuff. I'll only focus on 2 things. On how the capital account will work and how will it get balanced. All other things we have covered. So I'll just run you through the entire thing. Clear? See now first, a P&L adjustment account is another name for revaluation account. Right? So revaluation of furniture and furniture. 30,000 is there. That 30,000 profit, what are you doing? You are going to be transferring it to the old partner's capital in what ratio? Old ratio 5:3:2. So you have a revaluation loss which you have transferred it to the old partners. Then general reserve, to whom will you transfer? Who are there? KLM. No problem. Now this entry and this entry we can't do it immediately, we'll have to do later. Right? Now let's come to the partner's capital account and I'll tell you how are we doing it one by one. First thing, I have to find out the old profit sharing ratio and the new profit sharing ratio. What's the old profit sharing ratio? 5:3:10. What is going to be the new profit sharing ratio? 5. His share will go to N. L's share will go to N. Right? So it will be 5:2:3. Yes or no? So who's the guy who's gaining?
N.
And who's the guy who's sacrificing?
N.
So journal entry for goodwill will be what?
N's capital.
N capital to
N's capital to.
N capital.
Now see here. Opening balance, revaluation, general reserve. Then you have revaluation loss. Right? After this, what am I supposed to be looking at? After this, what am I supposed to? What is the goodwill of the firm? See here. Goodwill of the firm is 50,000. What is L's share of goodwill? 3/10, which is coming to 15,000. What is N's share of goodwill?
Half of the
N's share of goodwill
15,000.
15,000. So L is 15, N is 15. So how does it come? N is the gaining partner, L is the sacrificing partner. So goodwill entry you will pass it. So the journal entry, once I do it, it will be what? By N 15,000 to N to L. This is the goodwill entry. Is there anything else left? Right? Nothing. So you will find L's capital. I want you to take your calculator and check how much is it coming up to. L's capital. Do the sum total of this minus this. 60 plus 15, 75. 75 plus 15.
90,000.
You are getting a capital of 90,000 minus the credit, which is coming to. Now in this 81,000, what are they telling? Half is paid, that is 40,000. How much will it get transferred to this guy? So see here, what will be the journal entry? L's capital to cash 4,500 to N's capital 40,500. So by L's capital. Understood? You understood when do we do this entry? After all the entries of L is passed, closing entries where will transfer. Are you clear with this?
Yes, sir.
Done. Now what are they telling? See the last step. They are telling me that they want your capital of N. Now if you do the closing balance, right, for N, I want you just to focus on N. What is N's debit and credit amount? 40,500 minus 15,000, it is coming to 25,500. Now they are telling this 25,500 what is there, right, of Mr. N, that should be your base for calculation of capital. Now how do you do is simple. If 25,500 is by 3/10, calculate what will be the complete capital. So 25,500 into 10/3.
76,000.
How much? Into 10/3. 80? Proper 85 is it? What is A's capital in that? 5 by 10. What is B's capital in that? 25,500. What is C's capital in that? 2 by 10, which is 17,000. Understood till now? Should I repeat anything? Should I repeat anything out here? Right? Now I will check the capital what is there. See here, K has a capital of 50,000, N has a capital of 25,500, N has a capital of 30. But what should K's capital be as per the calculation? 42,500. N's capital should be, and N's capital should be, but how much capital is there? 50. So how much excess is there? For N, how much excess is there? And for M, how much excess is there? So what is the journal entry for paying back the money? See here? Partners to bank, 7,500 and 17,000. Understood this question? This question has come very often in the exam. Lot of papers this question has come again and again. I hope you guys have understood it. Done. Next one, see here. MX is a partnership firm where A, B, C are partners sharing in the ratio 3:2:5. They have given you the data. It was agreed that B will mutually retire and in his place D will be admitted with effect from 1st July. For this purpose, following adjustments are to be made. Goodwill is to be valued as 2 lakhs, but it will not appear as the assets in the book. I don't care whatever they say. The journal entry is simple. What is that? Gaining partner to sacrificing partner. Building and machinery are to be valued at 80 blah blah blah. Investments are to be taken over the retire. What is the journal entry for taking over an asset?
Partner to asset.
Partner to asset. If what, see here, what is the asset value? How much is he taking over at? That means this 3,000 is my profit. 3,000 is my profit, and now that profit will be taken in the revaluation account. Right? So investments account, building account, plant account, bad debts account, you get a loss. Loss will be divided in the old profit sharing ratio. Right? Then what is going to be the value of goodwill? 2 lakhs. You know how to calculate the sacrifice ratio and the gain ratio? Old ratio minus the new ratio. Now once you do it, you are having a journal entry where you will get, right? This is your goodwill entry, D's capital account to C. Clear? D is the new partner, B and C are the partners who are sacrificing for it. Then what they are telling towards the end is here, the reconstituted capital will be 3 lakhs and they want it in the ratio of what? 3:4:3. So that means how much it will be for A? 90k. For C it will be 1,20,000. For D it will be, so anything adjusted or difference which is there, what you will do? You will either transfer or, so what you will do in this case is, see here, you will write this to balance carried down first and then you will do the balance. If the balance is more, you will refund. If the balance is less, you will ask them to pay the money. So you will check between debit and credit. The balancing figure will always be the bank's account. Are you guys clear with this? Guys, understood?
Yes, sir.
Right? Okay, see this is just like the previous question I did. I'm only focusing on this journal entry here. The profit and loss account for the year ended, which showed a net profit of 42,000, was to be reopened. B was to be credited with bonus 6,000 as bonus in consideration of the extra work, and the profit sharing ratio was to be revised, and the revised ratio will be 2:3:1 on 1st April. Now, what is the impact of this? What is the impact of this?
Profit should be distributed.
Okay, whenever we don't understand anything like this, is there a difference in the old profit sharing ratio and the new profit sharing ratio? See here, the old profit sharing ratio was what?
Please.
New profit sharing ratio is what? So first thing that you have to do is, wait, calculate the difference between the old profit sharing ratio and the new profit sharing ratio. When you do the difference between the old profit sharing ratio and the new profit sharing ratio, what will happen? See here, you have 42,000. Guys, here you have 42,000. Now you would have transferred this old profit of 2022 to the partners in the old profit sharing ratio. Now they are telling you that they want you to reopen it. They want you to what? Reopen it. That means you will be cancelling this entry. You will be doing what? Cancelling the entry. How did you transfer profits to the partners? Profits to partners capital. Profits to partners capital. So if you have to reverse it, what will be the journal entry? Partners capital to profits under the old profit sharing ratio. So 42 was there. Then if you are giving a bonus to the partner, what will be the journal entry? P&L to B's capital, right? So out of 42, you gave the bonus of 6. So how much are you left with as a capital? 36. This 36 I will divide in the ratio of 2:3:1. That is the impact of the whole thing. Did you understand? So when they are saying you to open it, what you will do, you will reopen it, transferring it as per the old ratio, make the adjustments, and then whatever is left over, you are going to be dividing as per the new ratio. This entry, these three things will carry 5 marks in the question. Understood? Then you have revaluation account. This anyway is fine, right? Yeah, everything else is okay after that. Are you guys clear? So we are done with the first part of your partnership. So we'll take a break. It's 2:15 now. We'll start at 3 o'clock. The other two topics, which is basically your death and dissolution, and we'll do smaller part of your rectification and subsidiary books, right? Okay. Let us start with regards to the death of a partner. Now the first thing that you guys have to remember in case of a death of a partner is, what's the major difference which is going to happen between the retirement and death? In case of a death of a partner, first bigger issue that happens is death happens in between a year, whereas retirement is planned either at the beginning of the year or at the end of the year. So that is where the drama starts. Now when a partner dies in between a year, right, you need to clear off his money within a particular point of time. If you don't clear off, then there is a new regulation which comes into picture. And what does this law say? Law says that if you are not able to contribute towards the capital, now see here, if you don't repay the capital, now see here what it says, where any member of the firm has died or otherwise ceased to be a partner, and the surviving and the continuing partners of the firm with the property of the firm without any final settlement, the outgoing, then in his absence, the outgoing partner is entitled an option or is representative to share such profits made attributable to his share of property or the firm at the rate of interest of capital. So ಏನು ಹೇಳುತ್ತೆ ಅಂದ್ರೆ, either whatever money you have to pay what? 6%, or share of profits based on his capital proportion. Is what proportion? Now, out of both the things, which one should the representative look at, right? The representative always looks at making sure whichever is higher is what he is going to take. Now, let us try to look into this question and understand it a little further. Now, A, B, C are in partnership sharing profits and losses equally. C died on 31st October. The capitals of the partner after all the adjustments were 50,000, 70 and 20. So A and B continue to carry on the business further without settling the accounts. The final payment was made to C on 1st February. So when did he die? October,
31st October.
right? So you have what? November, December, January. So for 3 months, if you calculate interest, it will be what? 1,20,000 into 60, 1,800. This is what? Option 1. What is option 2? Now see here, whatever profits he has made, you are gonna take the proportion of capital. What is the proportion of capital you have? 1,20,000 divided by 120 plus 75 is what? 195 plus 50, 2,45,000. That is coming to 13,714. Are you clear? Guys, are you clear with this? Any doubt? Now, as a person or the legal representative, which one will you choose? 1,800 or 13,714? 13,714. That will be the payment that has to be done. Are you clear? Now, once this is done, right, you will have to transfer it to the partner. The journal entry will be P&L suspense account debit to whichever partner is dying or whose partner is. So that will be the journal entry. Are you clear till now? Okay. Now let's come to the major thing, which is the joint life policy, and this is gonna be applicable for retirement. What is the rule I told you guys? The difference will happen where in the retirement I am going to be taking only the surrender value, whereas in case of a death we will be taking the policy value. Understood? Now, first thing that you need to understand, there are 3 ways of dealing with joint life policy. And please, this is too short a time to go in depth, so I am trying to tell you in a very logical manner. Try to understand how it works. Joint life policy can be treated as an expense, asset, and a reserve. Joint life policy can be treated as what? expense, asset and a reserve. Now see here, every time you pay joint life policy, let's say joint life policy is 10,000 rupees, you are paying every year. If it is an expense, when you pay a expense, what will be the journal entry? To pay, to pay. Joint life policy to. So every year, when you pay, this will be the entry. If it's an expense, what do you do at the end of the year? Transfer it to.
P&L.
Okay. Now understand, when I do this, is joint life policy appearing in the books? No, right? Now let's say a partner retired or a partner died. I told you it's just the amount difference which is there, but let's look into the journal entry. When a partner retires or dies, what will happen? What will happen? You are going to be getting the money, right? Let's say you got 28,000. What is the journal entry for receiving it? Bank to joint life policy account. Bank to joint life policy account. It's okay. Madam's courtesy. Right? Joint life policy to bank. Now, since here you have treated it as an expense, when you get back something, entire thing will be treated as profit. Entire thing will be treated as what? Profit. And how do you what do you do with the profits of the company? Share it to the partners. So then you will do JLP to partners capital. Understood? This is in case of what? In case of treating it as an expense. Now since we are going to be doing the retirement stage, listen to it. Since we are doing what? Retirement, or I will always be concerned only with these two entries. But if I am like a mad guy, I want to test whether you know it or not, I'll ask you this also additionally. Understood? Now see what are they telling here. What is the journal entry? Journal entry will be bank to joint life policy to partners capital. See what are they saying? Joint life policy does not appear in the books. Does not. The moment they say does not appear, my mind should say what? It's a expense. So once, that means A, B, C are in partnership sharing profits and losses in the ratio 5:3:2. There is a joint life policy of 1 lakh. A dies, the firm will receive 1 lakh. I told you, if whatever is the policy amount you will get when a partner dies. Are you clear? So now, what is the profit sharing ratio? So when you receive the money, bank account to joint life policy, then joint life policy to A, B and C. Understood? Guys, clear? Right? Let's go to the next one. Next one. If joint life policy appears in the balance sheet at surrender value, what does this mean? I want you to look. Joint life policy can be treated as a asset. Joint life policy can be treated as what? Asset. Now, how does this work? Let's say I am paying joint life policy of 10,000 every year. What will be the journal entry? What will be the journal entry? Joint life policy to bank. Let's say 10,000. 10,000. Now, what we have to do, we are going to be following a concept of conservatism. We are going to be following a concept of what? What does conservatism principle say? That any losses that is there, you need to record it. Let's say they say the surrender value is 2000. Surrender value is how much? How much did you pay premium? What is the surrender value? So what is the decrease in the value of the asset? This 8,000 will be treated as loss, right? Now how do you treat loss? P&L account debited to JLP account 8,000. Are you clear? So in the book, at what value is it appearing? 2000. Okay. Now look into it. What happens if joint life policy is treated as an asset? What was the value in the books of accounts? 2000. Now partner retires, partner dies. Partner retires and partner dies. If partner retires, how much will the company get or the partnership firm will get? They will get 2K. Correct? Asset value is what? You are getting what? So there is no profit or loss. What is the journal entry for sale of an asset? Bank account 2K to JLP account 2K. Understood? Now if he dies, how much will I get? No. Let's say the policy value is 1 lakh. Premium amount was 10,000. So if I die, how much am I going to get? 1 lakh. Now what will be the journal entry? Bank account debit 1 lakh to JLP 2000 to profit 98,000. Understood the difference between the retirement and death? Now what will happen? This profit you will be transferring it to the partner's capital account. Are you clear with this? Done? Now see the question. There are two ways of doing. Either you can do it directly or the other one. See here, if the joint life policy appears in the balance sheet at surrender value, that means we are treating it as what? It will always appear in the balance sheet at surrender value only. It means it is treated as an asset. Boss, understand the difference. If it's a retirement, whatever is appearing in the balance sheet, which is what? Surrender value 10,000, you will get 10,000 only in case of retirement. In case of death, you will get the entire policy amount of 1 lakh. Right? So now in this case, what happened? A dies. So what will you get?
1 lakh.
Bank account to joint life policy 1 lakh. Then what do you do with what is the profit that you have earned? 90,000. This profit, what will you transfer to? A's capital, B's capital, C's capital. If you want, you can do 2 P&L and then also do. It will be the same effect if you do the combined entry. Are you clear with both the cases? Guys attending online, are you guys clear? Guys, shall we start next? Now the third case is, see here, JLP will appear as an asset, also as a reserve. Also as what? Reserve. Now what happens in this case is, it's a combination of two. When it is a reserve, we have to distribute in the profits. right? And when I sell it, whatever I get will get adjusted in the reserve, the balance goes to the profit. In case of a retirement, what happens? Assets will be only at the surrender value, so only whatever is there in the reserve will get divided. Now let's try to understand this. Joint life policy appears in the balance sheet at the surrender value. That means they are treating it as a asset with the joint life policy reserve. Now let's see, ABC are in partnership sharing profits and losses in the ratio of 5:3:2. They took a joint life policy of 1 lakh, which is appearing in the balance sheet at the surrender value of 10,000 along with the JLP reserve. That means JLP reserve will be to the extent of 10,000 only. Are you clear? Now if A dies, first journal entry, what do you get? Bank to joint life policy 1 lakh, 1 lakh. Then what did we do? JLP to A, B, C, 90,000 profit I distributed. This was the entry for asset. Then how much was there in the reserve? 10,000. That 10,000 you will transfer to A, B and C. Yeah, everything is in OPSR. Are you all clear?
You can also reserve the joint life policy
Reserves profits, no? Keep it aside. Okay. Now let us try to understand in case of a separate life policy. Okay. A, B, C. Okay. Let's say surrender value was 10,000, 10,000, 10,000. Policy value is 1 lakh, 1 lakh, 1 lakh. A dies. A dies. What will happen? A dies. What will happen? Only A will get 1 lakh. B and C will get 10,000, 10,000. Are you clear with this? So, when they have a separate policy, what will happen in that case? Only the partner who dies, he will get the entire money. All other guys will be getting the surrender value. Because the firm will, if a partner dies, the firm will get dissolved, no? So you will have to dissolve the firm and then restart, no?
Reconstitution of the agreement.
Reconstitution of the agreement, no? But since we keep the asset as it is, we'll try to close the balance sheet, but it's actually a reconstitution of the firm. Done till here? Okay. Understood what is the difference between the retirement and this one, right? Covered the case. This one. So at home, right? Practice illustration number 2. Death second illustration one sati practice ಮಾಡಿ. I am doing illustration number 3 and 5, I guess. 3 and 5. ಇಲ್ಲ.
So second usually death is the most easy salary partnership.
Dissolution full easy.
Dissolution ಬೇರೆ.
Death full easy.
Okay. ನಿಮಗೆ ಈಸಿ ಅಂದ್ರೆ ಈಸಿನೇ ಮಾಡಿ.
Sir, but
ಬೇರೆನೂ ಇದೆ ಅಲ್ಲಿ ಏನು ನೋಡೇ
ಅಲ್ಲಿ difference ಎಲ್ಲ ಇದೆ ಮಾತ್ರ ಇದೆ. Normally
Okay, anyway, we'll see. I don't consider PU exams on this one. ಅದಕ್ಕೆ PU ಅಲ್ಲಿ 100 ಬಂದವನು CA ಫೌಂಡೇಶನ್ ಫೇಲ್ ಆಗ್ತಾನೆ. Right? ಅಲ್ಲಿ it's a format based, here it's pure understanding based. And once you get into this understanding mode, right, your entire learning becomes completely different for the other subjects also. Shall we start?
Yes, sir.
B and N were partners. The partnership deed provides the accounts to be balanced on 31st December every year, that the profits to be divided 1/2, 1/3 and carried to the reserve account 1/6. So whatever profits they have made, they have divided that 1/6 will go to the reserve, balance will be divided between B and N. In the event of the death of the partner, his executor will be entitled to the following: the capital to his credit at the date of death, his proportion of profit to the death based on average profits of the last 3 completed years. His share of goodwill will be calculated on 3 years purchase of the preceding 3 years. They have given you the trial balance. They are told profits for the 3 years was 42, 39, 45. N died on 1st May. Show the calculation of share of profits.
Plus 20.
Okay. So when are you closing your accounts?
31st.
When did this guy die?
May.
When did this guy die?
May 1st.
May 1st, right? So what do you do with it?
7 months.
Now see here, what I will do. First thing, understand how are they saying. Is portion of the profit to the death is based on the average profit of the last 3 completed years. So ಅವ್ರು ಏನಂತಿದ್ದಾರೆ, last 3 years what are they saying? That you are supposed to take the last 3 years average profit and then take it till the time of death. When did he die? May. That means January, February, March, April. For 4 months, 4 months you are going to be taking his portion of profits. After letting in mosquito, she is letting in virus also. She has full revenge. Today is the last day. Let us make sure that he falls sick. Let's see how we'll go to kingdom. So see here. So the last 3 years profit was what? 42, 39, 45. Total profit was 126. Sorry, he died I think on
May.
May which date? Sorry.
First.
So
4 months, right? So 4 months average profit, if you do, right, average profit will be last divided by 3, 42. For 4 months profit it will be 14, and he is going to be getting how much share of the profit? We have to do that calculation. So they are telling B will get half, then N will get 1/3, and in the balance 1/6 will go to the
Reserves.
reserve, right? So if you look into it, what will be the ratio? If I have to do it, it will be multiplied by 3 and 3, 2 and 2. So the ratio will become 3:2. Correct? So on 14,000, N's share is 2/5, that comes to 5,600. Calculation of goodwill is easy. What are they saying? Find out the total, divide by 3. On average profit, goodwill will be calculated of, right, 3 years purchase. Then what is going to be N's share of goodwill? 2/5. That comes to 50,400. Now what all will the executor get? Capital, his portion of reserves, then his share of goodwill, and whatever profit he has earned till his time of death, that will be transferred to his loan account. That's all is the question for 5 marks or 8 marks. Any doubt in this? This question, I'm just doing it because it's a little bigger question so that we can cover everything, right? Guys, can we start? Next one, online folks. Divya, Ria and Kia are partners of MSDRK Fabrics, sharing profits and losses in the ratio of 2:1:2. On 31st March, their balance sheet is as under. So you have first thing to identify, then you have, I know joint life policy, if it's appearing in the balance sheet, it will be in the, so we know what case to be done. We know that journal entry, that is your 2 marks. I'm just telling you how to class, and we know how to divide this also. Which ratio? Partnership provided that partners will be allowed at interest of 12% on their capital, but no interest on drawings. On the death of the partner, the goodwill of the firm will be valued at 1 year's purchase of average profit after charging. Have you done a similar case like this? Read this. Upon death of a partner, the goodwill of the firm will be valued at 1 year's purchase of average net profits after charging interest on capital for the 4 years to 31st March preceding the death of the partner. If the interest was not charged earlier, if you're going to be charging it, what did we say for the purpose of goodwill calculation?
For future profit.
So we have to reduce it. We did know the previous question just before the break, where the interest and other things were there. We need to reduce it from the. So I told you either you can reduce from every year or you can do the average and reduce it across. Profits to the date of death is ascertained on the base of average profit of the previous year. On the death of partner, she is entitled to her share of profits, interest on capital till the date of death. 2 lakhs was received from the insurance company against the joint life policy. What was the value in the books? 60. What did you get? So what is the profit? 2 lakh minus 60, 1 lakh 40. Land and building was appreciated, depreciated, blah blah blah. Huh?
For debt, executors account.
Why?
And our purely bari
Appreciation.
purely bari executors account ಮಾಡ್ತಿದೆ ಸರ್ ಅದಕ್ಕೆ ಬಂದಿದೆ.
Why?
In executors.
Madam, when do we do revaluation?
No sir, in executors account that will come.
That's what I'm saying. Why do you do revaluation account?
Revalue the.
For any case which is having a reconstitution of the firm, right? Death of a partner is a reconstitution of the firm. What did I say? At that point of time, the only difference between retirement and death is that retirement will happen at the end of the year, whereas your death will happen during any point of it. So at the time of death, whatever is the value of the assets, that is what the death executor will get. So so here, see here, land and building, furniture, inventory, this, you get a profit on revaluation which will be divided between A, B and C. Now partners capital account, what all do you get? Now see here, opening capital, general reserve, joint life policy, you will be getting how much amount? Out of 2 lakhs, 60 is already appearing in the books, you will get 1 lakh 40. Do the total, check, is it 1 lakh 40? Right? Then you will be giving him interest on capital. Then you will give the revaluation, profit, then the share of goodwill. Are you clear? So the journal entry, which is going to be different from your, what do you say, admission, retirement and death, is these 2 entries. So you will be giving him the profit till the time of his death. How do you do that calculation? See here, you have done your total profit. In that you reduce your interest on capital, you will get adjusted profit. Goodwill has been calculated at 1/5. Kia's share is 60,000. Now they are telling you, if On the year of death, right? Average profit for the full year before interest on capital was 160. Therefore 6 months profit will be this. Reduce the interest, so you'll get the adjusted profit. In that 2/5 share will become part of us. Average profit, or else the easier way to do it is like this. See here, 1,86,000 is the profit for the entire last year. In that, interest on capital is how much? I think oh, there's a mistake here on the interest on capital. It should be 3 lakhs into 12%. This is mistake, so just change it in the question. So guys, this is a mistake. It has to be 3 lakhs. That capital, see here. The capital amount in the study material, change it. It's actually the interest on capital is 3 lakhs. So they have taken it as 4. So this amount will change. So the adjusted profit will become 3 lakh into 12% into 6 by 12. How much will the value be? It will become 18,000. So accordingly, this will all change. Understood the death of the partner? So death of a partner, only 2 adjustments are there. One is what? Major part which we can expect in your exam. That's your dissolution of partnership. Now, what do you mean by dissolution of partners? Now, dissolution of partnership basically means that the firm is getting closed. Now, the rule that we need to understand is whenever a partnership firm is getting closed, all the assets and other things are going to be transferred to the realization account. All the assets and liabilities will be transferred to what account? Realization account. And once the assets or liabilities are transferred to the realization account in the book value, you will try to realize. Realize means sell all the assets and clear all the liabilities. You're going to do what? Sell all the assets and clear all the liabilities. So now see here. First thing, in the realization account, I will write all the assets on the debit side, all the liabilities on the credit side. Okay, next part. What you are going to do, all the assets, everyone just look into it, you can write this later. All the assets that I am transferring, I need to make sure it is getting sold. All the assets I am transferring should get what? Sold. Now, if it is not sold, it would be taken over by partner. So that will go to the partner's capital account. Same thing with the liability. Same thing with what? Liability. All the liabilities will be transferred except what is left for partner's capital, reserves and loan. Are you clear with this? Right? So, see here, first thing you're going to transfer all the assets, liability, then you will sell or take over by the partners. Liability is again the same drama. Either you will pay or it will be taken over by the. Then next part of it is, there will be, for doing all of this exercise, there is going to be expenses. So that's going to go to the realization account, right? Then if it's a profit, it will come on the debit side, loss, it will come on the credit side. Now, look into the second part of it. I told you in the admission, retirement and death that we will be doing what? The goodwill. Now here we need to understand this. Goodwill, right? Only if it appears in the books, only if it appears in the book, we'll treat it as a asset. Boss, I'm not gonna create a goodwill like admission, retirement or death. Why? Because the firm only is getting closed. I was Vijay Mallya. What will happen? You were Vijay Mallya only till you were Kingfisher. No longer you are part of Kingfisher, whether you are Vijay Mallya or Arjun Mallya, it does not even matter. Right? So when the firm gets closed, there is no concept of goodwill at all. So only if when the whole Kingfisher story happened, what happened? The brand of Kingfisher gets sold. That has a value. You would have purchased value of Kingfisher, that when it's sold will have a value. Otherwise, intangibles cannot be shown. So you will not do that whole drama of creating and valuing a goodwill and other stuff. That will not appear. If it's already there, then you will treat it like any other asset. Understood? Partner's loan, if you pay it, it will be the same. So let's just, till now you understood this part. Till now you understood this part, right? Now where is the drama with the entire chapter, right? If they give you a very basic question, it is not necessary that you will be getting the value of the asset at one shot. You might be getting in bits and pieces. So that is what will happen to make it complicated. Easier question is what? To do the realization account and the partner's capital, so that the accounts gets closed completely. If not, then we'll have to look at from the piecemeal and other distribution mechanism. Now see this question. Read this question. This is the basic question that we have. Yeah. XYZ are partners in the firm XYZ and Co. sharing profits and losses in the ratio of 4:3:2. The following balance sheet of the firm as on 31st March 2022 is as follows. XYZ general reserve blah 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 given. Now what is the first rule I told you guys? I don't care whatever is the asset, whatever is the liability will get transferred to what? So I'll go here. I'm just making it a little small so that look at all the assets 1, 2, 3 except cash and bank balance will come to what account? Realization account debited to assets account. Then I have one liability 3,20,000. So once this is done, I want you to follow the steps that we do. This is your step 1. Now step 2 that we are going to be doing is whatever is in the capital will go to partners capital account. Third one, whatever is in the reserve will get split into what? partners capital in the old profit sharing ratio. Sorry. Done. Then finally whatever is in the cash or bank will come to the bank account. Once we are done this, look into it. Have I recorded everything in this? Just check once, have I recorded everything in this? This went to realization, cash account. This went to partners capital. This went to. That's the step 1. Are you clear? Step 2, what I will do, whatever assets I have taken, I told you there can be only 2 things which will happen. What are the 2 things? Either sale or it should be taken over by the partner. Now see here, fixed assets realized 520, book debts 440. So asset number 1, asset number 2 done. Stocks were valued at 2,50,000 and it was taken over by Y. So how will I write in the realization account? By cash, this was 2 assets, by Y for the stock which he has taken over. Clear? Now I am done with, have I taken all the 3 assets? Debtors was debts, no? 440. Have I taken all the assets? Now let me come to the liabilities. Right? Which is the liability I have? Creditors. Let's see what are they tell. Creditors are allowed a discount of 5%. That means in 3,20,000 you are giving a discount of 5%. So you will be paying them how much? 3,04,000. Have I done with all the assets and liabilities? What was the next step I told you that we have to do? Record for the cash expense. That's the realization. So that will be 2 cash or bank. Step 1, 2, 3, did you understand? Then next step, we are going to find out the profit or loss. How much is the profit or loss? You have a loss of some amount which gets divided between X, Y and Z. Are you all clear? Now let's come to the partners capital account. You have reserves, then you have realization loss, you have the taken over, then finally it will be cash. Now come to cash account. Whatever I wrote it here, 2 cash, and here 2 cash, here 2 cash, then here 2 cash. So wherever I wrote 2 cash or 2 bank, everything put together, when I write it, this should get tallied. If this gets tallied, you are done with right.
Sir, what if the realization accounts they write on the debit side as goodwill? Yeah, and they will take it on credit.
Only once.
It will be taken only once or it will be sold off.
So that's what, if they don't say anything, that no information about the goodwill is given, that means it will only come once.
Okay.
If they say, okay, the goodwill of the firm was taken over or goodwill of the firm was sold or realized, only then we take the second part of it. Understood? Realization, is it easy? Okay, so we'll go a little further. Okay, so this you get, you have been the luckiest in the examination, what we did right now. You have again illustration number 1, 2, 3, 4 on the same thing, same mechanism. Again I'm just repeating what was the mechanism that we followed. All the assets should be sold to
Sold or
Just-
taken.
all the assets should be transferred to realization account. All the assets will be transferred to the realization account and all the liabilities will be transferred to the realization. Next step, partners capital will be taken to the partner's capital, that's the reserve. Then cash account will go to the cash. Then you will close, all the assets should be taken either by the partner or by the sold. That will come to by cash or by partner's capital. Same thing will go for the liability. Difference will be the loss. Loss will go to the partner's capital. Then you will close the partner's capital by transferring it to what? Cash. And now all the cash will come to the cash account, and if everything tallies, that means you have done it right. Are you guys clear? Right? Just give me 1 sec. You guys can come in.
और बाइक क्या यहाँ से अल्लाह ईड है तो देखना सकता है
Just look to further to it.
Hello. Sir. Happy birthday. ಕೊಡಿ ನಾನು ಹೇಳ್ತೇನೆ. ಹಲೋ ಸರ್, ಅದು ನಮ್ಮ ಫ್ಯಾಕ್ಟ್ರಿ ಕಾರ್ ಕೊಟ್ಬಿಡಿ. ಅದು ಮಳೆ ಬಂದಿರಲ್ಲ, ಸ್ಟಾರ್ಟ್ ಅಂತ. ಹಲೋ ಸರ್, ಅದೇ ಅವ್ರ ಕಾರ್ ನಿಲ್ಸಿಬಿಡಿ. ಅವ್ರು ನಮ್ಮ ಫ್ಯಾಕಲ್ಟಿನ ಇವತ್ತು ಮಳೆ ಬಂದಿರಲ್ಲ, ಅವ್ರ ಕಾರ್ ತಂದಿದ್ದಾರೆ. ಹಾಂ, ಓಕೆ ಶೋರ್ ಸರ್. ನಾನು ಅವ್ರಿಗೆ ಮ್ಯಾಥ್ಯೂ ಅವ್ರಿಗೆ ತಂದು ಕೊಡಕ್ಕೆ ಹೇಳ್ತೀನಿ. ಓಕೆ. Guys, are you clear with this? Right? Now let's go to the second part of it, which is oh damn, I have not taken that question. I missed one question which has to be done. Okay, just remind me that there is one question that I'll have to teach. Okay, now this is the easiest part of the question. If you get, like I said, if you get this part of the question, you are the most luckiest out there in the examination. Now what happens is, now when we are trying to sell any of the asset, we might not get all the money at one shot. We might not get what? All the money at one shot. So because of it, what we do a piecemeal breakup. That is, whenever we realize money, we keep paying that off. Whenever we realize money, what do? We pay it off. Just 1 sec, I'll see the... Okay, I have this question, thank God. Okay, now in this there are multiple methods, and one of the first method that we are going to be doing is called as maximum loss method. Now please just understand the questions and also the theory that I am saying, because you are doing it closer to the exam, right? Now whenever we realize some money, we assume that is the only money that we are going to get. So let's say I have an asset worth 10 lakhs. I sold today, I got 1 lakh. I'll assume that 9 lakhs is the loss. I've got 1 lakh. That's what is called as maximum loss method. So when you sell, you will assume that none of the other assets and liabilities can be sold. Everything will go for a loss. Whatever you have realized is the final money that you will distribute to the partners. Understood? Let's try to apply it in a question and see how it works. ABC were partners sharing profits and losses in the ratio of 5:3:2. Their capitals were 9,600, 10,000 and 4,000 respectively. After paying the creditors, the liabilities and the assets of the firm were spouses of the partners, and the partners' investments were given. The assets realized full in order in which they are listed above B. Above B is insolvent. You are required to prepare a statement showing the distribution of cash as and when available, showing the maximum loss procedure, right? Now see, first thing that we do. Now, how much is the money that I need to pay to them? Okay, I'll write the first step as balances due. In the order in which I have to pay. First, I have to pay to the spouse, then partner's loan, then you will be paying the partner's capital, right? First, you got sale of investment. You got what? If you sell investment, you got 1000. So still how much pending out of 2? 1. So you got how much left? 1000 left. Next, you are selling furniture of. So you will pay off. Done. Then next one, you have what? Sale of machinery. Now sale of machinery, what are they telling? Now if I am selling the machinery, now what you need to do is like this. What is the total capital which is there? How much is total capital? 9,600 plus 6,000, 15,600, 16, 24,000. In that, if you get a sale of machinery, now I am coming to the capital. Listen to it. I am coming to what? Cap. So out of 24, I have paid all the other guys. I am only left with machinery money which I have to pay to these 3 guys. So out of 24, if I am going to be paying 1,200, what will be the loss? What will be the loss? Can I say 22,800? This 22,800, you are going to be now dividing it in their profit sharing ratio. You are going to be dividing in what ratio? So when you divide it in the profit sharing ratio, how much are you getting it? Look into it. 11,400. This. Understood? Now what you will do, in the partner's total capital, what is there? What are the last set of assets which are left over? If you sell it, what do you get? You will reduce it from the total capital. So you ended up getting a loss of what? This is the maximum possible loss that I can suffer. That maximum loss that I am going to be suffering, I will be dividing it in the profit sharing ratio. Once I do it, I will get this amounts, which is equal to 22,800. Clear? Now what you will do, from the capital, you will reduce the max loss. From the capital, you are going to be reducing what? Maximum loss. Now you are getting how much in the credit? Yeah, right? That will actually be your sale of machinery value only, because at the end these two should be equal to 24,000. Are you clear? Now see here. Now when I see this, look into it. What looks very strange?
Your minus is there again. You have
No. See here, I want you to just look into this. A is having negative, B is having negative, C is having positive. Right? Is that fair? Is that fair? No, right? So what we will do, we are going to be reducing, we are going to make these two also equal to 0. This two deficiency, we are going to write off against the guy who is having a profit. So what was the total value of this two? Do the number. 2640. So for me, simple boss, I'll write it as deficiency and I'll write their values in the positive. These two together, I'll be reducing it. So now how much is the amount paid? That 1,200, what you get from the sale of machinery will be given only to C. Understood? Now, out of 8,400 of C, 9,600 of A and 6,000 of B, did you pay anything to A and B? No. To C, how much you paid? 1,200. So you are left with 9,600, 6,000 and 7,200. Are you clear? Right? Now next, they are trying to sell stock. Next they are selling what? Stock. Now if this is the capital, I am going to be repeating the step again. See here, 22,800 is my capital. I am going to be selling the stock for how much? 4,000. If I sell the stock for 4,000, how much will be the loss?
18,800.
What will I do? 18,800. I am going to be dividing it in the ratio of 5:3:2. Right? Now look into it. Amount of credit paid 200, 360. Now what I will do? I will reduce my capital with this value. Everything is profit. So this would be the maximum loss which are going to be suffered from each of them.
The sale of stock can be taken first.
After
So
2, 3 and
see, they are telling you see here.
full in order. First investments only.
You have to give you the order. Here they have given you the order.
in order also 1, 2, 3, 4 we can take this.
Huh?
Then you have done 2 times this above and
Which one?
scroll to them.
Huh?
So 1, 2, 3. In there only we can do 4th one also.
No, pa.
Other the loss-
What is maximum loss method? That's what I'm saying. For every asset that you are selling, you will assume that that's the last asset that you're going to sell. And you'll find the loss. Then you will go to the next asset. So every asset you will be netting it off. That's what I told you at the beginning of the topic, no? Understood this? This is my pick for the examination. If I am giving you guys the foundation exam this time, this is my pick question. Done? Okay, now see here, the next question I am trying to just go through so that we understand the same thing with different part of it. The following is the balance sheet of ABC on 2022 when they decided to dissolve the partnership. Assets, you have capital, loan and creditors. The assets realized the following sums in the following installment. So the entire asset value they have realized in how many installment? The expenses of the realization amounted to 500 but ultimately amounted to 400. Show at each stage the cash received should be distributed in the ratio of 2:2:1. Now first thing that we have to understand is whatever money I am going to be getting first, I have to first clear off the outside liabilities. Order 1, how much money you have? How much is the creditors? Order 2, how much I have?
3,000.
So how much am I left with?
Should take 1,000 from the
2,000 will be. Are you clear? Right? Now next, how much is there? 3,900. What will I use? I have 2,000 and 3,900. Which was the first one that I am going to be paying off? Ace loan. Right? Then I am left with. Then I am left with. Then I am left with. All this will be used towards the capital. Did you understand this portion? Any doubt in this? This is the crux of the chapter. Now First, what is the maximum loss rule say?
We take each value.
What? So first thing, look into it. How do we? So this is the table that we did: 27,900, 6,000, and 20,100. Are you clear? Now, see here. First thing, what is the capital which is there? 15, 18, 19. So the total capital is what? 42. Now, what? How do you do capital maximum loss? Look into it. Out of 42,000, first money I'm going to be getting is how much? 900. This one, no, first one, right? So first money I'm going to be getting is what? 900. If you get 900, what is the loss you will suffer? 41,100. This 41,100 I'm going to be dividing in the ratio of what? 2 is to, okay, 2 is to 1. Once I do this, now see here, this is negative, this is positive, this is positive. What did I tell? You cannot have negative. So whatever this is there, you're going to be dividing it in the ratio of 2 is to 1. So that this becomes 0. This you are getting 600, 300. Now what is the new capital that you have? 15 will remain 15 only. 18,000 mein how much did you pay back? 600. And in the 9,000 you have paid back 300. So it is left with 87. Now what is the next amount you are going to be paying? 6,000. So if your total is 41,100, you're going to pay 6,000. What is the maximum? The balance capital I have is what? 35,100. Now in that, if I remove 20,100, what is the maximum loss I will suffer? 15,000. This you divide again between 2 is to 2 is to 1. So finally you will end up getting the manner of distribution of 800. So what was the original balance and how much did you pay in 27? This is what is your final answer. This is pure mechanical. Please don't do mistake of this. I would want you guys today, once you go back, watch the video again and do it independently. If you have any doubt, bring me across. But please make sure don't miss any of this. I'm expecting one question to come from this chapter. Understood the maximum loss? So from the capital, every time you realize money, you will reduce it. That will be the loss. That will be the loss. That loss you will divide for all. Then you will do opening capital minus the loss distributed. If it is negative, that negative you have to make it 0 and then divide it to the other guys. This you will continue till the entire money what you have realized you have split it around. Done. The last concept of the chapter. The last concept of chapter is basically called as highest relative capital. Highest relative capital. Now what it means is that whoever is having more capital compared to their profit sharing ratio. What does it say? Whoever is having more capital than the profit sharing ratio, that guy we are going to be paying off. For an example, let's say your profit sharing ratio is 2 is to 2 is to 1. Okay. Let's say you are having 10,000, 25,000 and 30,000. Now, if as per this ratio, how much should A and B's capital be? 20, 20. What is A is having more? 10k. B is having more. So first thing you will pay this. Then once this guy paid, can I say this guy will be 20? This guy will be 10. Next time you get money, you are going to be paying this 5. So that means now can I say their capital will be in the ratio of 2:1? After that, whatever is there, you will keep dividing it in that ratio. So first thing that you're going to be doing is whatever you get money, you will try to pay back as per making sure the capital is same. Then you will pay off. This is the logic of the entire topic, right? This also is actually quite easy if you just understood whatever I've told you now. Please again I'm requesting, make sure spend little time especially on the debt for the question, so that you don't lose this 10 marks. 10 marks, I'm saying 10 marks, this is done. This actually is very easy chapter, dissolution of firm. Dissolution, admission, retirement, something or the other you will do. I'm saying last part maybe you might do one mistake here or there, but you can do most of it. Death of a partner or dissolution, if you get 10 marks. Their complications are lesser, death and dissolution. Admission and retirement, they'll complicate a little, right? I'm saying I'll get only 5 marks. Together partnership if I get 15. Company accounts if I get 10. 25 done. BRS 10. 35 marks of your paper is done by itself. Then your theory 20 marks, 55. Then all other chapters, even chuttu puttu you answer, you should be able to get your 60-65 marks of the paper. First paper, if it goes well, your law you will be little motivated to do better. Yeah, shall we start? The previous method, what I did? Maximum loss method. Previous method was called as maximum loss. This one they will tell you as the proportionate capital. Creditors were paid 29,000 in full settlement of their accounts. Expenses of the realization was blah blah blah. Actual amount spending was 4,000. This was paid. Drop the statement which was realized as follow. What does the rule first say? When you realize the first money, to whom will you pay? First outsiders. First outsiders. So you have to pay your creditors and your expenses. So total expenses what? 29 plus 9? 33,000 is the money that you have to pay to them. Now how much money you have in cash? 10,800. So now look into it how it works. In this 10,800, I have to keep first my expense for realization, which is how much? 5,400. So how much are you left with? How much you are left with? This is the cash I am left with, right? Now I have a capital of how much? Now if I have to look into the statement, see here, I have 30,000 which is my creditors. I have B's loan 10,000. I have all the three capital of 76, 84, blah blah blah. Now first thing, out of 10,800, I'll be first paying off my expense. If I pay 5,400 back, I'm left with how much for creditors? 24,600. Does it make sense? First estimated ಅಲ್ಲ, ಕೊನೆಯಲ್ಲಿ ನಿಮಗೆ actual ಆದಾಗ ಏನು ಡಿಫರೆನ್ಸ್ ಬರುತ್ತೆ, then you will take it. First you have to pay all the guys, right? Clear? 24,600. 24,600. Now the first installment, look into it. How much are you getting in the first installment? You are getting how much? 25,200. So you are supposed to still pay to the creditors 24,400, but you are getting a balance of 25,200. So now look into it. This can be done two ways. I'll just explain it to you. See here. Option number 1, I'm receiving 25,200. Can I say I'm also saving 1,000 from this? 1,400 Allah. How much was the actual
4,000.
so 1,400, can I say I've saved this? That means I'm totally saving, can I say 26,600? Yes or no? Now I am supposed to be paying how much to this guy? 24,600. But I am having how much in bank? 25,600. So that means I am saving still how much money? Are you guys clear? Right? Now option 1. Just give me 1 second. Just give me 1 second.
Once again, I can
Okay.
Okay, creditors here. Creditors were paid how much? See here, the creditors amount is what? 30. They are paying them what? 29. That means you are getting a discount of how much? Hey, 30,000. You are paying them what? 29. Now see here, I have 30. In that 5,400 cash was there immediately that I paid. I thought I am supposed to pay them how much? 24,600. But I will only end up paying them how much? 23,600. Are you clear? This 1,000 what is there? It will be transferred to my realization because this is a profit. Understood? Now let's come to the second, guys. Now, how much money was left for you? In this 25,200, you are actually utilizing only 23,600. You are still left with how much balance? 1,600, no? Out of 25,200 what you received, you utilize 23,200 for the creditors. So you are left with how much? 1,600. Whom will you pay? The partner's loan. So you paid 1,600. Next, you got 60,000. Whom will you clear first? You will clear B's loan. Now out of 60,000, if I am already utilizing how much? 8,400. I am left with how much capital? 51? 51,600. Now what did I say? See here, this is the working note that we are supposed to be looking at. You are going to be looking into the present capital. You are going to be looking at what? Present capital. Now the present capital, the ratio is what? 2:1. Okay. You divide this present capital with the profit sharing ratio. You will divide what? Present capital with the profit. If you divide it, what are you getting? Wait, 38, 44 and 36. Okay. Who's the least capital out of all the three once you have divided it? Who's the least capital? Now see here, the least capital guy is B. Now multiply this B with this and this. Multiply this B's thing with what? 2:1. That will come to what? 48, 24. Now this capital, originally what he had, you're going to be reducing with a new capital. We'll reduce with a new capital. So how much extra this guy has? 28. This guy has an extra of 12. Okay. Now let's go further down. I'll only take these two guys. I'll only take what? So again I'll do the same exercise. It was 2:1. I'll take 2:1. That will come to what? 14 and 12. Who is the lowest? 12. So that means 12 into 2 will be how much? 24. This guy will be what? 12. Clear? Now, how much was the excess capital? 20. For how much was this guy's excess capital? 12,000. Now, you will compare this capital with the new capital that you found out. How much excess he has? 4. So what is the new capital? 24 and 12, right? Now what it means is, see here, how much extra that guy had according to you guys? How much extra that guy had? Now if you do this calculation, you said extra was what? $51,600, right? In that 51,600, the first extra will go to who? Just Mr. A, because he had this 4,000 extra. The next extra of your $32 plus 12, you're gonna give it to in the ratio of anything else extra is there, you're going to be paying in the ratio of what? 2:1. So that means this 51,600, if I have to look into it, how does it go? 4,000 to A, 0 and 0, then 24,000 to A, then 0 and 12,000. Last one, how much is finally left? 36 minus 51,600. How much is it left? 11,600. Right? This you will divide it in the ratio of 2:1. That will be 4640, 4640, 2, 3, 2, 11. I'll explain this whole step again. Just once look into it because I have only one question, right? I'm explaining this again. Just look into it. This one, any doubt? The sequence in which we pay? No? So now I know I have to pay 30 to this guy. This anyway is the capital. First step that I'm going to be doing is I'll check is there any cash balance. What will I check first? Is there any?
Cash balance.
I checked the cash balance was 10,800, out of which I need to keep the provision of what? 5,400. I'll only get to know towards the end of the year that it's not 5,400, it is what? 4,000. That means I'll have 1,400 extra. That will be in what stage? The last stage of it. So I have 5,400 extra. First, what will you do with that 5,400? You'll pay to the outsider. I paid off. Then I know I still have to pay this guy 24,600. I got now 25,200. That was your installment once a year. Whom will I pay that money? To the B's loan. Now I am supposed to pay 8,400 to B. I got now 60,000. I got now what? In that 60,000, whom will I pay first? To the loan guy. 8,400. If I pay to the loan guy, how much am I left with? Hey, 60,000 minus 8,400. 51,000.
600.
This is the money left, right? Now I have to go to the capital and check who is supposed to be getting. The idea is to make sure all the capital. First I make all the capital balances equal, then I keep paying it across. Now what I did, I went first. I saw their present capital. I checked their profit sharing ratio. So step 1, what I did, I divided this with this. I ended up getting 38, 24, 36. What is the rule I told you? Whoever is the lowest, take that as a base and then multiply with the profit sharing ratio. Multiply with the profit sharing ratio. Now that means how much do you get? 48, 48, 24. You will compare it with what was his original capital towards what the capital should be. So you ended up getting what? 76 minus 48, you got an excess of 28,000 and this guy has got an excess of 12,000. Now I'll do the same exercise only with the remaining partners. Their ratio is what? 2:1. I have to divide now what? Whatever the excess capital is, I will divide it with their ratio. I ended up getting here as what? 14. Here you got? Now which is the lowest? So what I should do? I should multiply both with the lowest. That came to 24 and 12. You have an excess capital of how much? 28. But your capital should be how much?
24.
So how much excess you have? 4,000. Are you clear with this? Now see the way it works. So now everyone is same. So I have 51,000. How much? 100 is it?
600.
Okay, I have 51,600. First 4,000 I'll pay to this guy. Once I pay 4,000, can I say that this is their capital? If I do reverse up, can I say once I pay 4, then the difference is only between A and C, which is 12 and 24 and 12. Now out of 51, if I pay 4, I am left with what? 47. 600. Can I give it to both of them? So let's assume if it was not 47,600, let's say it was only 20,000. 20,000. What I will do, this 20,000 I will divide it in the ratio of 2:1. Are you clear? In the examination, please just understand, because I told you one question, I am covering every concept, right? So since I have excess balance of 47,600, can I pay both of these guys? So I will pay both. Now how much extra I am left with? 36,000 if I am left. I am left with what? 11,000. This means what? I am now in this stage. All are equal part of it. See, this guy had how much excess? 76, right? I have paid him 4, I have paid him 24. That means this extra 28 I have already paid him. Now isn't he on par with the other guy? Correct? No. You had 28 extra, boss. I have given you off. Now we are ordered. I will divide it in the ratio of 2:1. So this will be the division of your 60,000. Are you clear? Done? Now let's come to the last capital. Who's the last guy who's realizing it? 80. How do you divide this 80,000?
Partners.
It will be in the ratio of 2:1. Have I realized all the assets? Now I go to the expenses. Expense was supposed to be how much? How much was the expense?
4,000.
That means how much you saved?
1,400.
So this 1,400 also you will divide it in the ratio of 2:1, because that's the profit formula. Understood? Right? Among these two, one question will pakka come. Don't ever
Loss and
maximum loss or this one. Pakka I am saying. Right? Don't do mistake and finally say, I got confused and all. Please just mechanically understand the steps. One of it, if it comes, it will just change your fortunes for your accounting paper. Are you guys clear with this? Right? So we are done with your entire partnership chapter. Yeah. So what I'll do right now is I'll just run you through the. Give me module on screen. Okay. I'll do the case of partnership rectification. I'll just give you an overview how rectification works. What's a subsidiary company and what's a triple column cash book. I think these are the three things that you were asking, right? Now, what is a subsidiary book? Now, I want you just to understand the logic why it is coming in. When you purchase goods on credit, what's the journal entry? Purchases to Ram. If then it will be purchase to Sita, purchase to Lakshmana, purchase to Hanuman, purchase to Ravana. Everywhere the debit is what? Purchase. Only the credit names are changing, right? Same thing with the credit sale. It will be what? Rama to sale, Lakshman to sale, Sita to sale, Hanuman to sale, Ravana to sale. Like this, sale will come in everywhere. Now, what a subsidiary book does is, it says, boss, why do you want to make journal entries for everything? Rather, you open a purchase book. You open what?
purchase book.
In purchase book, you write a date. Let's say 1/1/2022. You write Rama 10,000. That clearly means that I have purchased goods from Rama. You have no need to prepare any journal entry. You don't have to prepare what? So what will get recorded in the subsidiary book is going to be only the credit transactions. Cash transactions will not come in the subsidiary books. Are you clear? So when you write an entry in purchase book to Rama, it means what? Purchase goods from. In the sales book, if you write Rama, it means what? So that means your journal entry is what? Rama to sales is past. Same thing. Let's go further. Same thing further. Let's say What are the different subsidiary books that we have? Purchase book, purchase returns book, sales book, sales return book. Purchase means bills payable, sales means bills receivable. Then you have journal, then you have cash book, right? So if a journal, if there is a transaction which will not appear in any of these books or this book, then it will come to the journal. Goods purchased on cash. Goods purchased in cash. What's the journal entry for purchases? Purchases to cash. So it will come to the cash book. Goods sold on credit. Sales book. I only now I'm concerned with the books, right? Journal entries, I know, I've told you. Bills drawn on Rama. Bills drawn on Rama, right? It will become bills receivable, right? I accepted a bill. Bills payable. Purchase return, sales return. So all of this will come in. So there is nothing in subsidiary books except this logic. What will come here if things don't come here and here? Can you give me an example?
Purchase by living assets.
So purchase by, okay, okay, still your debit of, okay, depreciation. What's the journal entry for depreciation? Can depreciation come here? Can depreciation come here? Salary to outstanding salary. Outstanding salary to salary. Or salary to outstanding salary. Any outstanding and prepaid. Any transaction which should not have anything connected to this or this will come in the journal. That's all is your subsidiary book chapter. I don't know why you are referring subsidiary. That's all is the chapter. Understood?
Yes, sir.
Right? Now let's come to the cash book. Now cash book typically has single column, double column, triple column. The format is very simple. Any book, let me take single entry, double entry, anything. Only cash receipts will come on the debit side. Payments will come on the credit side. Format is opening balance plus all receipts. Here it will be any payments and the closing balance. Right? Only if it's in the nature of cash, it will come in the book. Now, if I open a cash book along with the discount column, then we call it as double column. On the receipt side, it will always be discount allowed. On the payment side, it will always be discount. Okay. The beauty of this is discount allowed column and discount received column will never be cash ಮತ್ತೆ ಬ್ಯಾಂಕ್ ಆದ್ರೂ ಇರ್ಬೋದು, ಕ್ಯಾಶ್ ಮತ್ತೆ ಡಿಸ್ಕೌಂಟ್ ಆದ್ರೂ ಇರ್ಬೋದು, ಏನಾದ್ರೂ ಇರ್ಬೋದು. Are you clear? So it will be discount allowed and discount received and it will not be tallied. That means it will just be totaled and left as it is. Are you clear? Now triple column, cash, bank, discount, cash, bank, discount. Okay, one of a thumb rule to make sure that you understand it easier. Let's say money withdrawn from bank. Forget all this. Money withdrawn from bank, right? Who's receiving the money? So this is my receipt. This is my. Always try to understand this. Whoever is receiving, add it here. Whoever is paying, it will go here. Money deposited to the bank. Who's receiving it? money deposited into the bank.
Back.
Who's paying?
Cash.
That's all is the contra entry. Just look at this rule and apply if you get confused in the exam. Whoever column you are receiving it, that should go there. Whichever is receiving should be coming on the payment column. Are you clear? This you can expect a 5-mark question either in one of the 3 cash books. Can expect. Done? Now let's come to the rectification of errors. I'll give you a complete summary of how rectification works. I'll share you guys the video of rectification. It's 1 hour video. Just watch that because it's a you might get a good. I think you might get in the final accounts. Bills receivable. Sorry, bills of exchange. I did in class accommodation of bills also. No. Somebody was posting that I did not do. Oh, I did in the second day. Okay. Bills of exchange, BRS, then company accounts, partnership, final accounts. In this, I told you, you have two. One is sole proprietary or NPO. Then you have incomplete record. So in this 3, you can expect 1 question, right? This though you can expect 3 questions. So 4 are done. 5, right? 6. Then you have inventory, depreciation. Then you have rectification. You have cash book. All of this, right? Now this where all of your theory questions come in. And also you can expect 20 marks if it becomes theory. You can expect 10 marks from the others. So like I told you guys, taking the lowest risk. What is my approach going to be for the exam? 20 marks first for theory. This you can't go wrong. This we should expect to get at least how many marks? 15 marks. Then BRS or let's say bills of exchange for my easier purpose. 1 question I should get right, which is what? 10. Partnership and company accounts out of 3, at least I should score 20. I am saying you can score 666 also, I don't care. You score 666 also, you score 1010 also, I don't care. But the target for me from those questions should be to get what? 20. Then final accounts, at least I should be in the position to score 5 marks. So how much am I done with? 50 done. Then all other questions you will answer so that it pushes your score to 60. Done? Right? So sorry for delaying by 3 days than what it was to it. Try to cover whatever best can be done. Try to spend what I would do if I'm having 20 more days for the exam is I'll spend what I'll do, I'll make sure that I have accounting 1 day. Every day I'll spend 2 hours on accounting, going through the chapters as the order that I've made till 15th. That means on an average 1 chapter a day I'll try to finish by spending 2 hours. Next, I'll spend at least 3 hours for making sure that my maths is revised. I'll spend another 3 hours for my law and 2 hours for my eco. This is bare minimum you have to study the last 20 days. If I am you, this is how my schedule would have been. This is, I'm keeping an average thing that, hey, you know what, I can't study so much and all, but 10 hours you need to push. But if I am on your side, how I would have gone with my preparation is like this. I would have woken up at 4, right? It's up to you, you can shift 1 or 2 hours, but this is the time I wake up because it's more lesser distraction. No one is there on the mobile phone or other stuff, lesser distraction for me. By 4, wake up, I'll start from 4:30 to 6:30. I'll do one of my MCQ paper because I'm still in sleep, so subject whichever I'm comfortable with I take it. Then I start again 7:30 to 10:30. This is a time that I'm little fresh, so I'll try to do a subject which scares me the most, law. How do I do law? I will not even care about any of the notes. I'll only look into the past paper questions along with the solutions plus study material, practice questions with the solution. On an average, I'll keep that to do little bit more questions so that I don't fall flat onto it. 1 o'clock done, I'll try to sleep till 3:34. Why? Because as per all the mathematical or let's say your planet movements and other stuff, 1 to 4 is actually a very bad time to study. Whatever you try to study, you are already too tired. It's always better to have some sleep and maybe go for a little walk, freshen up yourself and other thing. Then I'll start again at 4, right? Now since this is the last part of the day, what I'll do, I'll start at 4, go on till 7 for doing accounts 1 chapter. Then I'll take a break, then 7:30 till maybe 9:30, I'll do my economics and I'll sleep off by 10:30ish. Economics, I'll do 1 chapter a day, only MCQs. I won't even, so what I'll do, I'll read the revision notes and then I'll only keep answering MCQs as much as possible. I'll not try to go understand each of the concept and all, that's all done. Now since it is closer to exam, I'll try to look into it only from the examination. This is where if you are trying to say, boss, I don't care, I have to clear in 1 attempt, this is the schedule you need to follow. If you are saying, boss, I need to clear in 1 attempt, I don't care what it is. If you say it's okay, fine, mummy will scold, daddy will scold, I'll write in next attempt, then you can take your next call depending on whatever is comfortable. Are you guys clear? Right? Please do well. I really would wish you guys to clear. It's going to be fun to see you guys progressing. More things in life than sitting in examination and wasting your time. I always keep telling it and I regret for wasting something which I could have done. I could have finished my CA at 22. I purposefully dragged it to 23. I didn't write 2 attempts in between, right? And when I look back, it would have not made any change in life. I thought ye ho jayega, wo ho jayega, that this and all, nothing will change, right? We have all done mistakes, so I don't want you guys to do those mistakes what I've done. So please make sure you can follow it. I'm still saying, first thing to clear your exam is what?
Ultimate goal.
Is the belief that I will. Once you have this, everything else will align. Second thing, never ever doubt you will fail. Only thing I can control is what? My efforts. Neither I can control the question paper nor the evaluator. Only my efforts can be controlled. Efforts will always give you results. It's not just about preparing, it is also got to do with revising. After revising, your presentation matters. If you don't focus on one of this, chances of failure is very, very high. Right? Remember this, if you are underprepared, there are more people who are underprepared than you. So never ever give up or doubt your preparations. Last thing, avoid unnecessary conversations or discussion with your friends regarding your exams, because you are writing your paper, they are writing their paper. If even somebody comes and says this is the paper, you will only look into it to see whether I can pass or not. Don't ever try to freak out, because there will always be some joker who will come and throw you some random question saying that my teacher told which is important. No one will know what is important. Whatever I am saying, that's why I never follow any of the trends, because none of the time it works. Prediction. So, but the group mechanism works. Whenever you try to study in groups topics, right? That mechanism has worked all my life, and that's why I'm preaching that, because what is successful is what we have to follow, right? This attempt it happened, that happened. Oh, yo, this guy was maybe angry with his wife. Oh, yo, maybe she fought with her husband. Boss, I don't care about all of happen. I am a firm believer of it. So they just make sure that you follow it. Can you solve? Shriman, I have solved all the questions which is there in the video. If you go and check in the YouTube bills of exchange by my name, you will end up getting all the videos. If you still don't find it, let me know. I'll solve it and send it to you. Right? So please do well. Like I said, no matter what, June 26th when we come out, for the next 2 months, 45 days, we should never think about what? RCA. It has to be the time that we have to just enjoy ourselves because of all the efforts that we have put in the last 3-4 months or 6 months, right? Don't repeat it. Again and again I'm saying, don't ever repeat it. What is, if you are getting scared at any point of time or other stuff, you guys have my number. You can call me up. I will be happy to help you guys out. But don't ever doubt yourself. Again and again I'm saying, in spite of telling all of it, that will continue to happen. Please don't doubt yourself or your preparations. Right? Thank you guys. Thank you so much. All the best. Do well. Right? Thank you.